It is 9 a.m. on Monday, April 19th. This is Yahoo Finance Live. I'm Julie Hyman, along with Miles Udland and Brian Sozzi. And after a record for the S&P 500 again last week, at the end of the week, we are seeing a little bit of a pullback this morning. The S&P futures pointing to a drop of about a fifth of 1% at the open. Nasdaq futures a steeper decline, and the Dow down just about a tenth of 1%. We'll see how that shakes out as things start to get going in about a half hour's time. Meanwhile, crypto comeback after a rough weekend of selling. Bitcoin, Ethereum, virtually the whole gang of cryptocurrencies trading higher this morning. We're going to break down the action. Regaining its fizz, Coca-Cola says case volume is back to its pre-COVID levels. Next hour, Brian's going to talk to CEO James Quincy. And adding some spice to the COVID era tedium, McCormick CEO Lawrence Kurzius is going to join us to talk about hot products, literally and figuratively. But first, let's get into the action in cryptocurrencies. Indeed, we did see a pullback this weekend, Bitcoin dropping as much as 15% over the weekend after regaining some of those declines. And remember, of course, cryptocurrency is one of the few things that trade all the time, including over the weekend. So we tend to see volatility at times when other things aren't open and can't be volatile. And as usual with crypto, right, guys, there's not usually sort of one catalyst reason. There were a lot of fingers being pointed over the weekend to concerns about regulation in various places. Turkey saying it's not going to allow the use of crypto as a payment. So perhaps that fed into it. But just generally sort of a lot of concern about, where things kind of go from here. But for the crypto believers, a pullback back like this doesn't seem to be a big source of concern, Miles.
Yeah, and I mean, I said it on Twitter half jokingly, but I actually do mean this, that everyone we talk to in crypto, right, they come on and one of the main things they reiterate is that cryptocurrency can be extremely volatile and is not suitable for everybody, so on and so forth. I mean, I take that to be when crypto falls 10% on a Saturday night, do not call me and ask why, because no one's really going to be able to tell you a satisfying answer. So let's just not talk about a 10 or 15% pullback. And I think that's sort of how the space is going to move forward from this. We'll probably be at Bitcoin 70,000 in a couple of weeks, and no one will really care what happened on the weekend after Coinbase went public. Maybe it was, some of the data from Open Insider, which is, a great website, and it tracks insider buys and sells of various stocks. And there was a chart or table they had that showed, Brian Armstrong selling about 291 million shares worth of Coinbase. And the way that that site via SEC filings calculated his stake, it implied that Armstrong sold, 70% of his position in Coinbase, when in fact he sold the equivalent of about 1.5% of his position in Coinbase. So he really didn't sell any of his position at all, right? Effectively. So maybe that played into it. But I think we could all throw out different ideas around why crypto went up, down, why Doge is doing whatever Doge is doing. And, Sozzi, to me, ultimately, it comes back to no one knows, no one cares, and don't ask, because it's just going to end up in a circular, non-productive conversation wherein those who are bullish say they're still bullish, and those who hate crypto are going to come out and say they hate it for all these different reasons.
I would say, Miles, this weekend of activity is a good learning lesson for all those folks that got caught up in the craze last week. They saw Coinbase IPO. They saw potentially paying off their kids' college future over the course of a day. They're out there buying Dogecoin. They're out there buying Coinbase. They're out there trading Bitcoin, have absolutely no clue what they're buying, why they're buying it. They're simply buying it because everybody else is buying it, and those people are telling them to buy it. So this weekend, I think, is a wake-up call that you have to do more work on Bitcoin. You have to drill down into whatever fundamentals are there, in fact, in Bitcoin. You have to also do a lot of work on terms of sentiment. It's not okay to just go to one Bitcoin site and read up what's going on and pull a trigger on a trade. I mean, there's a lot of nuances into this. It's not like investing in a public company. It's just not. There's no corporate financials here. It is what it is. It's sentiment driven, and you can get burned very quickly, and a lot of people likely did.
Come on, Brian Sozzi. Dig into the fundamentals. Come on. Yeah. People are buying it because it keeps going up.
Yes.
That's why people are buying it. And I think you can't, I don't know. How do you even, I don't even know how you would dig into it. It's a psychological phenomenon. I don't know. I think there's Not that I'm not saying people should be putting all their money in this thing, but I don't even know how you would do that.
And that's a problem. And that's a problem for investing in this stuff.
Maybe not. It has.
It's 2021. It's
Quickly.
2021. You could just, yeah, I mean, I don't know. I think that, Sazi, I think the reason that people like it is because, okay, so you read the Bitcoin white paper, right? That's like 9 or 10 pages. So that doesn't really take a whole, it takes, a half hour, maybe 45 minutes to get through that thing. That's most of the fundamental work underlying a lot of what's happening in the space. And I know that people are not going to like hearing that, but the reason that people are attracted to crypto and why it's fun, Saz, is you actually can go read one thing on one site and say, sure, I'll take my chances. And like, if you do that for a stock, you are clearly ignoring thousands of pages worth of fundamental data on, a public company or public debt or something like that, you should be familiarizing yourself with. When it comes to crypto, you can absolutely justify saying, hey, I'll take a flyer. And I think that's why people think it's fun. I think that's what's attracted a lot of people to the space. I don't really see that changing.
Yeah, as long as you're not pouring your life savings into the thing. Now, on the flip side,
everyone says don't do that. So
right, exactly. I think that's hopefully a consensus. So let's get back to something then that Brian Sazi can sink his teeth into and actually has fundamentals because it actually makes stuff, and that's Coca-Cola, which you're looking at right there. Revenue and earnings coming in above estimates. And what really stood out to me, Brian, is what the company said about unit case volume, that it was improving every month this year. And in March, I believe they said it actually got back to the levels where it was in 2019. So that would seem to be good news for Coke.
Yeah, this was an interesting quarter, Julie, here. In one part, you saw a business starting to recover, and Coke clearly highlighted that in a statement. It was just about a year ago when Coke came out on its earnings and said unit case volume was falling double digits. That was at the height of the pandemic. So to see this statement was, I think, an acknowledgement that the business is starting to improve. But you have to question how much improvement there has been. Coke noting that they're still seeing a lot of pressure in their fountain business. Those fountain businesses are in sports venues, they're in restaurant chains, and a lot of those businesses are nowhere near where they were pre-pandemic. But nonetheless, Coke out this morning reiterating their sales guidance for this year, reiterating their earnings growth guidance this year, and a lot of that appears to be hinged on their business continuing to recover from the pandemic. And also, let's keep in mind, Coca-Cola as a company has restructured significantly over the past year during the pandemic. They've cut a lot of costs, and I think that also plays a factor in their outlook too.
Yeah, Saz, speaking of costs, we have had so many talks about input costs, about transportation costs right now because of the kind of bottlenecks that we're seeing at ports and whatnot. And I imagine that's going to be something that you're going to want to ask the CEO about it. I don't know if he said anything, if there was anything in the statement, for example, on that front.
He didn't say anything on that front, Julie, but what did stand out to me and what might be tempering some of this optimism here in the pre-market on this earnings beat and guidance reiteration is that he said the recovery will be asynchronous. So it's not necessarily going to be in a straight line. Some geographies may come back quicker, others may not. And again, just a lot for investors to digest here off Coke earnings this morning.
And a lot for you to ask James Quincy about. He's the CEO of Coca-Cola, and he's going to join Brian coming up in the next hour. So you want to stay tuned for that conversation. But first, we got to get to what's going on in the U.S. economy. It is a relatively benign week on the economic reporting front, but we will get some PMI data coming in the latter half of the week. And as we know, there's a lot of anticipation for strong growth this year. Let's talk to Constance Hunter about that. She is KPMG chief economist. Constance, it's always great to see you. You're looking for growth of at least 6.5% in GDP this year. And, there's an awful lot of ebullience out there when it comes to the forecasts. Do you see any threats at this point to that?
Yes, I do. But before I address those, I just want to say that this is a normal response after a recession, right? We normally have the recession take away GDP, and then we have a period of time where that GDP bounces back. And it's, depending upon the drawdown, a pretty big bounce back because you want to get back to where you were prior to the recession occurring. And then you want to get to where the economy would have been had the recession never occurred, had we just continued chugging along at trend growth. So 6.5 sounds like a huge number, but let's not forget we were down 3.5 last year. So that gets us back a little bit above where we would have been on a trend basis by the beginning of 2021. So just to put that in the overall context. And then I do see some risks. I mean, obviously, the virus is the economy right now. And if we look not just in the US, but around the world, we see the virus really being pernicious as it has been this entire past year plus, and really being very, very virulent. And so, of course, we have these new strains that are more resistant to the vaccines. We have rising cases in pockets of the US. We have rising cases in Europe. You look at South Asia. And when we think about that, that really impacts the ability of the economy to boom because it impacts supply chains just at the very basic level, right? So we look at this shortage of semiconductors and how that's impacting the auto industry. We have massive demand for cars right now, but there are supply constraints. So while it would be great if those supply constraints didn't exist, the fact is the virus is still the arbiter of how fast we're going to grow until we get a handle on it completely.
Constance, Coca-Cola mentioned in its earnings this morning, they see an asynchronous recovery. What economies are you concerned about right now, potentially recovering slower than others?
Yeah, well, the OECD did some great work to figure out the level of output gap. And so you look, India right now is estimated to have the largest in the world, but Brazil is going to have a significant output gap. I look at what's happening in Europe and what's happening with vaccine rollouts. And, I think that Europe's looking at scarring that could last several years because it's just taking so long for their economies to get back online. So really it depends on vaccine rates and how fast we can get this distributed, right? So, and even in Japan, where they opted to have additional trials of the vaccines, they have a very low vaccination rate, right? So it's really, really going to depend on how quickly. I mean, the asynchronous economic recovery is based on the asynchronous vaccine distribution.
Constance, you mentioned that we have that catch up from the GDP loss in 2020, so the 6.5% number this year really just gets us back to trend. But as you look at the trends behind, let's say, the fiscal impulse here in the U.S., are you thinking about the possibility of a faster trend growth on the other side of the pandemic as we get into the teeth of the 2020s?
I am so glad you asked that question. Yes, I am. And I think what's interesting about the pandemic, and if we look back in history at times where we've just had immense shocks to our economy, and what comes to mind, of course, is World War II, which is the last time we had this much of a drag on GDP. These shocks can adversely impact large parts of the economy, but they also shock us into being more productive, right? So just the fact that we are all in our various locations getting on this Chimes call and I'm sorry, Google Hangouts call. I do so many of those. Getting on this video technology and being able to do this live TV program. The pandemic has shocked the diffusion of technology around the economy in a multitude of ways. So even just using the RNA technology to develop the vaccine and streamlining the FDA approval process, we're never going to go back to the old way of doing FDA approvals. And so there are many things in what's happened because of the virus and the shocks that it's caused that I think are going to cause us to have higher productivity for several years after this. And then, of course, the lack of scarring because of the very targeted fiscal stimulus. I mean, we actually have delinquencies down during a major recession. That's unheard of, but it limits the contagion impacts of that recession throughout the economy. It limits the scarring. It allows us to recover more quickly, which it then allows us to have higher potential GDP going forward because it will likely promote more investment, which will then in turn promote more productivity.
Constance, just a quick follow-up on the productivity question. We have had low productivity for so long. What does, in practical terms, what does higher productivity look like?
So from a numbers perspective, we were at about 1.5% for the preceding 15 years or so. We're looking for something more on the order of 2 to 2.25%. And of course, compounded over a decade or so, that's going to make a big difference. And what it looks like is that we are able to grow at a faster rate without igniting inflation, because of course that is the big question, right? You have this big turnaround in growth, you have all this fiscal assistance, you have monetary assistance. Are you going to see inflation that gets out of control? And the thing that helps prevent that is higher productivity. And higher productivity usually is the thing that causes firms to be willing to pay higher wages. And of course, those are higher real wages. And then what we get is, generally speaking, with higher productivity, a better distribution of GDP throughout the economy. It allows a broader swath of people to be able to build wealth and have higher incomes. And then, of course, it tends to improve living standards. So we expect this to have really a broad impact on the economy.
Yeah, and that would obviously be an improvement as well for what we've talked a lot about, the whole so-called K-shaped recovery. Constance, great to see you. Be well. Constance Hunter is KPMG chief economist. When we come back, we'll be getting an update on that Johnson & Johnson vaccine that has seen some health challenges, the latest, when we come back.
All right, welcome back to Yahoo Finance Live on this Monday morning. We continue to see vaccine rollout continue in the U.S. Around the world. The struggles remain. Yahoo Finance's Anjali Kamlani joins us now to discuss a milestone, however, in the U.S.'s fight against COVID-19.
That's right, Miles. We know that over the weekend, the U.S. hit 50% of the adult population getting at least their first dose of the vaccine. Meanwhile, we know those numbers continue to climb as people continue to make appointments. And this week marks a sort of open season, as the Biden administration had said, for all U.S. adults to be eligible for vaccines. We know that that includes the Moderna and Pfizer vaccine, which are already out there and continue to be shipped out. We also know that it was supposed to include the Johnson & Johnson vaccine, which has been on pause for a week now and is going to continue to be so until Friday. And that's an important date because that's when the CDC panel, the advisory panel, is going to meet yet again to discuss the vaccine, as well as understand what the potential risks are and to whom, and will likely be advising. We know that Dr. Anthony Fauci over the weekend did say that he anticipates the lift on that pause on Friday. Health experts have been waiting for it and anticipate as much. This mimics what we saw over in Europe with the AstraZeneca vaccine, some limitations or warnings for certain subgroups of the population. And meanwhile, we know that globally we're continuing to see a rise in cases. That is also here in the U.S. and several states and certain pockets. And so this is going to be a really concerning time. So while we are seeing the good news on the vaccination front, continuing rise in cases is a concern for health experts right now. Back to you guys.
All right, Yahoo Finance's Anjali Kamlani with the latest on the fight against COVID-19. All right, we're off for a short break here on this Monday morning. On the other side, talking more markets. We'll also have the opening bell to get this trading week underway. Futures lower. Back right after this.
You're watching Yahoo Finance Live. We are awaiting the opening bell, and we're looking at futures pointing to a lower open after record territory at the end of last week. And last week, of course, also marked the beginning of earnings season. A lot of big banks reporting their numbers this week. We already heard from Coke this morning, IBM after the close. We'll hear from Netflix and Intel, AT&T and Verizon later this week. Stuart Kaiser is with us now. He's UBS head of equity derivatives research. Stuart, when you look at the action and the reaction to some of the earnings reports last week, is there anything we could sort of extrapolate ahead combined with the what options are pricing in terms of what further earnings reaction we might see?
Yeah, good morning, Julie. I think the big takeaway from last week was frankly just relatively high expectations, both on economic data as well as corporate earnings. So the banks put up very strong earnings results, but other than Wells Fargo, all of them moved a lot less than options would have implied. So I think what that's telling you is people are expecting pretty strong results here, and the stock moves have been relatively small, compared to what options markets I guess we're hoping for. If we look at this week, about half of the stocks that report this week have implied moves that are much larger than the type of moves they've experienced over the last 2 years. And frankly, the last 2 years have been pretty volatile. So that's saying something. So, I think the name of the game right now is fairly high expectations. And, from a risk reward perspective, that's probably a little tricky. But generally speaking, I think it's consistent with the economic growth we've seen, and investors are expecting strong corporate profits.
Stuart, what sectors are investors and traders positioned for big pops or big drops this week on earnings and then looking forward?
Yeah, so the largest moves have been in energy and financials and utilities. Utilities obviously a smaller piece of it, but energy and financials were the spot where the implied moves were the largest. And what we saw last week is financials sort of didn't live up to that billing. The areas of the market that are a little more attractive to own options would be technology and communication services, which frankly is very refreshing because those tend to be the sectors that people like to trade around earnings for. So high expectations, sort of energy financials, lower expectations in more of the tech-focused parts of the market.
So let's talk a little bit about what's happening along the VIX curve. We've seen, spot VIX is now under 20 solidly, and that's a level that we've been watching. But what is that structure telling you about how investors are still thinking about volatility through the rest of this year, and does that have your attention as we get into the second and third quarter here?
Yeah, Miles, the curve is actually quite interesting right now. To your point, the front has come down substantially, and that's simply because realized volatility for the S&P has been so low. When you're realizing less than 10% vol, that's going to pull the VIX lower. The rest of the curve, however, is still relatively elevated. You're kind of in the low to mid 20s. We would estimate those parts of the curve are 1 to 3 points, maybe higher than you would expect. And, I think there's probably two primary reasons for that. One is there's still a fair amount of uncertainty, some related to the vaccine, but also as we get into the second half of the year, will the Fed taper? What will tax and regulatory policy look like? Will we get another bout of kind of a China trade war? So I think there's some premium involved in the curve, really just for those sort of geopolitical risks, and some, frankly, is just scar tissue. So I think if you take a step back, you'd say, in our opinion, the front is a little bit too low right now, but justified by very low realized volatility. And the rest of the curve is telling you that, things are a whole heck of a lot better than they were, but there are still enough moving parts out there that the market has been a little hesitant to kind of bring the rest of the curve down to, quote unquote, normal.
And, Stuart, you, like us, we've been watching closely the whole retail-driven trend that we've seen this year. Now, a lot of the air seems to be coming out of that, whether it's SPACs, some of the IPOs, although some of the meme stocks like GameStop are still roaring along. As you track the options activity, what can you sort of extrapolate about where we are in that cycle?
Yeah, I think you hit it on the head. Retail options activity has definitely calmed down, I would say, since the end of January. And if you look at the retail, cash trading data that we get through UBS, that has also calmed down substantially. So, to your point, there's still activity in some key stocks, but by and large, what I would just call like tactical short-term options trading activity is down, probably by not quite half, but maybe about a third versus what we saw at the end of January. Now, whether that's, positive or negative, I guess it's a little bit hard to know, but I think that's actually one of the reasons that realized volatility for the index at large has also calmed down. There's just a lot less of this sort of short-term risk-taking than we saw earlier in the year, and that's had a broader effect on the entire market, I think.
Yeah, that makes sense. We're set up for the opening bell in just a bit here, but I wanted to ask you finally about, kind of way away from the meme stocks. When you're looking at how to position ahead of earnings, I know you have a couple of recommended plays on some big established names, Apple and Activision. I'm talking about in particular. You're looking at May call spreads. So why are you pinpointing those two in particular, and why do call spreads make sense going into earnings?
Sure. So, the reason that we're interested in those stocks is frankly because our analysts have very positive views on the fundamentals. And then if you look at how options are pricing things, the implied moves on those earnings weren't as large as they have been in the past. And then in addition to that, we felt like the level of volatility was low enough where you could really get the type of payout and exposure that you wanted. So, for those stocks in particular and in general, we like to look for stocks where our analysts have, a strong fundamental view and where the options market is also giving you an opportunity. And those two would definitely fall in that category. There's also some stocks in the industrial sector where our data science and big data team, see strong revenue momentum in the industrial space. So we're also discussing some stuff in that area of the market as well.
Yeah, that could kind of feed into the reopening trade that we've talked so much about. Stuart, great to see you as always. UBS Head of Equity Derivatives Research, Stuart Kaiser. All right, now that we are opened up, let's take a look in more detail into what is going on here. We've got all three major averages indeed opening lower. Our Jared Blickery has the details on the opening action for us. Jared.
Yeah, it looks like tech is kind of a weak spot. We are coming off record highs in the S&P 500 and the Dow, so take that with a grain of salt, but a little bit of weakness here to begin. So let's look at the charts on the Wi-Fi Interactive. Nasdaq is a standout here, down about 0.5%. So is the Russell 2000. So small caps also under a bit of pressure. Taking a look inside the Nasdaq 100, we see the mega caps largely under pressure, except for Alphabet, which is slightly green there. One of the standouts is Tesla. Kind of a rough weekend, had that crash over the weekend, apparently due to somebody not driving, could be autopilot, but nevertheless, Tesla is down 2.5%. And then checking on the sector action, we do have energy as a leading sector. That's up 0.33%, followed by materials, financials, communication services, and staples, which just turned red. But I do want to take a look at the Dow because one famous consumer staple would be Coca-Cola. That's up 0.33%. After beating on a number of key metrics. We were talking about those volumes returning to pre-pandemic levels and also organic revenue, knocking it out of the park, up 6%. Pretty impressive there. Do want to check out the travel sector, see how the reopening trade is going, and a little bit in the red, a little bit of pressure here. Royal Caribbean, American Airlines, and United Caribbean, all of those are down about 1%, and just kind of in line with the leading sector today. Energy, we're going to take a look at that as well. And here we see a lot of green. ExxonMobil and Chevron are each up over 0.5%. Total and British Petroleum up even more. Guys?
Jared, let's talk about the coins. I mean, we had a whole, 50, 55 hours or so of uninterrupted coin-only trading as the stock market was closed. Things a little bit calmer this morning, but we were solidly above 63, 64,000 on Bitcoin. And today we're talking about a bounce to the high 50s.
Yeah, this is pretty bad technical and action, at least in the short term. And let's check out the chart. So you see a lot of green, but we're coming off some pretty depressed levels. So let's go to a trailing week in Bitcoin. And this was that breakout. This is a record high right here, sank back down to this support level. But as soon as it cracked over the weekend, and we do see Bitcoin trading quite volatile a lot of weekends, it was off to the races, but down to the downside. So let's take a look at a longer term chart. This is the one that I've been annotating for several weeks now. We did get this pennant formation, so there was the potential for a huge windup. The markets coil like this, you expect them to break out, and it did, but then it came back down, and it's looking like a false breakout, at least for the time being. So probably have to do a little bit more consolidation and maybe hit some lower prices, retest the 50,000 level. We'll know it when we see it, but for now it's looking like a negative price reaction. Sell the news event to Coinbase, perhaps.
All right, we will keep an eye on and see what kind of moves we continue to see there. Jared, thank you so much, our Jared Blickery. All right, we're going to take a quick break. When we come back, we will continue to track these markets. Stay tuned.
All right, welcome back to Yahoo Finance. On this Monday morning, stocks are lower, but one name on the move higher is GameStop. That stock is up more than 8% in early trading on this Monday morning. And we got a couple pieces of news crossing the tape. The most notable today, news that GameStop CEO George Sherman would step down at the end of July, and really bringing what's been an ongoing overhaul of the C-suite over there at GameStop with Ryan Cohen and the activists that have been involved in that name, really brings it to completion. So, Julie, when we get to August, which is pretty much the 1-year anniversary of when Reddit really started getting excited about what Keith Gill was doing, and we'll get to him in just a second. Stock was, I think about $4 a share, August 2020. Right now, trading in the mid hundreds, and it's going to be a completely different company, perhaps really coming around to delivering on the promise that those deep value folks saw in GameStop. So I think the promise was, again, maybe like $50 a share, but hey, 3 times that, good for them.
I mean, it's going to be a completely different company in terms of who's sitting in the driver's seat, but will it actually be a completely different company in terms of end market demand, in terms of its relationship with customers? I mean, we happen to have an avid gamer on the production team here who says, that's really one of the cruxes of the issue with GameStop, is that it's not necessarily a store that you want to go into, right? It's a sort of reluctant relationship. And even though they are shuffling the management there, unless they can maybe fix that problem, the actual value, which is of course still debatable, in this company, is not necessarily going to be realized. So I think that's really what's at stake here. And all of the hopes invested in this. I mean, eventually they're going to have to deliver, right? Or are they? I don't know. It would seem in a logical world that they would be forced to deliver at some point, but we're not necessarily living in a logical world.
Yeah, what bothers me here, among many things, with this news is that they're using a third party to find a new CEO, which tells you that GameStop doesn't have the talent inside the company, perhaps at any level, for someone to step up here and at least get a shot. So much so, because it really reflects all the turnover and all the change at the company over the past 5 years, then they have to go outside the company. That's problem one, because any new CEO is going to have to work with these top 50 executives at the company. Number two, you are probably concerned about what executive is going to come to GameStop. It's unlikely GameStop warrants a retired retail CEO. It's likely an up-and-coming person in retail will get this position, which suggests they will be somewhat inexperienced for this position. But again, perhaps, maybe this is what Ryan Cohen wants, to mold a CEO while he's essentially pulling the strings. And in effect, he's the CEO in addition to the chairman.
Well, I was going to say, Sazi, I mean, Ryan Cohen, has had his own career co-founding Chewy, among other ventures. He will be the chairman. He's nominated. He's up for nomination to be the chairman of the board. One wonders why he is not the CEO, though, of course, this third party they hired could ultimately say that he is the person they think is best for the job. And, as a member of the board, we'll see kind of how that goes. Another one for you, Sazi. This is a Sazi special. Someone who's currently maybe looking for another opportunity. Katrina Lake could step in as the next CEO of GameStop. No longer CEO over at Stitch Fix. Got that news last week.
I'll push back.
She's still on the board, though.
Katrina Lake, yes, she's going to be the executive chairman. I'll toss another curveball to you, Miles. Someone who is looking for a new job, Jill Soltau. She was just given the axe over at JCPenney. I think she had a lot of good ideas. JCPenney is a sinking, dying ship, so she could have put a lot of those new ideas to work. There's a lot of cash over there at GameStop, and she is still seen as a forward-thinking retail executive. Hopefully they give her a ring.
Look, want to go ex-JCPenney folks? Ron Johnson, throw him in there. Come on, bring him back.
That was the thought I had too, Miles. Why not? Let's just say a bunch of old retail names.
Exactly. And just one name, you talk about cash. One name that we did mention earlier, I do want to bring up Keith Gill, Roaring Kitty, everyone's favorite congressional witness from 2021. News over the weekend, according to his screenshot and verified by some other outlets. He exercised all his outstanding options on GameStop. So he is now the owner, the beneficial owner, as they would say in the business, of 200,000 shares worth about $30 million. He's also got a couple $1 million in cash in his portfolio. So
maybe he should be CEO.
All in GameStop. Been in I was going to say maybe Keith Gill could be the CEO, but Sazi, I think he's He's made too much money on this thing to incentivize him to come take on the pain of having to actually run the business. All he was really right on the stock and has done better than he ever could have imagined. So why would he want to actually get a job to do this? That's way too much work. Way too much. Maybe you
go work in the store.
Maybe you, Brian Sazzi. You'll probably take the job for less than $30 million. So we'll see.
I have no comment on that.
See if Ryan Cohen comes calling for that. All right. Off for a short break here on this Monday morning. A lot more coming up on Yahoo Finance Live, including a conversation with the CEO of McCormick coming up right after this break.
McCormick is looking to keep its bottom line spicy this year as people venture outside their homes after getting their COVID-19 vaccine. That may mean a few less home-cooked meals, but perhaps a whole lot of Frank's hot sauce used on a taco truck taco. McCormick's chairman, president, CEO Lawrence Kurzius joins us now. Lawrence, good to see you again. Listen, last time we talked was at the height of the pandemic in the middle of last year. Are you still seeing people cook at their home at the rate that they were versus last year?
Hi, Brian. It's great to be with you again. And you're right. When we last spoke, it was at the peak of the pandemic. Demand from consumers has really been strong through the entire pandemic and really still is. There's a long-term trend towards cooking at home, especially among younger consumers. There was all the cooking shows and so on, and that was really strengthened and accelerated by the pandemic. Millions of households learned how to cook their family recipes because they had to, but they also found out that cooking was fun and an enjoyable event for the family. That healthy meals were were cooked. When you cook from scratch, you can cook more fresh and healthy. And I think that consumers have really enjoyed it. We've gotten trial of our products with millions of new households. And our survey data says that consumers intend to continue to cook, not because they have to, but because they want to. A full 65% of households in the US, for example, say they're going to cook as much or more after the pandemic than they are even today, because it's been a good experience. And your listeners are going to know that that they've outfitted their own kitchens. They've bought appliances like Instapots and air fryers, and they want to continue to use them. And so we have good reason to believe that this trend that was in place before the pandemic was only accelerated by the pandemic, and current demand bears it out. We are still dealing with extraordinary high levels of consumer demand.
Mm-hmm. And Lawrence, I'm seeing that a little bit when I go to the supermarket. I am seeing some spices being out of stock. A lot of the basics, some of the cooler stuff that I would want to experiment with. Is there a spice shortage right now?
Well, I wouldn't say there's a spice shortage, but in order to meet the just incredible demand that we have experienced here in the U.S. in particular, we had to suspend hundreds of items to make sure that our most popular core items were in stock, and we've had to allocate product to the market, literally ration our customers' purchases as we went through the pandemic to make sure that all of our customers were treated fairly. Now, Brian, we've talked about this on our earnings call, so I know you all have heard this and your listeners have, but we've added an enormous amount of production capacity here in the U.S. in particular. As we went through the second half of last year and into the beginning of this year, we hired over 1,400 additional people, mostly in our supply chain, and we've added roughly the equivalent of an entire new factory by changing shift patterns and bringing human resources to bear on it. And so today we're finally catching up there. So those out of stocks that you mentioned are pretty quickly getting filled. You should versus our kind of the worst of the allocation time. We've restored about 50% of the out of stock items on the shelf and are rapidly closing in on the remaining 50%. And all of the items that we had on suspension have now been restored. That we no longer have any items that are on suspension. So you should see that shelf position situation really accelerating. All those out of stocks filling up.
Hey, Lawrence, it's Julie here. What's sort of the one thing or the couple of things that you have had the toughest time keeping on the shelves, both because there is such high demand for those particular products and or because they're the hardest to get a hold of and get processed?
Yeah, it hasn't really been a problem of getting, we've been able to get raw materials pretty well. So that hasn't been the issue. It's just been the sheer level of demand. So the hardest things to keep up with have frankly been some of our most popular items. Old Bay seasoning. Oh my gosh, the demand for Old Bay has just been extraordinary, and we've been hard pressed to keep up with it. And even now, it's one of those items that we are still struggling with to keep in stock. The demand is just so high for favorites like that.
Lawrence, also thinking about the spice part of the portfolio, you guys finished the Cholula acquisition back in the fall. I think about, what the Frank's brand was when I was a little kid. It seemed new and novel. Now it pretty much, I think, what's the tagline? That goes on anything. So
right.
where are consumer trends, I guess, with respect to the heat that they want to add to their food? And how have you seen that move through the portfolio? Is it an area you might want to be, more acquisitive as you look forward?
It is, so consumer demand for flavor, not just in the U.S. but around the world, just seems to be ever increasing. People want more interesting, exciting flavors, and hot and spicy flavors are part of that trend. And the demand for and interest in hot and spicy foods across almost everything that we do has really been strong, both before the pandemic. It's a long-term trend, and through it, and we believe this is going to continue. Frank's still continues to deliver tremendous growth, and we've had a lot of innovation in the Frank's brand. Cholula is another fast-growing hot sauce that appeals to a younger demographic, has a different usage occasion than Frank. It's really the leader in Mexican-style hot sauces and goes great with any kind of Mexican or Tex-Mex or other Latin type of foods. and is a great complement to the Frank's brand, because many of there's a pretty good overlap of users, but the usage occasions are different. And like Frank's, it skews young, so we think that we've got a demographic tailwind working for us. It's a great example of one of the things that we said we wanted to do, by the way, as we went through the pandemic. Our first priority was the health and safety of our employees. The second was keeping our brands and our customers' brands in supply. But the third was emerging stronger. And I think this is a great example of a move that we undertook to make sure we came out of it stronger. It was a chance to add a great new brand to our portfolio and pay for it with financing that we were able to put in place at record low interest rates. So really, it's a real win for us.
I think you've inspired our very own Miles Udland to use his Instapot for the first time. McCormick's Chairman, President, CEO Lawrence Kurzius, always good to see you. Stay safe. All right, coming up, Peloton is in some hot water over the safety of its $4,000 treadmill. More on that straight ahead.
We're watching a couple of movers this morning for unfortunate reasons, both of them having to do with health hazards. The first of them is Peloton, because there are some warnings now being issued about its treadmill product, that it can be dangerous for children. We previously knew that it had resulted in the death of a child. And now Peloton is coming out and sort of responding to this. Brian Sozzi, you wrote about this. And it just seems, obviously, it's unfortunate all around, and I don't know what it means for the future of this product.
Yeah, so Julie, really, this started to take on a life of its own over the weekend. On Saturday, the U.S. Consumer Product Safety Commission, the CPSC, tweeted a video, really a disturbing video of a young child getting pulled underneath a Peloton treadmill. The young child, he was holding a pink ball, and he put the ball under the treadmill and he got pulled under. He appeared to be okay. He pulled himself out from under the treadmill, and then he left, and then that was the video was done. But the CPSC has said consumers should stop using these treadmills. So they effectively put a warning out on the safety of this treadmill. Now, Peloton is out. They had a response immediately after that, calling what the CPSC said. It's a confusing situation, as you can see. They said it was inaccurate. And then you had Peloton CEO and founder John Foley come out yesterday with a statement saying they didn't want to share some information with the agency due to privacy concerns. The bottom line here is that you're seeing Peloton shares down about 5% in the pre-market. The stocks in the market right now, the stock has been under pressure since Peloton disclosed in mid-March a child had died as a result of some undisclosed incident with the treadmill. But I think this puts pressure on Peloton to figure this out, obviously, and clearly they haven't. And then secondarily, start to disclosing to investors what component of the business is in fact treadmills. This treadmill was launched. They launched treadmills about 3 years ago. It's still unclear to investors how much in treadmill sales they do. They do not disclose this. But again, this is not what you want to see because it could have a halo effect over the brand and impact potentially new hardware sales of treadmills, maybe bikes, but also current people using these products. Perhaps they become less engaged with the platform, and that will come with a bottom line impact as well. But again, a very unfortunate situation here.
Yeah, and you know, I just don't like to see executive teams getting into wars of words with U.S. regulators over disagreements on how regulators' inquiry into a certain incident with a piece of their equipment went down. I just don't think that that's really productive for the company. Again, the stock down 5%. I mean, the stock price really in the public consciousness doesn't really matter when it comes to Peloton. The reason people love Peloton is because they buy it, they use it a lot, they get excited about it. Continuing to keep this story going in this kind of fashion is going to have Peloton making news outside of the financial media. Because again, management team, stocks down 5%, no big deal. But to be doing this back and forth and to maybe be drawing more attention to this ongoing story is just I don't know. It's not my favorite way to be handling this. Just fix the problem, right? Just stop having this kind of exchange out in public. But this is the tactic they've chosen. We'll see where it goes.
And the other story that we're watching this morning that has to do with some unfortunate news has to do with Tesla and a crash in Texas that killed 2 men. Now, the early reports, and this hasn't been confirmed yet, the early reports makes it sound as though these men were using the autopilot feature on the Tesla. 1 man was in the passenger seat, 1 was in the rear seat. Now, as we've known, has been widely reported, autopilot ain't really autopilot. You still need to be behind the wheel of the vehicle. So to your point, Miles, on company response, like take the name autopilot off the thing. I'm not clear on why Tesla hasn't done this already. This is not fully autonomous driving, and it shouldn't be portrayed as fully autonomous driving because this doesn't appear to be the first time that we've seen this. And there have also been some sort of stunt videos with people not sitting in the driver's seat or pretending to sleep or maybe really sleeping, I don't know, when they're driving their Teslas.
Yeah, I mean, branding matters, right? And I know that, to your point, Julie, people who follow this story very closely are well aware that Tesla's autopilot feature is not full autopilot, but not everyone is going to get that message. Look, I think when it comes to Tesla, everyone's probably made up their mind on what the company is doing, what's good, what's bad, what's indifferent. Stock is, we can talk about the crypto story today. Maybe that's part of this decline. Maybe it is this story with the autopilot feature. But, there's words matter, and there's a lot in this name, as you mentioned, Julie. It is called autopilot, even though the company has said, and I think many users are aware that it is not full, self-driving car. Not everyone's going to know that because, auto is right there in the name.
And a sidebar to this unfortunate incident too, guys. According to news reports, it took over 30,000 gallons of water to put out these flames, which raises the question: should there be new types of protocols to put out electric car fires? Are there even protocols? Because if we're moving to an electric future, clearly there has to be some form of strict protocols in place, whether it's a new product or I'm not so sure what it is, but clearly something needs to be put in place here.
Yeah, really good point, Saz. We're going to take a quick break. When we come back, we'll be digging more into the action in markets. Right now, we're seeing modest declines across the board.
All right, just after 10 o'clock on this Monday, April 19th, I'm Miles Upland, joined as always by Julie Hyman and Brian Sazzi. Welcome back to Yahoo Finance Live. Let's take a look at the stock market as we get today's trading underway, the week's trading underway. We see all three majors under a little bit of pressure. Nasdaq and the Dow both off about 0.4%. Will crypto come back after a tough weekend of selling Bitcoin, Ethereum, and a bunch of the other major cryptos in rally mode today? We see Ripple also on our screen. All of those majors up more than 3% after we saw that weekend sell-off following last week's kind of crescendo, a coronation of sorts for the crypto space with Coinbase coming public. And we were looking at Coinbase shares a little bit earlier on in today's trading. They were off just a couple of percentage points. Well, Coca-Cola beating big in the first quarter. The company saying demand is back to pre-pandemic levels. Brian Sazzi is going to speak to Coca-Cola CEO James Quincy a little bit later on this hour. But we begin the 10 a.m. hour as we do here on Yahoo Finance Live, discussing the morning brief. And Brian Sazzi, Sam Rowe comes back from vacation and immediately attacks you, talking about corporate taxes, likely not spelling doom for the bull run, going through a lot of the thought that Wall Street strategists have right now. And what I thought was interesting, at least in the work that Sam was citing, Sazzi, is that strategists think this kind of risk either is or will be priced into the market before we actually get the passage of any tax legislation.
I can take the hits, Miles. I can take the hits. But yes, listen, there are tons of good points in the morning brief newsletter, as always. But and this is something we talked about last week a bit too. If the economy is coming roaring back, you'll see a good top line momentum. You're seeing corporate profits starting to come back. And I think the reason why you're seeing stocks continue to touch at record highs is because maybe the market is realizing corporate America, one, could handle higher tax rates, and then two, maybe the tax rates, the Biden administration has proposed 28%. Maybe that gets pushed down to 25%. He has sounded like someone who is willing to negotiate just a bit, Julie. But again, I would say, over time, higher taxes are not necessarily good for stocks.
I mean, I don't think there's any maybe about it. It's not going to be 28%. There's just no scenario in which that is a realistic scenario and can get through. So is it 25%? Is it 24%? Who knows? I mean, if you look at the numbers that are cited in the morning brief for what effect this could have, Bank of America, just to give one example, their base case is S&P 500 rising 32% this year to 185. That comes down to 162, I think, if I'm reading this right, as a result of taxes, but still represents pretty robust growth. It's funny, of course, as you say, Miles, that Sam Rowe comes out attacking Brian Sazzi and his stance on taxes. I feel seen, of course. I feel validated because I've come out on the other side of this. But indeed, it makes the most sense to raise taxes at a time of robust growth because it's when companies can most readily navigate it. And as we have seen, GDP estimates keep going up, earnings estimates keep going up. So those numbers that the street is looking for will likely go higher, taxes notwithstanding.
Well, and I think, Julie, it really brings, and that's a great point. It brings together a lot of the, fiscal and monetary policy conversation we've had, which is, do you want to run policy, to use it in wonky terms, pro-cyclically or counter-cyclically, right? So do you try to create the conditions? Do you try to, accentuate how the cycle is behaving, or do you try to counteract it with, whatever policy actions you want to take? And I think in a situation where the economy is growing, the government is spending more money to keep that growth going, the logical follow-on would be, this is the time at which we raise taxes, on corporations, on the highest earners, and then in the next downturn, you have the space to counteract the downturn by cutting some of those tax burdens on individuals or on corporations. In a time like this where the economy is growing, do you want to raise wages now, as there is obviously huge demand for labor out there? I think that's going to be a major story as we get into the summer. And so these are all the questions that I think at a higher level are being asked and answered in their way by official policy. And I would say that, right now there's a lot more pro-cyclicality, I think, on the growth side of the equation as we look towards, what some policy goals are. But we can kind of table that for another side. And looking out just quickly, a couple names that we have on the radar for this week as earnings season continues to ramp up. Of course, Netflix, they're out with their earnings after the bell on Tuesday. And I think that'll be an interesting check, on the state of the consumer here, Sazi, and thinking about how much juice, people have as we get through, we get out of the house, right? You don't only have to watch Netflix now, and how much pricing pressure are they able to take?
Yeah, and I think that's a theme throughout this whole week with these earnings. Does Netflix see a slowdown in business quarter over quarter because more people have been vaccinated? Now they're venturing outside. Does IBM, when they report earnings, are they starting to see a pickup in enterprise computing spending because corporates are starting to feel more confident? Chipotle earnings at the end of the week. Does Chipotle are they starting to see a recovery in the interiors, in sit-down dining parts of their business as more people are vaccinated and they can go back outside? Julie, a lot of questions unanswered right now. I'm sure we'll get those answers very soon, but Netflix on tap first.
Yeah, I mean, and with Netflix, it seems as though the analyst community broadly thinks that the folks who signed up for Netflix during the pandemic, that those are going to be sticky subscribers, right? That those people are not necessarily going to drop off. But to your point, competition has been increasing steadily. We're going to talk to one of the authors of a Deloitte study coming up who talks about the decisions that people are making right now when it comes to their streaming services, and that they are partly, if not mostly, driven by cost. So we'll see where Netflix fits into that scenario. But then there's also the balance sheet side of the equation for Netflix. It seems to be in a much healthier position than it has been maybe ever, in terms of its cash position, in terms of it saying it doesn't need to raise outside financing. So we'll get an update on that as well. And I think for investors, that's also going to be really important.
Yeah, and it's an interesting stock story there. We just had the chart of the last year. Over last year, stock hasn't done quite as much as maybe you would think. Been kind of range bound along with a lot of the other banks over the last couple of quarters. Sazi, quickly, another name reporting this week, Intel, one of your bugaboos right now, the chip shortage, certainly going to get quite a bit of commentary from the company on that.
Yeah, I would almost say, Miles and Julie, perhaps this is earnings day is almost a non-event. And keep in mind, we just heard from Intel's new CEO, Pat Gelsinger, a couple of weeks ago. I do think analysts are very focused on the cost side of the equation. Keep in mind, Intel said they're going to spend $20 billion to build out their chip manufacturing capabilities. Now that Gelsinger has been in the job for a couple of months, and I think the analyst community wants to hear, well, if they're investing that much in the business, what does it mean for the bottom line? And then secondarily, if it is going to have an impact on the bottom line, is he looking at areas to cut costs?
Sazi, he's the official CEO now, right? Because it was they had like an investor presentation where he was introed as incoming, and then he just took over the whole presentation. So he's officially installed in the seat.
He's the man in charge.
All right. Looking forward to hearing from Pat Gelsinger later on this week when Intel reports their latest results. All right. As we see, U.S. stocks under a bit of pressure to start the week's trading. Let's take a look overseas. Yahoo Finance's Latoya Harding joins us now with an update on European markets.
Well, it's been a fairly quiet session in Europe today, with stocks edging into the green initially after opening and then retreating as the session continued. Now, the FTSE is slightly down on the day, but it's still managing to stay above the 7,000 point mark, which it hit for the first time in over a year on Friday. The DAX is also lower too. However, the French CAC is pushing higher today as the country works towards reopening to foreign travellers who have been vaccinated or who can show evidence of a negative COVID test. Now, President Emmanuel Macron said on Sunday that France is working to progressively lift the restrictions at the beginning of May, and it's building a European certificate as well to facilitate the travels. And across Europe, we've had COVID vaccinations again beginning to pick up pace after a slower start at the beginning of the year. And retail and travel stocks are some of those that are leading the gains across Europe today, with online grocery business Ocado being the top runner of the FTSE 100 today, and supermarket chain Sainsbury's amongst the leaders. Now, the more domestic-facing FTSE 250 is also outperforming the FTSE 100 today, and it reached record levels again just after the opening bell due to the sunny weather and again over the weekend, giving people a chance to go to these retail shops and hospitality business as well. So the UK receiving a slight boost there. And there was reports over the weekend as well that London bookings for pubs and restaurants and hospitality venues climbed 220% compared to the weekend of the 4th and 5th of July last year. And that's when the hospitality sector reopened for the first time after our first lockdown in the UK, and bookings for the rest of the country also rose 105%.
Now, Latoya, in addition to the market action, the story that I see the most chatter about from my friends across the pond is what's happening in European soccer and the formation of the new Super League that I guess will be a breakaway from the Premier League and the other top leagues. What's kind of the story there, and what has the reaction been? And there is political reaction in terms of some of the major football franchises forming a new organization with some major financial backing.
Yeah, so it was a shock announcement on Sunday about this breakaway European Super League, as you mentioned. So 6 clubs in the English Premier League will be joining that league. And we've also had clubs in Spain and Italy also. So that will actually form a rival to the UEFA Champions League. And also it is being criticised, basically, for just being about money, basically. It's going to be financed by Wall Street Bank, JP Morgan, and the founding clubs will receive 3.5 billion euros to support the infrastructure of the plans and also to offset, of course, the impact of the coronavirus. Football or soccer sector over here, of course, and across Europe has been affected by the pandemic, and clubs have been hit with their revenues with disrupted fixtures and, of course, not being able to have large spectators come to watch the matches. So we've had a lot of critics today arguing that this new Super League is basically destroying domestic leagues and it goes against the integrity of the sport. So far there's been threats as well that the clubs that are in this new European Super League will be banned from domestic and international competitions such as the Premier League and the Championships League. But with that said, we've seen stocks today, like with Juventus and Manchester United, 2 of the clubs which are in this European Super League, soaring basically on the back of the news. So it'll be interesting to see exactly how that unfolds for the rest of the week.
All right, so you take your premier brands, you put them in 3 different leagues, put it on 3 different, networks or whatever, do the digital rights. I understand it. I get the whole, slice up the brand as many ways as you can. Okay, Latoya Harding with the latest on everything happening in Europe on this Monday morning. All right, off for a short break here on Yahoo Finance Live. On the other side, Andy Serwer will join us to talk about the future of legal weed here in the U.S. Back with that conversation coming up right after this.
reminded you, it is April 19th, which means tomorrow is 420, dude. This is traditionally the day that marijuana activists mark as a day of activism. There's a lot less activism perhaps that is necessary now because weed has been legalized in a lot more places. Andy Serwer wrote about that in his weekend column, and our editor-in-chief is joining us now. Andy, so you wrote about not just the wave of legalization that we've seen, but all the different ways in the market now to play it.
Yeah, that's right. And it's an interesting, wild and woolly environment, of course, Julie. And, you know, weed stocks had their moment 2 years ago with Canopy, Tilray, and Aurora. We remember that. Then they crashed. They were wildly unprofitable, still not profitable. They've come back a bit. And that's the Canadian LPs. They're called the Canadian Licensed Producers. That's one group of companies. There's another group of companies called MSOs, which are multi-state operators here in the United States. They can't list on exchanges in the US, and they can't really bank here either. So they have to do things through Canada and then list on the pink sheets here. So that's sort of a bifurcated market, and people have, you know, different opinions on which group is a better way to play. Over time, it'll probably work out, but right now it's, you know, got its ups and downs.
Well, and Andy, in here we've got you know, a Wrigley Air doing a SPAC to get involved in the weed place. I mean, it's still, from my vantage point, looking at, you know, very vanilla, plain, good old fashioned U.S. listed equities, it still feels like the Wild West in terms of how someone would want to invest in this space and how trustworthy and how believable a lot of this stuff is.
Yeah, I think so. Just to take a step back, Miles, we don't have national legalization of marijuana. It's gone on a state-by-state basis. A lot of activity, as Julie mentioned, we've got about 18 states have legalized. We may even get as many as 4 more this year. But the real key is to get some sort of federal legislation. And no one is suggesting you're going to get federal legalized marijuana anytime soon. It's not going to happen this year, even with President Biden, who, by the way, is not for legalization of marijuana, even with a Democrat in the White House, even with the Democrats in control of the House and the Senate. What you will probably get, and this is to your point, Miles, is a banking act. There's a bill proposed called the Safe Banking Act, and that would essentially allow these companies in the United States to begin to bank legally. At that point, the thinking is that these companies could begin to list on the US exchanges, particularly, of course, the NYSE and the Nasdaq. And once that happens, we're off to the races. But the problem is what you saw in Canada was so much money floods into the space that these companies just, you know, start to do ridiculous things and become unprofitable businesses. And that's not great for investors, highly speculative. And you've got everyone and their brother involved in this business with the SPACs and with the crazy celebrities. Of course, Snoop's involved maybe, and of course, Willie Nelson's involved, and all manner of people. So you got to watch yourself, and that's why, you know, maybe an ETF here and holding it for a long period of time might make sense. But if you're a trader and you like to play these stocks, they're a lot of fun. Just it's got to be your kind of fun money.
Yes, if you're not putting your fun money in crypto, maybe you could put it in the marijuana stocks. As you say, it's going to be a big milestone if indeed some of these stocks can be listed here. We will see. It's going to be a big question if the American producers will have learned the lessons of that rocky Canadian rollout in terms of both the stock action and actually the actual rollout there as well, where there were some issues there as well. Thanks so much, Andy. Appreciate it. Tomorrow, we're going to be talking more about this in our Business of Cannabis special. That is going to be from 12 to 1 tomorrow. We're going to hear from the CEOs of Canopy Growth and Trulieve, as well as you see there, the executive chairman of Curaleaf. Should be an interesting conversation and conversations. We'll be right back.
Coca-Cola reported much better than expected sales and profits this morning as people continued to consume a high level of food at home during the pandemic. But perhaps more important for Coke's investors, the beverage giant signaled it has seen a major improvement in its business so far this spring. Joining us now is Coca-Cola Chairman and CEO James Quincey. James, always good to see you here. So in the earnings release, calling out a pretty big improvement in March business, saying that volumes have returned to pre-pandemic levels in 2019. Is this the start of a durable recovery for Coke, or are you still also dealing with some easy comparisons here?
I mean, actually, in terms of comparisons, we're about to head into the very easy ones in April, May, June, especially when you compare to 2020, which is obviously the pandemic, which is why we like the comparison to 2019, which is kind of the pre-pandemic level. So, March, we got our volumes back to the March 2019, which is pre-pandemic.
I think we were having some audio problems. We'll get James Quincey, Coca-Cola CEO, right back after this. All right, welcome back to Yahoo Finance Live, and Coca-Cola Chairman and CEO James Quincey is standing by still for us. So James, you were talking about the recovery in the business. Do you think this is the start of a durable recovery in Coca-Cola's business this spring?
First, I think it's a great rebuilding of the momentum. Getting back to pre-pandemic levels of volume in March is a testament to the work on the marketing, the innovation, working with our bottlers to execute, and what the organization's really been able to do. And so it is really good momentum. However, as we look into the downhill of the rest of the year, we've got this uncertainty factor, which has certainly weighed on the away from home business as much as we've adapted and found new ways to push the business forward, which is the degree of lockdown. So obviously linked to the degree of cases, and this week hit a global high in terms of number of new cases. And so we are taking a balanced view of, we've got good momentum, we've got a lot of things going right for the business, and yet we need to weigh in a factor of the degree of lockdown in the rest of the year, because as the US emerges, as China emerges, as the UK emerges, you've got other countries going back into lockdown on rising cases. And so we're taking a cautious view to what that's going to net out with, but we're certainly pleased with the fundamentals underlying the business.
And you called in the earnings release, James, this is an asynchronous recovery. Is the North America business volume, is it growing again?
North America is bouncing back and certainly, is coming through in March. But and what you see in North America is what we've been seeing in some of the other economies that are opening up, whether it be China or Australia or even the UK, which is as the vaccination rates or the case number drops and the lockdowns reopen, you see a surge into kind of eating and drinking, particularly in the evenings. Then the next wave is kind of people returning to work or to education and start commuting again, and that brings back the daytime, the lunchtime element. And then you see a last phase of the kind of the big gatherings, whether that's sports or amusement or anything on that front. So we're starting to see that happen in the US. It's really, March was more about phase one of that reopening. We expect to see it move quickly as vaccination rates are high and there's a lot of money being injected into the economy through the stimulus. And so we're starting to see that thing happening. And I'm confident that in a way the US will be a momentum in that direction. And obviously from a global business that makes 75%, more than 75% outside the US, we need to weigh in the directions of travel of other important economies.
As part of the recovery, have you started to see signs of recovery in your key fountain soda business?
Yeah, so I mean, the fountain business in the US is clearly completely linked to the away from home, and so that has suffered very much during the lockdowns and the work from home and very negative numbers all through the last 3 quarters of last year, and even negative for the quarter this year, but actually bouncing back in March. But what you see is very much the first phase of those 3 phases of reopening that I talked about, which is a big bounce back in fountain, in the kind of bars and cafes, more the nighttime orientation. And while some improvement in kind of the getting out and about, work, educational, commuting ecosystem and the large gatherings, still negative numbers in those sort of sub-channels for fountain. So we're starting to see the comeback, but there's more to go, which gives us great belief that the US business will continue to do well into Q2 and beyond into the rest of the year.
James, I'm sitting here holding a new Coca-Cola Zero Sugar product. How big is this business for you now? It's you recently launched it in addition to coffee, but what's been the response?
Response, Coke Zero is doing really well. Actually, Coke Zero was growing even in 2020 despite the pandemic. It's had a good start to the year this year with the new formula. It's certainly engaging more consumers, bringing more people to the franchise of Coke Zero Sugar. But ultimately, it's still actually a small part of the total Coke trademark volume. And so we think there's great runway for Coke Zero Sugar to continue to grow for many more years to come. And Coke with coffee, we've recently kind of launched it in the US. Some good initial trial. People love to try new flavors from brand Coca-Cola. Hopefully that'll build in something that repeats and has got some longevity. But at minimum, it's giving some freshness and some interest to the Coca-Cola trademark and is engaging with consumers.
You also recently launched Topo Chico Hard Seltzer overseas. Now that's coming to the US. What's been the early response to that?
So early responses in Latin America and Europe are good. Obviously, the different degrees of success, partly due to whether the category existed in some of those countries or not. And of course, we're learning how to compete and how the business works in this category. And so we're generating some good learnings. It's been in the US for a couple of weeks, particularly in the southern states and particularly Texas, where Topo Chico's are very strong, and it's selling well. 2 weeks data, but a very strong start in Texas. So of course, what we're really focused on is how to get more national and how to drive repeat rates. That'll be the key. Can we drive repeat rates? But a very encouraging initial start.
And late last year, James, you I would say you made a bold move, really, to cut close to 200 SKUs, products that just weren't selling. What percentage of your business this year will be from new products? And are you focused more on innovation now?
Yeah, we took the decision in the pandemic to essentially cull the portfolio of about half the brands. They were only 1 or 2%, but we've been historically better at launching ideas than than being ruthless about taking them out of the portfolio when they're not earning their right in the consumer's mind, in the store or on the truck. And so we took the decision to halve the number of brands and really focus that on, and we're seeing that happen now. And we're bringing back innovation. One of the things that happens in a crisis is you want to stick to your knitting. You want to focus on the most important SKUs and the biggest brands, which was very much a feature of 2020. So innovation is clearly back in 2021. Innovation with new brands, with new flavors and new product offerings and new ways of marketing. So we definitely see the return of innovation as a key business driver as we go through 2021.
James, I do want to switch gears here. You have been public in your response to the Georgia voting issue. You've called the laws wrong. I mean, will you respond quicker from a company perspective should these public issues arise again in the future? And they inevitably will.
Look, I think there's something special about Georgia, and clearly, some people would have preferred I weighed in sooner, some would later. But when it comes to a certain set of issues, the company has a point of view, and we're headquartered, and we drive our business from the state of Georgia, and you can go back to the 50s and 60s and see that we've always pursued a strategy of wanting to make Georgia a great place to do business and wanting to make it a place where everyone can participate in that growth equally, and that's about rights. And so we were looking for Georgia being the best place to do business and also being best in class in terms of voting rights. And over the years, both sides of the aisle have worked well to create it's the best place to do business, and that's what the best place to live, which is where our employees are, and therefore best-in-class voting rights was something we were looking for. And therefore, I don't see my role is to weigh in on every issue, but there are some, particularly about Georgia and the things that are important to be able to drive our business from here and have it be an economic engine in the right environment.
Has the response to this is it changed how you do political donations?
I mean, all of this has happened relatively short term, and certainly political donations were never a big feature of the company. We engage as one of the leading companies in Georgia with the local politicians, both at the state and city level, to continue to make Georgia an economic and thriving state and city where people want to be. I mean, and they've got the same. Ultimately, they've got the same objectives. They want Georgia to succeed too. So when we're focused on Georgia, we're focused on making it a better place.
And James, real quickly before I let you go, you have a very unique position. You're also on the Pfizer board, in addition to seeing the economy through the lens of a Coca-Cola. Are you in the camp that we will see a V-shaped recovery later this year, and does that sustain itself until next year?
I know this time last year we had a number of discussions about an alphabet soup of different shapes of recovery. Very specifically on the US, I think that the rate of vaccination is clearly going to bring a reopening that's going to be relatively rapid in the US, and there's a good deal of stimulus money there. So I think we're going to see a good recovery into the balance of the year in 2021 in the US, and hopefully that'll drive momentum out into 2022 as well. From a global business perspective for Coke, we make the vast majority of our money outside the US. So we're also looking at what do those vaccinations and adaptations look like in other developed and developing countries, and what does that mean for degrees of lockdown and business going forward globally. And I think we're going to see hopefully a steady and hopefully progression through the year, but it's not going to be as quick as the US will be.
Fair enough. Let's leave it there. Coca-Cola Chairman and CEO James Quincey, always good to see you. Stay safe.
Thank you.
Okay, coming up, a new report out of Deloitte reveals one segment of the population isn't watching that much TV. More ahead.
All right, welcome back to Yahoo Finance Live on this Monday morning. Deloitte's 15th Digital Media Trends Survey is out. The results reflect a lot of the changes we are, of course, living in our personal lives. We're living here at Yahoo Finance as we do this broadcast now from our living rooms. Joining us to discuss everything happening in the media and streaming space is Kevin Westcott. He is the U.S. technology, media, and telecom leader over at Deloitte. Kevin, thanks for jumping on this morning. Headline that certainly caught our attention as we talked about this report this morning. 10% of Gen Z respondents say that watching TV at home is their favorite way to pass the time. We're a staff of millennials and up. It caught us by surprise. How are you guys thinking through, the results that we got back from those youngest consumers?
Well, this was the first time ever we've seen this kind of a trend. It's very interesting. All of us, millennials and older, all grew up watching television and movies as their primary source of entertainment. What the Gen Zs tell us now is that their primary source of entertainment is video games. And that's followed by listening to music and playing on social media and browsing the internet. So a huge change in terms of what the primary activity is. And we'll see how that actually plays out as those Gen Zs age a little bit. But, video games have really broken out during the pandemic as their primary source of entertainment.
Kevin, it's Julie here. The other thing, sort of as a companion to that piece of data about how few of those people are watching TV, is that when people are making streaming decisions, that cost is one of the primary factors, especially as we get this proliferation. So when you take these two pieces of data together, what does that mean for streaming services as they vie for eyeballs?
So over the last, few years, everybody talked about the streaming wars, and streaming wars were all about acquiring customers. And the number one attraction for why would you pick a specific streaming service before the pandemic was always about content. But during the pandemic and up to now, cost has become a major contributor to that. So now it is cost and then content. As I look at how they try to attract consumers, you see many different ways that their business models being put out there. But I think one of the most important things they have to do is think about not just about how do I attract the consumers, but how do I retain them? How do I expose them to new content so that they're not just doing what we call the hit and run, which is joining to watch a hit and then canceling the service. Mm-hmm. And that's one of the biggest challenges today.
And Kevin, as we show that graphic on the screen, that's at least a dozen different services. Certainly, I'm sure folks that you guys are talking to or working with are thinking about the future of putting some of these back together. How far away are we from that point in time when there's a rebundling of the unbundling, and what are the implications maybe of those kinds of things?
Well, I actually prefer to use the word reaggregation because bundling has a little bit of a negative connotation to some people because it was more of a situation where here's what you must buy. I think about reaggregating all these types of platforms, and I expect to see somewhere between half a dozen and maybe a dozen major players who are going to bring together all of these services. Last time we actually did a full count, there were over 300 video on-demand platforms available in the United States. And with the average household only subscribing to 4, you can see that there's definitely an oversupply in some cases of the number of platforms out there. So I do expect to see these things being reaggregated by the largest digital platforms where I can get all the entertainment I want from one or two sources and not have to subscribe to 20 different types of things to get everything I want.
I like that reaggregation branding. Getting back to the video games for a moment, that one surprised me as well, especially the finding that folks in my generation, X that is, 67% of them playing video games, I believe, on a daily basis. Now, how are you defining video games? I guess we should ask as well. Like, is it my crossword on my smartphone? Is it any game on a phone? And were you surprised by some of those numbers too?
I was surprised by the numbers a bit, but yes, we define video gaming as social games, console games, any type of digital gaming. So any of those types of games we consider to be there. What was very interesting is, yes, there was a big uptick in gaming during the pandemic, but it was not a huge increase amongst the older generations. Some of us who maybe in the Xers or boomers grew up playing the early versions of video games, and now they're more accessible. But the thing that I did find most interesting, which is kind of a departure from the past, is people say that video games are actually a very social environment for them. And if you happen to watch, as I do, my children play, they're playing with friends all the time. If they're on a tablet, they're playing with the neighbors across the street. So the games have evolved into becoming a social connectivity for the younger generation. And we see that through the, all of the different types of technologies being used to connect players during games.
Kevin, I have about 30 seconds left. I'm curious, as you look at this survey, if that notion we would have discussed last summer, 10 years of change in 1 year as a result of that pandemic, does that ring true as you look back at what these results spat back at you guys?
Absolutely. We've looked at what we did when we did the survey actually 3 times last year, just because the pandemic was causing so much change and that changed so quickly. What it really did is accelerated a lot of trends we knew were there. And I'll pick on one specifically, which was ad-supported VOD. We believe that ad-supported VOD was going to be introduced in 2020 and over the next few years start to get more and more traction. What happened is ad-supported VOD was introduced in a big way during the pandemic, and we saw usage skyrocket. Over 60% of the population has tried ad-supported VOD, and that obviously was a lot more time in the household, but also cost became a big issue. So ad-supported at a either reduced or a free platform became very popular. So we saw this happen very, very quickly. A lot of different trends that we saw accelerated during the pandemic.
All right, Kevin Westcott is the U.S. tech, media, and telecom leader over at Deloitte. Kevin, really appreciate you jumping on this morning. I know we'll talk soon.
Thank you.
All right, off for a short break here on this Monday morning. Stocks losing a bit of steam. Nasdaq now off more than 1%. As we head to break on the other side, we're going to be talking about making your furniture sustainable as we all remake our homes and think through the implications, getting rid of all that junk. Back with more on that right after this.
Returned discarded merchandise is a big multi-million-dollar problem around the globe, and that's especially when you're talking about heavy stuff like furniture. Our next guest started a company to try to deal with this issue. It's called FloorFound. The founder and CEO, Chris Richter, is joining us now. So Chris, basically you guys have a system where you help retailers, as I understand it, with this returned merchandise. If I buy a couch and I want to send it back, sometimes they don't know what to do with that merchandise.
Yeah, that's it. Exactly. E-commerce returns in terms of impacting pollution is a big issue, as we all know. About 15 million metric tons of carbon emission is created every year by e-commerce returns, and about 4 billion pounds of e-commerce returns flow into landfills. And one of the big offending categories is oversized returns, and that's the category we chose to focus on. About 9.5 million metric tons of furniture flows into landfills every year, which represents about a third of the content of landfills in the US. So we really wanted to target helping retailers wave their magic wands and make that returns problem go away.
You know, Chris, I'm curious about some of the logistics around this, and I guess the opportunity that maybe exists to right-size this. If I go on Wayfair, I can order a couch, and it might just show up through UPS, but they're not exactly equipped. Like the guy driving the truck down the street who shows up every day, he's not exactly equipped to bring a sofa in. So what are like some of those challenges that you're working with, you know, some of these partners, and to try to make this easier, both on the retailer side and the consumer side?
Really difficult, and we really wanted to focus on making it economically efficient for these retailers to be able to recover returns. Unfortunately, many of them are forced to make the decision to put a sofa, a dining table, other types of oversized items into a landfill because it's just not economically efficient to bring it back. Because you're correct, we are talking about having to send a freight truck, having to send a couple of folks out to a house to put a loose sofa into a freight truck. It's not like putting a small item into a UPS or a FedEx label and sending it back. And so the way we've tackled this is really two things. One, and the first important piece was we wanted to build a nationwide network of returns processing centers so that we could bring down the length of haul that each of these returns has to go to somewhere between 25 to 50 miles, because the challenge that many retailers were facing was having to pick up a sofa from a customer in California and bring that sofa all the way back to New York, about a 1,200 mile journey. So we're now reducing that to 25 to 50 miles for these returns round trip. And then as they flow into these warehouses that we're operating through partners for the retailers, the key is to be able to intake them and grade them. What condition are they in when they come back from the consumer? And we're finding about 95% plus of these items are in great sellable condition and able to be resold to consumers who really want to support sustainability.
And I've about 25 seconds left here. You know, is there one change you would like to see furniture makers make to make their products more recyclable friendly?
Sure, I think many brands are now designing for life, and I think investment in the right materials is important. But I think also optimizing for packaging, and we're learning great insights from the returns data about how retailers, how brands can optimize packaging to assure that as more of this dropship e-commerce shipping happens, that items are damaged less frequently and leading to fewer returns. So I think that's an important area to lean into.
Chris, really interesting business. I would like companies to stop shipping these stuff in styrofoam. Chris Richter, FloorFound founder and CEO. Great to get some time with you this morning. Be well. All right, that does it for Miles, Brian, and I for these 2 hours. Keep it right here. Akiko and Zach going to take you through the next 2 hours. Have a great day, everybody.
Welcome to Yahoo Finance Live. I'm Akiko Fujita, along with Zach Guzman. Happy Monday to all of you. We are seeing stocks fall from record levels as tech names weigh on the broader market. Let's take a look at the major indices right now because we are seeing red across the board. The Dow down about 160 points, the Nasdaq down 125, and the S&P 500 down about 20. The attention now shifting to a busy week ahead for earnings with Netflix, Verizon, and Intel among many companies on tap for this week. All states expand the COVID-19 vaccine to all adults, even as Johnson & Johnson's dose remains on pause. We'll have the latest on that investigation into a link to rare blood clots. And we are kicking off our Climate Week, looking at the key challenges facing our environment and Wall Street. Today, we're looking at how the private sector is driving change, a conversation with actor and investor Robert Downey Jr. That's coming up later in the show. Let's start with those big swings that we've seen in Bitcoin, though. The price falling as much as 15% over the weekend. And Zach, a number of headlines that we saw on this front that investors pointing to. One, we saw potentially the concerns around the Treasury Department considering a crackdown on money laundering conducted through digital assets. And then also overnight, some interesting comments from the deputy governor of the PBOC, the central bank over in China, calling Bitcoin an investment alternative. A lot of investors taking note of that, largely because Bitcoin has largely been banned in China. They were one of the biggest buyers prior to that 2017 ban. It feels like there's a shift in tone potentially from what could be a really big market.
And also, I mean, obviously China controls a large chunk beyond the majority of mining activity as well. So there were other reports looking in at blackouts in China's mining regions too, where a lot of those operations are set up as potentially having a trigger effect here. But when you look at kind of the forced liquidations that were in that space too, that's also something that gets even more interesting when we talk about volatility here, because a lot of people will say we got institutions coming in here, big money's coming in here, so that should mean we're more stable. But when you think about even just what happens in the stock market with algorithms through here, forced liquidations and continued volatility kind of builds on itself. And that was kind of the case with DeFi taking off here. It was kind of our first experience since February, the biggest quick sell-off that we've seen since February here. And I wonder how much that played into this too, kind of selling, begetting selling there. But also, Kiko, when we step back and look at this, just in terms of the questions over the weekend, because some people might have looked at it as a potential top here and saying, look, this could be the end of the run we've seen this year. But other people are pushing back on that. Just want to show a full screen of what we have here from Glassnode data looking at net unrealized profit and loss. It's kind of one of those measures we look at in terms of greediness here. And you can look back at prior cycles, back when that, we'll call it NUPL, net unrealized profit and loss measures back here. You can look back at the other cycles there when it spiked. In 2011, we saw the highest there, 0.878, the highest ever recorded levels there when we look at that metric. In 2017, we were at 0.793. Still a long ways to go here, though, where we were at all-time highs. That same reading was just 0.71. So you can look at that and say, look, there's still some money left here. And Glassnode also had other data saying that wallets that had long held Bitcoin were net buyers, or rather just not selling during that 15% drawdown we saw over the weekend. So there's still a lot of things to point to here, I think, Akiko, that would show you there's still room to run. And of course, when you look back at it, we're still, what, at 55, somewhere around that level right now. So no need to panic just yet, I don't think.
Yeah, and Zach, when you talk about some people saying we've seen the top of Bitcoin, of course, we've seen that story, or we've heard that story many times before, only to be proven wrong. And last week, we were talking about Bitcoin hitting that record, topping $64,800. That was largely on the momentum that came through from the listing from Coinbase. And we've seen Coinbase move in tandem with some of the declines we saw over the weekend on Bitcoin. Shares there for Coinbase down in the session as well. Let's move on here. Oh, go ahead.
I just got one more, Akiko, because I want to make a bold call to kick us off here on the week, right? If we're going to start this week off right, we got to have one bold call. I would just say, we talked about it last week as we were watching Dogecoin. That's one of the most popular tickers on the site still, even after we saw it come back a bit, but still holding those gains above 30 cents. This is less than 1 cent to start the year. Keep in mind where we're at. And Coinbase, just to connect the dots, still doesn't have it on the platform. So bold call. I think they revisit that soon, considering how much craze right now there is around Dogecoin.
Oh, we're going to see if we can play that back later in the week, Zach, to see if that call holds. But I mean, talk about investors questioning how speculative the action is. Dogecoin, one of the key ones that they pointed to say, where is the value in that? So we'll be watching that to see if Coinbase brings that into the fold as well. Let's turn our attention now to the very latest on the coronavirus, though. The U.S. is now administering an average 3.2 million vaccinations each day as all states expand eligibility to all adults. There are still concerns about the Johnson & Johnson vaccine, though, and that potential link to rare blood clots. And for that, let's bring in Yahoo Finance's Anjali Kamlani, who is following that story for us. And Anjali, we heard from Dr. Fauci over the weekend potentially hint at when those vaccines for J&J can resume.
That's correct, Akiko. So right now we know that the J&J vaccine remains on hold and has been for about a week now. The CDC Vaccine Advisory Committee is going to be meeting on Friday to discuss this again. This will be the second meeting that they hold to discuss the vaccine and the link between those blood clots. We do know that many experts are expecting that the vaccine will be resumed then, with maybe some alerts to doctors about certain subgroups, specifically females and maybe maybe women. But here's what Dr. Anthony Fauci told ABC this weekend.
Well, by Friday, Martha, we should have an answer as to where we're going with it. I would think that we're not going to go beyond Friday in the extension of this pause. There will very likely be a decision.
So as you can hear, we're all hoping and waiting for that decision on Friday and to see what the recommendation to the CDC director is then. Meanwhile, we also know that while the vaccinations continue, the virus cases continue to climb. We're still seeing an average or about 60,000 cases a day, still some more than 80,000 on some days. And that's really concerning for experts right now because we are still in that race against variants and the vaccines. And that continues to be sort of the focus right now. We do have a milestone, though, and that is that 50% of U.S. adults have at least received their first dose. So that's a really good place to be. Comparisons to countries like Israel, which are at 62%, so that's really positive news. Meanwhile, we do know that it is open season essentially right now. Anyone 16 and older has been directed by the Biden administration to be allowed to get a vaccine. So waiting to see how that plays out. The White House coronavirus response team just said at a briefing now that they don't anticipate that the full adult population being eligible will have any impact on how quickly they can turn around vaccines and ship them out. So we shouldn't see any issues then, of course, waiting for that Johnson & Johnson decision as well to help. Meanwhile, CVS, some good news there. 3 over-the-counter tests are now going to be available. They price range from about $24 to $39, and those are coming from Illumina, Abbott, and LabCorp. So that is finally starting. It's in select stores for right now, but by next month and throughout the year, they're going to be opening up to more. Back to you guys.
Okay, Anjali Kamlani, getting us all caught up with the very latest on all things COVID-19. Let's turn our attention to our first guest for the hour. We've got Dr. Rishi Desai, Osmosis Chief Medical Officer, as well as former CDC Epidemic Intelligence Officer. Doctor, it's good to talk to you today. Let's start with that investigation into Johnson & Johnson, because there are a lot of people who are watching who just aren't feeling comfortable with how safe the vaccine is. Still hasn't resumed, but what specifically do you think medical officers are looking for right now to be able to give that green light and say things can return to vaccinating J&J again?
Well, I mean, what it comes down to is a benefit risk ratio. What is the benefit of giving a green light to J&J? What is the risk? And the risk is not just this vaccine, it's general confidence in vaccines. And so I think what happened over the last week or two with this investigation, it's going to go till Friday, is people see that the CDC and the FDA are taking this seriously, that they're investigating this, they're really looking into these cases, and that they're not just kind of flippantly saying, yeah, let's just continue vaccinating without investigating. I think when you conclude the investigation, what you realize is that the risk of a blood clot with the vaccine is actually lower than the risk without the vaccine. The general risk in the population of blood clots is higher than when you get vaccinated. So if anything, this is actually a good thing, that it lowers the risk of a blood clot. But when people hear about blood clots, they kind of panic and freak out and think, oh my gosh, is getting the vaccine going to cause a blood clot? And the answer is obviously exceedingly, vanishingly rare, on the order of getting struck by lightning. And so if that's what's going to stop you, that vanishingly rare side effect, what I would remind you is that the chance of that is actually higher if you're just walking on the street without a vaccine. So putting all this in context, these are really small chances. And the vaccine's benefit is massive, right? You're preventing COVID-19. COVID-19 causes blood clots. I mean, let's not forget that the actual disease is way worse than this risk of the vaccine.
Yeah, it's important context for everybody out there to remember. The other big thing, though, is now you've got every state, as Anjali was kind of walking through there, eligible for adults there, meeting the deadline that President Biden put in progress. I mean, when you step back and look at everything, it's kind of amazing to think about where we've come in this, right? And how much we didn't know at the beginning of this, and now the advancements for us to be there at this point with all adults now eligible across the U.S. to get the vaccine. I mean, what do you maybe make of the way that the progress got us to this point?
Yeah, it's remarkable. And I mean, 50% of adults having at least one vaccine means that percentage will have roughly 2 vaccines, let's say in a month from now, around Mother's Day, maybe around that time. So that's a pretty amazing thing that we were able to do in the course of roughly a year and a half. Not just that, it was also timed out. Folks were saying, the administrations were saying Q2 of this year is when we'll have this done. Here we are in Q2, and here it's getting done. I mean, how often does that happen? Where if you're told something, it happens on that schedule. That's very rare. And so I think kudos to the folks that got this done, as well as the administration for kind of calling this shot pretty effectively in advance.
And Doctor, if we're talking about timelines and markers being met, another one we're looking for is potentially reaching herd immunity by the end of May, maybe June. Where does that timeline hold right now? And what does that mean for summer activities and how it's likely to look?
It's a great question. And one thing I just want to point out is that it really comes down to your community. So if you live in a community where actually everyone is on board with science and getting vaccinated and that effort is real, then good on you for being in that community and being part of that community. You're going to stand to benefit. If you're part of a community where the science is kind of not trusted, people are not getting vaccinated because they just think, oh, I don't want to do that, someone else can do that, then that average herd immunity kind of threshold is not going to apply to your community. So your community is going to continue to suffer. And so this is not going to be distributed equally. In some areas, you're going to continue to see cases, hospitalizations, and deaths until those spots are kind of essentially getting the vaccine at the same rate. And that might take a while. So this unequal distribution means that some areas are going to open up and enjoy the benefit of having herd immunity, whereas others may not and may see their hospitals continue to overflow.
Yeah, that seems kind of being, that to me would be one of the biggest issues when we talk about the global reopening, right? Some of those restrictions are still in place. And right now, the U.S. is doing a great job, and we can celebrate that here. But around the globe, very different stories playing out. So when you think about the variant risks out there, what we're seeing even play out in Michigan, I mean, you can go local, current states too. So, I mean, how much longer do you think we have to go before we return to kind of that free to travel about the globe as you would expect? I mean, how much longer are all these other countries going to have to play to catch up to us?
Yeah, that is the $1 million question, the question we should all be asking, because, think about it. If you live in a low-income country, what does your vaccine program look like right now? It's non-existent. No one's gotten vaccinated in particular low-income countries. That means in those countries, there's a chance for mutants, there's a chance for strains to kind of escape. And if that happens, then that those strains are going to make their way to the US. And so then all this, kind of patting ourselves on the back we're doing right now is going to feel kind of silly if there's a mutant come in and that protection is just not at the same levels. Now, I will say that the evidence right now is that the vaccine is protective against most mutants, right? So that's good news. Now, is it completely protective? It is at the same high level that we're seeing against the wild type? No, it's lower. And so now we're going to be caught in this kind of in-between state. And to your point, how long will it be until things essentially feel normal? I don't think they're going to feel completely normal for years. And at that point, we're going to be talking about all sorts of new things like, do you need a booster shot and things like that. So I think it's going to be a long while before we really can kind of collectively feel like everything is back to normal. But most things are going to feel a lot better, I think, in a few months.
And it just raises all the questions about the emotional impact, the years to follow, and what's going to happen here. But Dr. Rishi Desai, I appreciate you coming on here to chat the here and now with us, Osmosis Chief Medical Officer. Thanks again for taking the time. We're going to take a spotlight right now, though. I want to shift over to GameStop shares. As you can see, they're up nearly 8% in today's session as the rotation in the C-suite continues. CEO George Sherman will be stepping down in that role effective July 31st or whenever an earlier successor can be named. That follows updates we got from the company, including the ousting of the CFO and Chief Customer Officer, both of those guys resigning at the company as they shift their efforts to the e-commerce side. The boost also comes, though, as we got an update from the biggest cheerleader out there on the street, the trader in Reddit's Wall Street Bets forum that goes by Roaring Kitty, doubling down on his position on Friday, posting a screenshot showing he exercised 500 GameStop call options to net himself 50,000 new shares there and bought 50,000 as well, effectively doubling his stake in the company to 200,000 shares from 100,000 at the beginning of the month, giving a boost here to GameStop in today's session. We're going to take a quick break, but when we return on the show, digging into the broader market action as the S&P 500 and the Dow pull back from recent highs, the probability that one market watcher is assigning to another relapse in terms of our recovery here. We'll break that down on the other side of the break. Stay with us. Welcome back to Yahoo Finance Live. There's, of course, no shortage as of late right now when we look at the market for catalysts and upside surprises here on the earnings front. Also, the fact that half of adults here in the country have at least one vaccine already in their system, but there are risks to the downside, and that might be one of the reasons why analysts might not be so quick to upgrade some of their forecasts. And potentially a relapse could, of course, come depending on what we see happen on the COVID front. And for more on that, in terms of where the market's at right now, I want to bring on our next guest, Candice Bangsund, Fiera Capital Global Asset Allocation Vice President and Portfolio Manager, joins us right now. And Candice, when we look at this, your latest note kind of walks through potential scenarios that you see here. And obviously, the most likely as we continue on this path of what looks like impressive economic data coming in, but you do assign a 15% chance of a relapse. Very difficult to really see how that might come to fruition here on the variance front. So many unknowns, but talk to me about where you see risk reward where we sit right now.
Yeah, well, I mean, 15% of our overall scenarios in a relapse scenario, so 85 in the recovery scenario that is largely unfolding as we speak. The recovery scenarios have been reinforced, obviously, given the developments on the vaccine front, the accelerated pace in rolling out those vaccines. It's allowed investors to look through the near term towards the end of the pandemic. Of course, combined with massive fiscal spending in the US, monetary policy support, extended support from central bankers, likely reinforcing that view. But of course, the risk is the lingering virus. It continues to circulate across the globe. And of course, it will all hinge on the race between, the vaccine and these new variants as we move forward.
The risk of a subdued recovery seems to be really sort of right in the middle there. You've given that a 30% probability, but I wonder how much of that you think has to do with monetary policy as well. We have heard over and over the central bank essentially say this is not the time to take our foot off the pedal. And yet the market has sort of run up against ahead of those expectations with some jitters about potential rate hikes quicker than expected.
Yeah, well, there's a couple things there. On the policy front, I think this has significantly reduced these downside scenarios. The fact that policymakers have pledged their unrelenting support has largely placed a floor under both the economy as well as financial markets and equity markets in general. And one thing that I think the market is underestimating is the Federal Reserve's willingness and desire to allow the economy to run hot in this rapid recovery scenario, which is our base case. This is creating some notable upside for both the economy and stock markets alike. And this is just something that investors have not come to realize, that Fed officials will allow inflation and the economy to run hot without stepping in and reining in that accommodative central bank support.
When it comes to allocations, though, it's interesting if that's going to be the case. How do you see maybe smart investors rebalancing here if the Fed is still going to be supportive and you believe them? How you would be allocating, a smart portfolio right now?
Well, this whole reflationary narrative that I'm talking about, whereby we see stronger growth, higher inflation expectations without the risk of tighter monetary policy, bodes particularly well for the value-oriented corners of the market that underperformed in 2020 versus, say, the growth or the technology trade that was largely the work-from-home pandemic trade that did extremely well through 2020. We expect that rotation that's already begun here into value to gain further ground. And there's more room to run purely from a valuation perspective, where the discount to some of these value stocks is at extreme levels, but also given that reflationary environment of stronger growth, accommodative monetary policy. This is a lucrative combination for some of these more cyclically oriented sectors whose fortunes are tied to the health of the global economy.
Candice Bangsund, Fiera Capital Global Asset Allocation Vice President and Portfolio Manager. It's good to talk to you today. Coming up, we are breaking down the president's infrastructure bill and the biggest beneficiaries. We'll discuss which stocks to play with our guest, who says this is the start of an industrial upcycle. Much more to come here on Yahoo Finance Live. President Biden is set to meet with a bipartisan group of lawmakers today to discuss his $2 trillion infrastructure bill, while Vice President Kamala Harris travels to North Carolina to push for the bill as well. Certainly, we've already seen some cyclical stocks see some big gains on the back of the proposal, but our next guest says there's still much more upside to come. Let's bring in Elizabeth Vermillion. She's CFRA's research analyst. Elizabeth, it's good to talk to you today. Give me a sense of how much of this has already been priced into the market, because you've been looking at specific names that you think could be significant beneficiaries on the back of this proposal, if in fact it passes in its current form.
Hey, yeah, so thanks for having me today. So like you said, there is a lot that we feel really is priced in so far, but that does not mean that there's not more room to grow. So just kind of the general infrastructure spending is what we're seeing as priced in now. And where there's room to grow is going to really come from the more specifics of the plan. So where that green funding is targeted, how much emphasis companies' current sustainability and goals towards zero emission, where they're currently at right now, I think that's going to really play into who's chosen for certain projects. So if a company doesn't have a lot of focus on working towards zero emissions, but they have really great machinery, they might not be chosen for the work on whether it's road building or bridges or things like that. So companies who are already working towards more sustainability, more electrification, we see those names with that extra upside, in addition to just the general benefits to infrastructure and industrial names from a spending plans, from a spending plan.
Yeah, I imagine just by itself, the infrastructure plan would be a big boost to Caterpillar or Deere or some of these other, names we're talking about here. But beyond it, just when you look at kind of the economic data, of course, kind of a strange event here in a pandemic, not necessarily what we would normally see in an economic cycle. But when you go back and kind of look at those recoveries, from a position where companies may have been pulling back to now spending more on things like infrastructure and investment here, what do you see maybe historically and where this kind of expansion cycle might go?
Yeah, so I mean, this definitely is a more unique time. So comparing it to some of those historical up cycles is definitely a little bit different than usual, but names like Deere and Caterpillar, they tend to perform well when the company is in, or when the economy is in an upcycle like this, and specifically when it's an industrial upcycle, so something like focusing on infrastructure. So that's an extra benefit to them. We've seen a lot of particular focus on those two names, as well as some peers like Cummins and other trucking companies, because those companies are really pushing for electrification, working on their sustainability. Deere is a company that has been focusing on their R&D and on smart technology for a long time, and that's a trend that we've really seen getting a lot of focus during the pandemic. People have not been able to be in physical presence for their machines, and so working on the smart technology is something that we've really seen develop as a big trend, and Deere is really leading the way. They have been for years. They have smart tractors where you can access the onboard computer from remotely, and so trends like that we see really taking off in the next few years and allowing these companies to perform above potentially what would have been a normal cyclical upswing, just because of this new technology aspect on top of just a regular cyclical upswing from increased demand and volume.
What about some of those companies that are likely to be beneficiaries on the back of this new push to expand renewable energy? You look at a company like GE, for example, really invested in wind energy. How do you see some of those names performing, especially if this bill goes through?
Yeah, so if this bill goes through, those companies are definitely going to really take off. So some areas that we see, one of the areas of focus in infrastructure is electrification and grid modernization. So you're going to see a lot of construction engineering companies. So names like Jacobs Engineering and Quanta, those companies are going to really take off if this spending bill goes through, and if a lot of the project work is focused on grid modernization, which we really think it will be. So that's something that both Democrats and Republicans are really focused on in their proposals. It's something that is really going to be important for the future of just the economy as well as infrastructure. And so things like that are definitely going to push some of those companies ahead. The companies who are investing in these trends that we've been talking about really are, we think, going to see an outsized growth compared to companies that are having to start those R&D projects and play catch up.
Yeah, it feels like we're looking at a pretty big portfolio or broad portfolio, just given how broad the bill itself or proposal has been so far. Yeah. Elizabeth Vermillion, CFRA research analyst, it's good to talk to you today. Coming up, growing concerns around the health of Russian opposition leader Alexei Navalny. We'll have the very latest on his condition, plus India imposes new lockdowns as the country struggles with COVID-19 outbreaks. Before we go to break, though, special coverage here all week of Planet Earth in Crisis. We are taking a closer look at the issue of climate change. As we head to break, you can see here the changes in emissions in major economies, certainly going to be a big focus with the White House hosting that Climate Leader Summit later this week. We'll be right back. In our worldview today, Russian opposition leader Alexei Navalny has been transferred to a prison hospital amid concerns about his deteriorating health. A report released by doctors showed Navalny in danger of a heart attack or kidney failure following a near 3-week hunger strike. Navalny supporters have accused the Kremlin of hiding information about his condition, announcing large protests planned for later this week to call for independent doctors to get access. Navalny's been jailed since January when he returned to Russia months after he was poisoned with a Russian nerve agent. Over the weekend, National Security Advisor Jake Sullivan warned there will be consequences if Navalny dies in jail. India's capital has imposed a 6-day lockdown as COVID-19 infections continue to surge there. New Delhi reported its highest single-day spike yesterday with more than 24,400 cases reported. Public places, including malls, movie theaters, and restaurants, will all be closed, while public transportation will be limited to 50% capacity. All social, political, and religious gatherings are banned. Case counts have skyrocketed across the country this month, but Delhi's been the hardest hit among major cities, with hospitals struggling to care for patients. And Human Rights Watch says China's actions in Xinjiang could meet criteria for crimes against humanity. Its report Monday called for governments to coordinate investigations into what they call widespread abuses in northwest China. The group specifically cited cases of labor transfers, sexual violence, and enforced disappearances involving Uyghur Muslims. UN experts say China has detained more than 1 million Uyghurs and other ethnic minorities since 2017. But the International Criminal Court has refused to pursue an investigation into alleged crimes because they took place in China, which is not party to the court.
Let's check in on action overseas as UK regulators say they're going to take a second look at that deal for NVIDIA to acquire ARM and that $40 billion takeover deal on the grounds of national security implications. And for more on that, I want to get to Yahoo Finance's Latoya Harding, who has more details on that. Latoya?
Yeah, that's right. The UK government has stepped in on NVIDIA's acquisition of British technology company ARM, and that's due to concerns surrounding security. Now, Digital Secretary Oliver Dowden has issued a public interest intervention notice, and he's confirmed that he's intervening. He's written to the Competition and Markets Authority here in the UK to inform them of his decision, and he instructed them to begin a phase 1 investigation. So the CMA will now prepare a report with advice on competition issues, and it has until midnight, until the end of July 30th of this year to complete and submit its report, which will send back to the Digital Secretary. Now, ARM is a major global player in the semiconductor industry, and its technology is at the heart of most smartphones and devices worldwide, and it licenses to the likes of Apple, Samsung, etc. And as you said, this is the second time that it's been under investigation by the CMA. So in January earlier this year, again, it was under investigation with the deal, and that was amid concerns that it could lead ARM to withdraw and increase its prices or even reduce the quality of its services to some of NVIDIA's competitors. And finally, just this all comes just as today, just looking at markets quickly, it's been a fairly muted session in Europe today, and we've had stocks edging into the green after opening, but then retreating as the session continued. So the FTSE's closed in the red today, just under the 7,000 point mark, which it hit on Friday last week for the first time in over a year. The DAX ended lower too, and the CAC just managing to close higher compared to the other two as the country works towards reopening its borders to foreign travellers who have been vaccinated or who are able to show evidence of a negative COVID test. Now, on the weekend, we heard President Emmanuel Macron just basically saying that France is working to progressively lift these restrictions at the beginning of May, and it's looking to build a European certificate also to facilitate travels, and that all ties in with the vaccine rollout program that's gathering pace across Europe and also in the country itself.
I know a lot of people would be very happy to see that travel greenlit, but Latoya Harding bringing us the latest there with everything across the pond. Appreciate that. We're going to take another quick break here on the show, but when we return, back here at home, we know insurance is complicated. Shopping for insurance is complicated, so we've got a startup here, the Zebra. It's working to solve that problem, now crossing the $1 billion valuation mark in a new round for the Mark Cuban-backed company. We'll chat with the CEO on the other side of the break. The Zebra is now the unicorn. Stay with us. Welcome back. In this week's Startup Spotlight, I am going to be talking about a truth that we all know to be true. That is, insurance can be tricky to navigate. There's no shortage of platforms out there to help you navigate which premiums, which insurance policies might be right for you, and what prices might be best. But one of those platforms, the Zebra, just raised $150 million in a new funding round to hit a valuation north of $1 billion. So the Mark Cuban-backed company, the Zebra, is now also the unicorn. So for more on this mythical Zebra unicorn, we're joined by Zebra's CEO and former Kayak president, Keith Melnick, joins us right now. And Keith, you can call it a Zebra, you can call it a unicorn, but whatever it is, business is booming right now because you guys said your revenues doubled, more than doubled over last year. So talk to me about what's working right now.
We actually call it a zebra corn now. So we figure it's the new mythical animal. What's working really well is when I took the company over 3.5, almost 4 years ago, we really leaned into focusing on the user experience and putting the consumer first. Most of the stuff that was in the market before we really dug into this didn't really focus on that user experience. And users want that. We're positioning ourselves as an insurance advisor to really help consumers find what they're looking for. They need somebody on their side. This is, as you said, it's tough to find insurance.
Keith, you started with auto insurance, but of course you've expanded into more since then. I'm curious what kind of growth you've seen on the homeowners insurance side, largely because there has been so much focus on the home, whether it's from new buyers or those who are looking to potentially reassess their situation, especially during the pandemic.
We've seen good growth there, although it's the law of small numbers in that case. We've seen more than 100% year-over-year growth, but starting from a small base. There's definitely demand there, but people typically look across all of their P&C needs, so across both auto and home. Auto is also a wonderful market. You know, it's a mandatory product. As you mentioned, coming from Kayak, I'm thrilled to have gone from a discretionary market like travel to a mandatory market like auto insurance. So we've just seen great growth across the board.
Yeah, we had the CEO of SelectQuote on last year during their IPO day, another one of those kind of shopping platforms to help people navigate the insurance decision. And that stock's up by about 13%, I think, since they went public. But when you look at competition in the space, what is the Zebra doing to kind of separate itself right now, or maybe avoid what maybe critics might point to as, you know, potential race to the bottom or margin compression when you think about competitors out there?
Well, in this is not a commodity industry. This is not just price comparison. There's this notion of value. So, not every policy is the same. Not every policy, a policy that's going to be right for you is not going to be right for me, for example. So again, I'll go back to what's really important here is all about focus on the individual user. We have so much information and we can do such a good job in terms of personalizing the experience and really helping a consumer find what's right for them. And nobody else is really doing that and not doing it in the comprehensive manner we're doing it. So that's really what differentiates us. That's what creates long-term value with the consumer. And that's really what drives our current growth and is going to drive our future growth.
Keith, we're talking about $1 billion valuation, new unicorn status for the company, but I wonder what you have seen in terms of a pickup on the private funding side. We've talked so much about growth in the public space, but it certainly feels like there's a lot of incentive for startups to remain private, given how much capital swirling around.
I mean, I fully believe that. You know, I got called for SPACs about once or twice a week while I was going through and doing this. And I was lucky enough to be a part of Kayak when we took it public. Being a public company is not a fun thing. And I think it actually sometimes can, as a smaller, growth-oriented, more aggressive company, it can sometimes limit what you're doing. And there's plenty of demand out there for investors looking at good growth companies that are built on a solid foundation, have a good path forward. So we had a lot of demand, and I definitely looked at it and would far prefer to be a private company at this point.
Yeah, I wonder too how much of that decision stemmed from the idea that maybe, you know, some I don't want to call them shadier operations, but if you have the growth like you guys have and you have revenues more than doubling year over year, I mean, it sounds like eventually you probably want to go the public route, traditional IPO route. But I mean, was that mostly why you had turned down SPACs right now, aside from being, you know, the less fun side of being a publicly traded company? But what about the different paths?
No, I mean, we definitely considered it. It was something we looked at. Look, I don't think we're ready to be a public company yet. And I think, you know, I think there's probably quite a few companies that have gone public before they were ready to because of the opportunity with SPACs. I look at things like predictability of revenue, the flexibility in terms of managing, not having to manage quarter to quarter growth. I just looked at it in all of the things that being a public company would bring us, whether it's access to capital, liquidity for investors, liquidity for employees, that all can still be managed as a private company without some of the downside that goes along with being public. As you mentioned, at some point, you know, I try not to get locked into a predetermined output or outcome. You know, I feel like if we just build the best company and execute on our plans, the opportunities will come. And as soon as I get locked into something, we'll start to make bad decisions. I have to keep my eyes open. I know at some point the public markets may be the best opportunity for us, but we're not locked into that.
Keith, I wonder if you can put your former kayak hat back on to take a look at where you think the travel industry or how the travel industry is likely to emerge. It feels like things are looking a little more optimistic. Planes, flights picking up again. You've got more and more people getting vaccinated every day. And yet a lot of these travel names are still digging out of what has been such a significant hole over the last year.
Yeah, I mean, gosh, it feels like there's such a pent up demand for travel. At least I know that in my household, we can't wait to travel again. And I think there's a lot of optimism, but it's going to take some time. They took a huge hit over the last year. Certainly, I watched having a lot of former colleagues and friends that are still in that industry, and it was a tough year. I do think you're going to see a lot of demand and very strong companies that were able to weather the storm and probably were able to clean up their houses a little bit are going to be in great shape. But I don't think it happens overnight. It's going to take a while for them to catch back up.
Keith Melnick, the Zebra CEO and former Kayak president. It's good to talk to you today. We're off for a quick break here, but on the other side, we're taking a look at some big moves for Harley-Davidson. Shares up more than 10%, but the EU hitting the company with significant tariffs. Julie Hyman is going to walk us through that move on the other side of the break. Welcome back to Yahoo Finance Live. We're seeing the Dow off of its record high, down about 132 points right now in this session. One stock seeing steep losses, Lordstown Motors. Let's bring in Julie Hyman to walk us through what's behind that move. Julie, we're talking about two stocks here, Lordstown moving in one direction, but Harley also getting a lift. What's behind the move for Lordstown?
So this is only the latest leg down for Lordstown, right? And it is seeing a pretty steep tumble today. That's after the company said in a Facebook post it didn't finish a race that it had entered its endurance pickup truck. And remember, this is an electric truck maker, or developer, I guess would be a better way to describe it, because it actually isn't selling the trucks as of yet. It was called the SCORE International San Felipe 250 race. It happened over the weekend. Not only didn't win, the truck didn't finish the race. Now, it said it learned some valuable lessons. The company said that its motors, its battery pack, its software performed well, but that it wasn't enough to finish the race. And as I mentioned, this stock has been an underperformer for quite some time now. It was one of the sort of earlier deals in the SPAC wave, initially saw a lot of enthusiasm, but the stock is now down about 50% from the year. It reached this year's high back in February and is down 70% since then. If you recall, this was the target of criticism and a short sell recommendation from Hindenburg Research, which criticized, among other things, the way the company defines so-called pre-orders for its trucks. The Securities and Exchange Commission is looking into it as well. So that's what's been responsible for the decline, not just today, but over the last few months in those Lordstown shares.
Yeah, not winning one thing, but not finishing, entirely different there. But let's flip over to from four wheels to two here, Julie, because we are seeing Harley-Davidson shares popping off of some tariff news. What's going on with the motorcycle giant?
Well, it's not just the tariff news. It's also for Harley, the fact that it came out with earnings that did better. And for Harley, this was really welcome news because Harley has not been performing very well. It's seen waning demand for its vehicles here. And it's interesting because Harley, while a lot of other companies are moving towards electric, and Harley is developing on that front as well, but it's also sort of doubling down on its more traditional heavy body motorcycles that Harley is known for. Earnings per share beat estimates, and significantly, it also came out with a forecast for the full year. Revenue for its motorcycles will be up 30 to 35% this year, mainly due to recovery of demand here in North America. That's an increase to a prior forecast. Now, on the taxes front, on that EU situation, the European Union is going to levy a 56% import tariff on all of Harley's products, no matter where they're made, even if they're made apparently in the EU itself. Harley has said in a separate statement from its earnings today that it is going to challenge that ruling. So we'll see what ends up happening with that. But it looks like the lift today mostly due to that improved forecast.
Julie Hyman bringing us the latest there on all things motor vehicles and motorcycles. Appreciate that. We're going to take another quick break here on the show, but when we return, breaking down the latest action in today's session as we see all three majors in the red. Some stock picks from one stock picker, potentially to see a rebound in the weeks ahead. Stay with us. Welcome in to Yahoo Finance Live as we cross the noon Eastern Time trading hours. I'm Zach Guzman alongside Akiko Fujita as we have all three major indices here in the red in today's session, retreating from those all-time highs set last week, at least when you look at the Dow and the S&P 500. The Dow off more than 130 points right now. As you can see, the Nasdaq leading the way lower. And want to spotlight shares of Apple trading in the green just slightly a day away from their big event. We'll cover everything we're expecting the tech giant to unveil and what it means for the stock. D.A. Davidson Senior Research Analyst Tom Forte will break that down for us a bit later in the show. Plus, Yahoo Finance's special coverage of Planet Earth in Crisis kicking off with activist, actor, and investor Robert Downey Jr. weighing in on everything he's doing to play his part in helping combat climate change. Akiko is going to bring us that interview in just a bit. And two big-name tech companies dealing with serious safety issues today. Peloton defending its products after a government agency warns customers to stop using its treadmill, and Tesla CEO Elon Musk defending the company's autopilot feature after another crash kills two riders in Texas. We'll spotlight what consumers need to know. But first, let's start with today's trading action because tech shares are selling off once again as the yield on the 10-year note pops above 1.6%. For more on all the moves we're watching today, I want to bring on Yahoo Finance's chart master, Jared Blickery, to kick us off in the back hour. Jared?
Yeah, that's right. We're starting off a little bit weak here, and let's check out the Wi-Fi Interactive. We can also see where Europe has settled about 30 minutes ago. In London, the FTSE was down about 0.25%. In Frankfurt, the DAX down about 0.5%, and the CAC 40 in Paris settling up about 15 basis points. But in the U.S., as you said, Zach, we are at or close to session lows with the tech, the biggest laggard here. Also, consumer discretionary looks weak as well. So let's peer inside the Nasdaq 100. We see a mixed picture for the mega cap, but largely under pressure. Apple's up just a tad, but Microsoft and Amazon each down more than 0.5%. Facebook off 1%. And Tesla down 4%. I want to take another look at Tesla here in the EV space. This comes after that crash over the weekend, probably going to be attributed to people using autopilot recklessly. But that was weighing on the stock earlier today. It looks like those losses have extended a bit. And also checking out the travel sector was under pressure on the open. And it looks like we are dropping. The losses are not accelerating, but they're just being added to a bit by bit. United and Delta and American all off more than 1%. And we do have regional bank earnings still trickling in, and we can see some green in the space, although these are mainly the big banks. Morgan Stanley up 2% after dropping on Friday after it announced. And finally, let's get a check on crypto here for a second. I'm just going to call out the price. And Zach, you tell me what you want to know about these tokens that we have. Bitcoin down 0.5% right now over the last 24 hours.
Well, yeah, I mean, that's the one that we've been watching there was Bitcoin's move over the weekend, Jared. But interestingly, and you might know this too, based off of what we've been watching, interesting to see these crypto tickers on our page, including Dogecoin, explode over the last week here in interest, topping, I think, almost all of our tickers except for GameStop and Tesla, two popular ones on our site. But clearly, I mean, relative to what we saw this year, interest still remains high even after that sell-off.
Oh, definitely. And Dogecoin really maintaining its gains here. The joke cryptocurrency is actually looking pretty good from a technical basis, although a lot of these might have come too far too fast. Here's another one. Binance is up another 5%, but still down 20% over the last 7 days. But I want to check out the price action in Bitcoin here. I'm going to scale out to a month long. Worth highlighting that this breakout that we finally got and had been waiting for, looking increasingly like a false breakout. So if that's the case, we got to bounce around and potentially go lower and at least consolidate before we head higher here. So not the best price action in Bitcoin over the weekend, but not a disaster.
All right, Jared Blickery bringing us the latest there. Appreciate that. We'll check back in with you later on in the show. But for more on where we go from here as earnings season rolls on, I want to bring on a one market expert to walk through what he's seeing play out and what he has predicted here for the weeks ahead. For more on that, let's welcome Dan I Fort Pitt Capital Group CFA, Head of Asset Allocation and Equity Research. He joins us now. And Dan, I mean, when we look at this, it's interesting because the banks performed very well when you look at their earnings. Of course, we're rolling on here in earnings season, but where do you put us right now when you pair the recovery, the economic underlying recovery there with what we're seeing on the earnings front?
Yeah, well, thanks for having me. I think we're seeing, the start of another quarter where earnings are just moving much higher than expectations. You mentioned the big banks, which were generally, very, very positive, although a lot of those results were driven by more transactional revenue, loan loss releases, and things like that. I do think the market had some concern about, the loan loss reserve releases being a main driver. But earnings look like they're in really good shape. The economic data has been, very strong, and we think that it's indicative that we're entering the liftoff phase of the economic recovery, where excess savings is starting to be deployed into the real economy. But I would say, from here, a bit more bullish on the overall economy than the broad equity market. A booming economy may not be all good news for equity investors. It could translate into a headwind for stocks if we see significantly higher interest rates and elevated inflation levels that last for a significant period of time, if that forces the Fed to, reverse course from ultra accommodative policies. So we don't think we're at that inflection point yet, but probably closer than we were 3 or 6 months ago.
Dan, we got the big banks last week, to your point, certainly much better than expected. But now we're starting to get into some of the growth names this earnings season. We've got Netflix on tap tomorrow. There seems to be some skepticism around how much of that growth we've seen during the pandemic can likely stick with the growth names, not just in Netflix, but especially the mega cap tech names. What do you see on that front? And are those, some of those names that you would actually put money behind at current valuations?
Yeah, good question. And I think, throughout this, tech sell-off that we've seen recently, or at least technology underperforming value, we've certainly stuck with our technology plays. But I think investors do need to be aware of valuations in a lot of those spaces, and the pretty optimistic assumptions that we're seeing with a lot of these high growth technology stocks, some of which are new to the market. So we think that there's a lot of interesting opportunities in kind of some of the old school technology stocks, that are posting very solid earnings growth, very solid top line growth, but where there aren't the same valuation concerns that there are with some of the high flyers.
Yeah, and when you look at where you have us hitting at the end of the year, I mean, we're talking your expectations here, high single-digit return for full year, sitting at 12.5% right now. So we'll see where we go over the ensuing months. But one of the other names that we don't really talk about too much on this show that you have on your list, Raytheon Technologies. Talk to me about what you expect to see from them for the rest of the year.
So Raytheon, their revenue is pretty evenly split between defense and commercial aerospace. Obviously, it goes without saying that 2020 was more than a challenging year for commercial aerospace. But we're seeing their defense revenue continue to grow at mid-single digits, and already starting to see some improvement on the commercial aerospace side as airlines really ramp up maintenance schedules, given the pickup in air travel. It's definitely going to be a slower process to see demand for new planes and engines, where Raytheon tends to focus. But we think that sets up for more of an elongated and sustainable recovery from Raytheon. And looking out to next year, the stock's really cheap, trading at about 16 times 2022 earnings estimates. That's a big discount to the broader industrial sector, given the run that has taken place there over the last 6 months or so. So we really like Raytheon, not just in 2021, but beyond as well.
Dan I, Fort Pitt Capital Group, Head of Asset Allocation and Equity Research. Thanks so much for joining us today. Another company out with their earnings, Coca-Cola. We're not seeing a significant bump here, but it is up about 0.8%. Some good news and bad news in the quarter for the company. Global unit case volume returned to pre-pandemic levels in March, but quarterly demand remained flat from a year ago compared to the same period last year, with North America and Europe slow to bounce back. Adjusted earnings per share came in at 55 cents a share on revenue of $9 billion. Its coffee business, including its Costa cafes, really hit hard in the quarter, with business down 21%. A lot of those cafes had to close down because of the most recent wave of COVID-19. The company maintained its full year forecast for organic revenue growth. Coming up, we're looking ahead to Apple's event tomorrow and the new upgrades on tap. Tom Forte from D.A. Davidson is going to be joining us on what to expect after the break. Shares of Apple are trading pretty flat in this session today, ahead of that big event for the company tomorrow. The tech giant expected to unveil new iPads and potentially new Macs. Let's bring in D.A. Davidson senior research analyst Tom Forte. Tom, it's always good to talk to you. You've got a $167 price target on the stock. When you look at some of these devices we're anticipating the company to unveil, they have seen big pickup, especially in this work from home move. How much of that do you think is likely to be a big driver in getting to that level you see the stock going?
Yeah, so had we had this conversation a week ago, I would say the primary driver to my price target would be iPhones leveraging a 5G network build out. But when I think about the current state of the pandemic, unfortunately, with challenges locally in Michigan and internationally in Brazil, India, France, Canada, et cetera, I'm now of the belief that this working remotely, learning remotely situation is a multi-year, 2020 to 2023 at the minimum. And with that backdrop, tablets, laptops, I think they can continue to perform at a high level for several years.
And Tom, I mean, we always look at these events for exciting new products to come out, right? It's always a good time for Apple to do that. When you look at that, is there anything we might be expecting them to unveil tomorrow?
So I think the primary expectation is for more tablets, meaning iPads, and laptops or desktops, iMacs, things of that nature. And again, the beauty for Apple of the pandemic is that from a hardware standpoint, you saw very strong sales in essentially their lineup independent of smartphones. And then in the fall of last year, when they had their big product unveiling for their first generation 5G smartphones, you started to see that part of the portfolio contribute. And I think that's why the shares were hitting 52-week highs in December and January. But as far as new product innovation, we're now getting to the point where Apple's including its own processors in more of its devices. So I expect there to be a lot of focus on the benefits to the consumer, faster speed, things of that nature, longer battery life. But I do think, again, given the current state of the pandemic and this notion that we may be spending at least portions of each year for the next couple of years working remotely, learning remotely, I think that does bode well for Apple's whole portfolio of hardware, including tablets.
Yeah, on that front, it feels like that move the push, the gains they've gotten from this work from home has coincided with what has really actually been a upgrade cycle for their iPhones. It feels like everything's lining up for the company. What do you see as the biggest risk when you think about the upside?
It's an excellent question. And in my opinion, the most significant risk to Apple is higher tax rates at the corporate level. So we had a sense when President Biden introduced his legislation for infrastructure and this idea of paying for it by increasing the corporate tax rate to 28% from 21%. And Apple is probably one of the largest corporate taxpayers in the US. So in my mind, that's the biggest risk to shares of Apple. Because if you go back in time when they lowered the corporate tax rate, it gave Apple a lot more free cash flow that he used to buy back stock. So in my mind, that's the biggest risk right now, the potential for higher corporate tax rates.
Yeah, I know you also cover Amazon. It seems like that would be another company that would also stand to have that same headwind in front of them. But is there anything specific to Apple that might set them apart when it comes to that whole battle? I'm sure they're not necessarily going to be able to escape whatever tax bill they have coming their way. But when you look at the relationships between these big tech giants and this administration, I mean, how do you see that kind of back and forth going over the next few months here?
I still think for Amazon, the big risk is unionization. I understand that they had the Alabama vote go in their favor, but if you go back to President Biden when he was campaigning, he said he wanted to be the most union-friendly president ever. So in my opinion, the bigger challenge to Amazon will be in higher wage markets like California and New York when it comes to unionization. I do recognize that there are rumblings that Amazon's not paying its share for taxes, but recall Amazon had many years there where their investment cycle caused them not to make money for an extended period of time, which should enable them to have significant tax credits. So while it's taxation for Apple, it's unionization for Amazon that I think is the biggest risk.
All right, D.A. Davidson, Senior Research Analyst. Tom Forte, appreciate you coming on here to chat with us today. We'll see what happens at that event tomorrow. Thanks again and be well. We're going to take a quick break here on Yahoo Finance Live, but when we return, as we're talking big tech, more concerns over at Tesla. Shares down in today's session following a crash in Texas. We'll break down what we know there and more concerns over its autopilot feature. Tesla CEO Elon Musk defending that today. Stay with us. 2 riders in a Tesla Model S were killed in a crash that occurred about 30 minutes north of Houston, Texas on Saturday. The car caught fire after colliding with a tree at what authorities said was a high rate of speed, and also that neither of the 2 men in the car were driving, suggesting Tesla's autopilot feature may have played a role. And for more on that, I want to bring on Yahoo Finance's Rick Newman. Because Rick, I mean, we've talked about this feature in the past, and Tesla CEO Elon Musk was quick to tweet over the weekend talking about how effective autopilot is in reducing crashes when it's engaged, but obviously more concerns following this accident.
Absolutely. So we don't know for a fact that autopilot, the self-driving feature, was activated, but I think we have to assume that if there was nobody in the driver's seat and the 2 people in the car were in the passenger seat and in the back seat, then what was probably going on was that the owner of that car was showing off how effective autopilot is, except that it drove the car off the road and into a tree. So there have been deaths in accidents involving Teslas and autopilot before in the United States. I think there have been so far as we know, 11 crashes involving 9 fatalities, and there have been 9 crashes involving 7 fatalities overseas. So, and by the way, there are no known fatalities in cars equipped with self-driving systems made by other manufacturers. And there are some other automakers do have self-driving features. General Motors has a system called Super Cruise that is available on some Cadillacs. So these systems are out there in other makes, but they have just not caused any deaths so far, contributed to any deaths. And most other automakers are much more cautious about the way they've rolled out their systems. They have more safeguards in place than Tesla has for autopilot. And they also don't describe their systems as fully self-driving systems as you might think it is if it's called autopilot. It sounds like it drives itself, but it doesn't. And I think Tesla is facing a real regulatory problem here.
Yeah, the semantics of lane assist versus autopilot are pretty clear there. But when you think about how Tesla's rolling this out too, right? I mean, this is an option that, to your point, they're advertising as autopilot. And also we've heard from Elon Musk talking about how the system works, and maybe touting it beyond what the qualifications of the system actually are. But when you think about that as a business implication, a lot of analysts point to autopilot and the revenue coming from that as, you know, reasons to be bullish on the stock. But when you think about where the technology's capabilities are right now, where do you square that as a feature Tesla's selling?
I mean, just to put this in context, Tesla's autopilot system is no better than other systems. In fact, there have been some tests by industry groups that have found that the GM system Super Cruise is actually better than autopilot. Self-driving systems come in 6 levels, 0 through 5. 5 means complete self-driving. The Tesla autopilot system is only level 2. So level 5 is complete self-driving. You can take a nap and the car will safely get you there. And Tesla is only at level 2, and that's where the other most advanced technologies are in this space. And they're promoting the next version of this is going to be called full self-driving, which might move a little bit from level 2 to level 3, but it is not level 5. So, and they have acknowledged this in regulatory filings where you can't use, the marketing brochure, or Elon Musk has to tone down his rhetoric a little bit. So there are some safety experts out there who say Tesla is basically using its own customers as guinea pigs, and that it's actually killing people because it's not telling people the right way to use this. It gives people a false sense of security that the technology is not as good as they think it is. And again, I think the National Transportation Safety Board is looking into dozens of Tesla crashes at this point, and I think Tesla, if they have an image problem, and I think they're going to have a regulatory problem following on that.
And on that front, Rick, we're seeing shares of Tesla coming off of the session lows, but still down more than 3%. Rick Newman, thanks so much for bringing us that story. Coming up, a conversation with Robert Downey Jr., the actor and investor tackling the issue of climate change through his Footprint Coalition. A look at his key investments and how he's looking to narrow the political divide on the issue. Our special segment, Planet Earth in Crisis, is coming up next. In our special coverage, Planet Earth and Crisis this week, we are taking a closer look at the issue of climate change, the environmental challenges, the policies to address them, and then the impact that's likely to have on Wall Street. We've got a long list of business leaders as well as lawmakers lined up for this week, but we're kicking off our coverage today by taking a look at the problem at hand. Brooke DePalma has been examining some of those key hotspots around the world, and she's here with that story. Brooke.
Kiko, human impact has really taken a toll on planet Earth. And like you said, government officials, experts, and also major consumer-facing brands like Dunkin' and Starbucks, whose goal is to eliminate single-use plastic cups, have really looked to help in this crisis. And that's
more than 7.8 billion people populate planet Earth using its natural resources. In recent years, recycling efforts have been made across the globe to reverse human impact. But it might not be enough. In just 1 year, 8 million metric tons of plastic waste ends up in oceans. That's in addition to the 150 million metric tons of plastic that already exist within the ocean. At this rate, the ocean is on track to have more plastic than fish by the year 2050. The Earth's oceans are not the only areas feeling the wrath of human impact. The Amazon rainforest covers 40% of the South American continent and is home to nearly 10% of the world's species and 1.4 billion acres of forest. But human impact has taken a toll. Manufacturing, transportation, and industrial needs have led to rapid deforestation. And while many areas have been hit by climate change and human impact, the Arctic Circle is among the worst. Stretching 5.4 million square miles, this frozen body of water is now free-flowing, with the ice melting at a rate of 13.1% per decade.
Is in fact at a tipping point, and experts warn that the future of the planet is really up to us. While many actions have been taken, there's still a lot more work to be done. Recently, there's become a heightened focus for investors as many flock to environmental, social, and corporate governing investing, rather known as ESG investing. In fact, a study from One Planet Capital predicts that investments within the ESG market will double this year alone, with more than 12% of investors planning to move to ESG-related funds. But the big question now, Akiko, is will that be enough?
It's certainly one of the questions we are tackling this week. Thanks so much for that, Brooke. And we should remind you that you can catch the full story from Brooke on our website at yahoofinance.com. Well, one investor who's looking to chip away at the climate crisis is Robert Downey Jr. The actor, better known for his roles on the big screen, launched the Footprint Coalition 2 years ago to bring innovators, scientists, and content creators all to the table. Now he's launched 2 venture funds to invest in startups building out a low-carbon future. I spoke with the actor about these initiatives and started the conversation by asking him what inspired him to tackle the issue of climate change.
To be honest with you, what I saw more than anything else was a lack of cohesion and connection between all of the different women and men who are going to have to tackle this. And I think from my day job, I know that the best thing you can be on a film set is a connector, helping everyone who's mastering a department figure out how to communicate better, and then also be able to think of, is there a better way to tell the story? So, you know, the coalition, we invest a bunch, we grant, we mobilize people, and just kind of like today, things like this that turn into content where the dialogue is becoming more and more natural for everybody, as opposed to just one little blurb on a subheading of their day's news. I feel like this really should be in the forefront.
Let's talk about the investing arm of the coalition. You've got 2 rolling funds, which brings in accredited investors into the mix. One that's devoted to early stage seed round, the other one that's late stage. Yep. What's the take-up been like so far for you? What kind of interest have you gotten?
Well, I mean, look, again, from my day job, that will get you a certain amount of doors to put your foot in. But I think what I quickly learned, and no big surprise, is you're only as good as your ability to vet and then intuit the people, the teams, the product, the sector, and the time and timing of what the opportunities are. So, it's been a heck of a learning curve, but I jumped in with both feet, and there are many better minds guiding me along. But I think, again, there's so much that I think part of it is to not just get caught up in the shiny objects, but really look at which of these vehicles, if you kick the tires, really, cut the mustard.
So you've got 6 companies that you've backed so far. It's a pretty diverse bunch. A media platform, a toilet paper company, a bank focused on sustainability, among the 6 here. What's the underlying theme behind these investments? I mean, when you look at a company, is it about innovation, or is it about trying to see which company can make the most immediate impact in reducing the carbon output?
Right. Well, I mean, that's a great question, because it really depends on what your POV is on how do we get the job done. So some of it needs to be, let's just talk about energy storage. A lot of people are still stuck up in what I think is the attic of old thinking, and I would include even some of the major EV companies, of how you're going to power those vehicles. So one thing is the business investment. So you want to go, can they scale? Do they have the right team? Is their business model really viable? And then the other is, are you just at the party, or are you bringing something to the snack table that will improve the quality of everyone's experience of trying to deal with that issue? So one of the things is diligence, and then the other is what is our felt sense of, I don't want to just participate. Again, I want to try to be like a good golden retriever, where I bring something from one field and drop it at the feet of other people that I've made a connection with. And I think that's really where the buzz is. Again, is that ability to kind of straddle both the access that we have and then our interest in really trying to build a better mousetrap across the board.
And as you look to the companies that are innovating out there, is there any particular sector that really excites you?
They're all great. That's the other thing, is you say, why are they so diverse? And it's not my entrepreneurial ADD. It really is that you start looking at, they're all part of a picture where one defrays the issues that another creates. And so I think kind of like we all try to make sense of our lives, particularly right now, like, what is my life and what am I doing? And without an expectation of exactly what the future is going to look like, how do I create this little unit of understandings that I feel like, oh, all right, this is starting to make sense. So, but to answer the question, if I had to pick one just for today, I would say ag tech and new foods and cellular agriculture, because it is one of the biggest issues, and as well as needing to lift mankind out of that poverty level, which creates much more of the environmental challenges than I'm sure companies that are looking to profit want to admit, is, there is no excuse for us not being able to feed the hungry.
How are you thinking about the storytelling component of all of this? I've seen a number of content that you have on your site already. Are you thinking about building out content to push these brands further, or is there a bigger project that you see in the works, like a documentary, for example? How big are you thinking on the content side?
Well, the funny thing is, in addition to the Remars keynote speech that I gave a couple of years back, my missus, in her infinite intuitive wisdom, got me interested in a series called The Age of AI. And it really timed out nicely, where I didn't understand the end result of some of these technologies until I saw what it felt like for someone to be able to experience it, what it meant for someone who had ALS to be able to have their family hear them in their old voice. So some of these things sound more humanitarian, but then when you bring it right down into the issues at hand and the crisis we're in, I think everybody has that little anxious buzz going. They know. But I think because it's topical, we tend to get desensitized because we feel like we're being blasted by it or we're being blamed for it or it's a bummer or it seems like the 5 biggest companies in the world are going to take care of it because they've got all the best people anyway. So I think to not be disheartened by something, I need to be engaged with it and I need to feel entertained. So part of what we're going to do moving forward more and more is have longer format media bits. We're starting podcasts and going to do all that sort of stuff. But also, I really want to see the people and I want to see things through their eyes. So once I know somebody, I understand a lot more about why I can appreciate their vision.
You've talked a lot about the need to bring people who aren't part of the climate conversation into the fold. Yeah. So not just the climate activists, but of course, those who have, for example, lost their jobs because of a coal plant closing. Yep. It feels like there's a real divide in this conversation right now. And I wonder why you think climate, which is something that affects everybody, has been so polarizing.
Things get politicized on purpose. There's nothing new under the sun, but I really, really, really deeply suspect that when you appeal to my sensibility, like for instance, if we talk about trucking and that EVs probably can't get you there just based on range. So we're going to have to do some combination of them with, well, what are the likely alternatives? Some of those, hydrogen, those are things that naturally could occur more in the heartland, in those areas that perhaps have suffered the most, while some of these energy, crossovers, it's not in vogue to do it the way you used to do it. But these are still the people who did it best. If you just change the it, I think that makes economic sense, and it kind of lights up a constellation on them, which feels like they're not being overlooked for the hard work and the great service that they provided previously.
And finally, one thing I know you've talked a lot about is how your role, the character Tony Stark, inspired you to act in some way. And I know you get that question a lot, but what was it about that made you think, I can think outside of the box, maybe I need to act a bit more beyond sort of the comfort zone?
Well, I mean, the great thing about Tony was over time, he focused less and less on his tech and more on his character, but he didn't lose any of that expertise. So I had a very odd and unusual education in the fantasy realm, but I was always referencing real-time problems. So I guess more than anything is, you can put your skin in it, you can put your money where your mouth is, but, I applaud you. This is your calling, and this is a large aspect of what you're leading the charge on and trying to do the storytelling and the reporting right now. Some of it is just saying, I'm willing to commit the amount of time it's going to take to do my part, to be part of doing this right. And that's the thing. That's the most precious commodity. How much of your time are you willing to sacrifice for this?
And we are going to keep our climate coverage going. Later this afternoon, we're going to be speaking to 2 members of the Senate's Bipartisan Climate Caucus. Republican Senator Susan Collins and Democratic Senator Jeanne Shaheen will be joining us at 4 p.m. Eastern. And Zach, certainly a lot of attention on this issue, especially with the president hosting that virtual climate leaders summit later this week to coincide with Earth Day.
It's a good time to be having the conversation, almost like we put some thought into it, but an exciting week here at Yahoo Finance. Coming up, Peloton defending its products after a government agency warns customers to stop using the company's treadmill. We'll break that down on the other side of the break. Stay with us. Welcome back to Yahoo Finance Live. I want to spotlight the action we're seeing play out in today's session for Peloton shares under pressure, off by about 10% after a government agency came out with a warning for customers, urging them to stop using the company's treadmill, the Tread Plus product, citing 39 instances of injury and 1 death. Peloton, though, for its part here, is hitting back. The company out with a new press release noting the safety of its products, saying the company is troubled by the Consumer Product Safety Commission, the CPSC's unilateral press release about the Peloton Tread Plus because it is inaccurate and misleading. There is no reason to stop using the Tread Plus as long as all warnings and safety instructions are followed. And for more on that, I want to bring on Brian Heater, TechCrunch. TechCrunch's hardware editor joins us right now. And Brian, when we're looking at this, it's getting a lot of attention because of this death that's resulted here in the case, but Peloton kind of pointing to treadmills and the safety of their products. So, I mean, what do you make of the back and forth that's going on here now?
Yeah, I mean, obviously, you should probably start off by noting that, this is, in fact, a tragedy. A young child died. There have been 38 injuries. One of Peloton's responses to the news that came out over the weekend, and they had also noted this a month ago when the news originally came out, was that these things do happen. There is sort of a certain degree of safety concerns around these sorts of pieces of home fitness equipment. You can search this pretty easily online. Over the years, this kind of thing has certainly happened. Now, obviously, I do believe it's something that they're taking seriously. It's something the Consumer Safety Commission is also taking seriously, and hopefully they can come to some sort of agreement here.
And Brian, what specifically has Peloton said in response to what has played out? And I wonder, when you look at the overall business footprint for the company, how significant it would be to have any kind of recall tied to these events that have played out.
Sure. Hugely significant is, to answer the second part first, this is one of, if not their biggest products. They're still a relatively young company. And then also, not to be too sort of crass about, again, what is very much a tragedy, but big potential economic concerns here. Broadly, just generally from the media coverage around this, but certainly if they do agree to do a recall, that's going to add fuel to that fire.
Brian Heater, TechCrunch hardware editor, it's good to talk to you today. Like you said, certainly a lot of families affected by this. We're going to continue to watch the story. We're taking a quick break here, but on the other side, we've got 2 specials to tell you about. A big one coming up tomorrow with the business of cannabis. Zach's going to walk us through the guest list on that one. That's coming up after the break. Welcome back to Yahoo Finance Live. We've got two specials to tell you about coming up tomorrow. And the first one, 420, no surprise there, Zach. We are talking about the business of cannabis. It seems like this is kind of a critical time to be having that conversation, though, especially given just where the policy has moved and this expectation that increasingly there is a larger market here for the cannabis space, although the federal legislation hasn't necessarily followed yet.
Hasn't followed yet, but we have heard from Senate Majority Leader Chuck Schumer talking about it coming soon. Some people wondering if that means around 420. We'll see what happens. But yeah, to the point, I mean, we've had states legalize here. We've been talking about New Jersey, New Mexico, Virginia, New York. And so obviously this has become a very large business opportunity. Us being a business network, going to be digging into that with the CEOs and the chairman here from Curaleaf on tomorrow's program. But Trulieve, another interesting company that we don't necessarily talk about as much on this show. And Cowen's analyst there who covers some of these cannabis companies, Vivian Azer, is going to be joining us to walk through the different ways that some of these companies are tackling the opportunity ahead of them. With a breakdown of her top picks, and truly one of those that she sees about a 60% upside from here. So we're going to be digging into all those issues tomorrow. 12 to 1, the business of cannabis returns here on Yahoo Finance. But Akiko, we've already heard a little bit about the climate coverage that we're going to be having this week, no doubt, continuing mañana.
Yeah, we've got a long list of guests lined up here. And the reason we're focusing on this issue this week is twofold. We've, of course, got Earth Day coming up, but also the White House hosting this virtual climate leader summit, really trying to position itself back into the conversation after what some would argue has been a 4-year absence of the U.S. leadership on the issue of climate over the last 4 years under President or former President Trump. Coming up, we've got a number of guests coming up today. Members of the Senate's bipartisan climate caucus. We've got Republican Senator Susan Collins joining us, along with Democratic Senator Jeanne Shaheen. That conversation is coming up at 4:30 p.m. Eastern. In the next hour, we'll be speaking with activist Erin Brockovich, who has been very active on the issue of climate justice. She'll be speaking to that. And then tomorrow during our hour, Zach, we're going to be really honing in on the issue of renewable energy. This is certainly becoming increasingly important given that the president has called for this clean electricity standard with the goal of making electricity carbon free by 2035. Questions about how we actually get there, but we'll have executives from First Solar, NuScale, which is a company that's building small nuclear reactors. And we've also got GE on tap. They'll be talking about their wind energy business. So a lot coming up this week, but certainly a lot to dive into on the issue of climate from many angles.
And all of that, too, revolving around the White House meeting you're talking about there, and maybe learning more about their climate plans tied into the infrastructure bill as well. I mean, what's the timeline on what we're expecting to hear from that?
Yeah, we are expecting to get a new target on emissions output for the U.S. coming up on Thursday. It's a 2-day summit, Thursday and Friday, but the president certainly looking to make a splash to show that the U.S. is back in the game on the conversation. That does it for Zach and I in these hours. Much more coming up ahead here on Yahoo Finance Live. Keep it right here.
Welcome to our continuing coverage here on Yahoo Finance Live. I'm Kristen Myers here with my co-host Alexis Christoforous. Let's look at today's top news. We are kicking off Earth Week today. Yahoo Finance will be bringing you special guests all week as we talk about climate change and its impact on the economy and American businesses. We'll be chatting with environmental activist Erin Brockovich shortly about the Biden administration's climate priorities. And some good news in our fight against the coronavirus pandemic. More than half of all adults in the United States have now gotten at least one coronavirus vaccine dose. And Tesla's autopilot technology being questioned yet again after a Tesla with no driver crashed in Texas. Now, the deadly accident killed 2 people. We have seen that stock under pressure today. And Alexis, we are seeing markets right now slipping from those record highs. Of course, right now, cryptocurrencies doing pretty well.
Yeah, I mean, it's a rough start to the week here, Kristen. We've got all 3 major indexes deep in the red. They're near their lowest levels of the session right now. We got the Dow Jones Industrial Average was off about 200 points, now down 195. Nasdaq Composite off 187 points, and the S&P 500 down 0.75%. On a percentage basis, the Nasdaq is the biggest loser, losing more than 1 1/3% right now. Of course, earnings going to dominate the market all week long. After today's closing bell, we're going to hear from IBM. Later in the week, Procter & Gamble. And I know Jared Blickery is going to join us in just a few minutes to break down some of the big earnings reports today, including from Coca-Cola. We've actually got Coca-Cola's CEO going to be joining us a little later to talk about that earnings report and also the outlook for the beverage giant. Want to also take a look at some other companies that are making headlines today. GameStop, one of the most actively traded stocks, rallying after announcing that CEO George Sherman will step down July 31st. The company is actively searching for a new CEO to lead the video game retailer as it pivots to e-commerce. Some investors also taking comfort in the fact that Roaring Kitty, otherwise known as Keith Gill, has moved to double down on his GameStop bet. He decided to forego millions of dollars in quick profit from an options trade there. And while GameStop shares are well below the record highs we saw back in January when they were near $500 a share, the stock is still up about 800% so far this year. We've also got Tesla under pressure today, and that's after 2 men were killed in Texas after a Tesla they were driving in crashed on Saturday. It caught fire. Authorities say this was a 2019 Model S that was going at a high rate of speed. It looks like neither of the men were behind the wheel, and that the car's autopilot function may have been engaged. And of course, there's an ongoing investigation there. And Peloton is in the news today, but for all the wrong reasons. U.S. safety regulators warning owners of the Peloton treadmill to stop using the product immediately if they have children or pets in their home. The Consumer Product Safety Commission says it's aware of 39 incidents, including 1 death involving a child in the Peloton Tread Plus. Peloton actually did confirm that death last month and said at the time that children should stay away from those machines. But Peloton called this warning from the government inaccurate and misleading. But nevertheless, Christian, as you can see, investors getting rid of the stock today, it's down more than 9%.
Absolutely. And we'll definitely be chatting that a little bit later in the show. And you've already hinted at it, Alexis. So let's bring in Yahoo Finance's Jared Blickery to go over more of the market action. And Jared, as we were just talking about, slipping from the record highs right now as we see all 3 major indices in the red. We've got earnings out and cryptocurrencies are absolutely soaring, especially Dogecoin. What are you watching right now?
Well, I'm obviously just fixated on Dogecoin, but I'll give the viewers the benefit of some other analysis here, hopefully get something from it. Coca-Cola earnings in the Dow, that's what I'm looking at right now. Also IBM, which is going to report after the bell, focus kind of on more on the industrial side today, and Staples. Staples, by the way, is in the green. That's where Coca-Cola is. So here's Coca-Cola. Organic revenue just knocked it out of the park, up 6% year over year. Analysts had expected it up to be maybe 0.5%. They beat on both their top and bottom lines. And importantly, for the month of March, they said that volumes had pretty much returned to pre-pandemic levels. So that's a pretty important milestone. That stock's still up about 2/3%. Also checking out IBM. IBM is going to report after the bell. We're going to learn about more about the results from the turnaround strategy by the new CEO, relatively new, Arvind Krishna. You can see that stock is under a bit of pressure today. Not a lot, but over the trailing year, let's check out what it's done. I'd call that some sideways action. Good news is for the company, if they report results that investors like, they can easily break through this trading range and maybe get some momentum to the upside. Also checking in on the travel sector, because we got United after the bell. They might not be announcing until 5 p.m. or so. That's when they did last quarter, but we want to check out them because that stock is up 90% year over year. A key metric there that everybody's going to be focused on, one is revenue passenger miles. The estimate for that is 18.5 billion revenue miles for that metric. And then passenger revenue estimated to be 2.39 billion. Of course, the year-over-year comps are going to look to be disastrous, but everybody on the call is going to be looking for some kind of guidance for the coming quarters, maybe the entire year. And then we got to talk about crypto because, yes, Bitcoin had a nasty weekend. Let's check out the price action. We're going to go to a 7-day chart here. And this is last week. We were making record highs around the Coinbase offering and then just kind of fell off a cliff over the weekend. Now, it looks like we do maybe have some support around 51,000, but anybody who was hoping it was going to 75,000 because of the Coinbase offering, it's going to take a while to get back up there. Guys?
All right. Thanks so much, Jared. We'll see you a little bit later on in the show. I want to continue this market conversation. We're joined now by James Liu, Clearnomics founder and CEO. James, always great to have you here with us. I want to pick up on this point that Jared was mentioning just now about cryptocurrencies. A bit of a two-part question for you here. First, do you think that we've returned to this environment yet again where investors are really looking more at these high growth speculative trades and looking at cryptos? How should investors be approaching them right now, especially as we saw Bitcoin right now under pressure? Dogecoin, however, which was based off of a meme, has absolutely been on a tear lately.
Hey, Kristen, good to chat with you. Well, I am very bullish on all the memes around Bitcoin and Dogecoin for sure. I think it's tough to be an investor in this environment because there are two major things happening. One is that you have all this liquidity in the system and all these technical factors, including around crypto, including around US Treasuries, including around growth stocks and tech stocks that are kind of whipsawing the market one way or another every single week. And so that's kind of happening right in front of our eyes. But the bigger backdrop is that you take a look at the economic data we've gotten just over the last few weeks. These are blockbuster reports. I mean, in some cases, these are the best numbers we might see in our lifetimes because of the bounce back from last year. And you think about what the market is trying to factor in, and it's not just a knee-jerk recovery or mechanical recovery. It's also not just a stimulus going through the system. It seems like markets are basically valuing some sort of huge acceleration or what we might call animal spirits. In the past, we've talked about this as a multiplier effect that would take shape. And so you both have this whipsawing of markets that's happening day to day, but longer term, there are very high expectations built into the market. Now, we think investors, especially everyday investors, should stay invested here, but they should also stay very disciplined, think very carefully about the sectors you want to be in. And if you're going to be in very high volatility asset classes, including crypto, to make sure you size that properly from a risk perspective.
James, you talk about a big, robust economic recovery already being priced into the market. So then what's the wild card for investors? Is it inflation that's going to start to heat up? And do you think that investors have properly sort of priced that into the market at the moment?
Yeah, it's a good question, Alexis. To us, inflation is the symptom and not the cause per se. So really the wild card, as you put it, is will there be not just stimulus that goes through the system, but will that somehow culminate in these animal spirits? And I think that's what investors are always looking for. In other words, the markets starting last April was already expecting this recovery. And so at this point, for this to continue, even with expectations that GDP and earnings will regain their footing by the end of this year, you would have to see that wildcard factor take into effect. And at this point, we think that the economy could increasingly accelerate here, especially as it reopens. Again, these numbers that we're seeing are absolutely amazing, but this is not a reason to kind of take your guard down and not focus on risk management in your portfolio.
James, just looking at this environment right now, where are you seeing opportunities for investors if they want to put some fresh money to work? What sectors, what industries are you liking right now?
And so, Kristen, we still think the rotation trade is relatively early. And there are two parts to that. One is just the rotation from last year from growth in tech. We think that we're still fairly early in that because that's very much tied to the other parts, the epicenter parts of the economy bouncing back. So that's one area. So things like financials, of course, we had blockbuster earnings last week, blowout numbers from some of the financials. We think that'll continue the rest of this year and into next year, as well as energy, materials, industrials, those types of sectors. But then you also look at the inflation trade, and we don't think that's over yet per se. There are going to be hiccups along the way, but we're going to continue to get data and acceleration in the inflation numbers the rest of this year. We don't think it'll be runaway inflation like some fear, but we think that that trade is still here to stay.
And lastly, just want your thoughts on our earnings season, which is really going to be ramping up this week with a number of Fortune 500 companies reporting. We're going to hear from IBM after the close, P&G, Netflix also on tap. What are you looking for from these earnings, and are you rejiggering the portfolio at all as earnings season continues to unfold?
Yeah, earnings season is a critical time just to make sure that the economic growth that we're seeing and we've talked about is filtering into corporate performance and also consumer behavior. And so we are looking for confirmation that that rotation is happening across the sectors that we just talked about. But I think the bigger picture for everyday investors is the question of, will earnings get back to pre-pandemic levels by the end of this year? And right now, projections are that it could exceed it, in fact. So if we were somewhere around $160 for S&P 500 earnings at the beginning of 2020 before the pandemic, right now projections are that we'll get above $170. And so all of that is good news for investors. It's just a question of valuations and how much is already priced in. And it seems like a lot of it already is built in. So it's important to stay balanced in that portfolio.
All right, James Liu, Clearnomics founder and CEO. Always love having you on for some of your insights. And coming up next after the break, we will be hearing from Coca-Cola CEO James Quincy. That's next.
Welcome back to Yahoo Finance Live. Coca-Cola easily beat sales and profit forecasts for the latest quarter, and Yahoo Finance's Brian Sozzi had a chance to catch up with Coke CEO James Quincy to talk about the beverage giant's outlook and the economic recovery.
North America's bouncing back, and certainly, is coming through in March. But and what you see in North America is what we've been seeing in some of the other economies that are opening up, whether it be China or Australia or even the UK, which is as the vaccination rates or the case number drops and the lockdowns reopen, you see a surge into kind of eating and drinking, particularly in the evenings. Then the next wave is kind of people returning to work or to education and start commuting again, and that brings back the daytime, the lunchtime element. And then you see a last phase of the kind of the big gatherings, whether that's sports or amusement or anything on that front. So we're starting to see that happen in the US. It's really, March was more about phase one of that reopening. We expect to see it move quickly as vaccination rates are high and there's a lot of money being injected into the economy through the stimulus. And so we're starting to see that thing happening. And I'm confident that in a way the US will be a momentum in that direction. And obviously from a global business that makes 75%, more than 75% outside the US, we need to weigh in the directions of travel of other important economies.
As part of the recovery, have you started to see signs of recovery in your key fountain soda business?
Yeah, so I mean, the fountain business in the US is clearly completely linked to the away from home, and so that has suffered very much during the lockdowns and the work from home and very negative numbers all through the last 3 quarters of last year, and even negative for the quarter this year, but actually bouncing back in March. But what you see is very much the first phase of those 3 phases of reopening that I talked about, which is a big bounce back in fountain, in the kind of bars and cafes, more the nighttime orientation. And while some improvement in kind of the getting out and about, work, educational, commuting ecosystem and the large gatherings, still negative numbers in those sort of sub-channels for fountain. So we're starting to see the comeback, but there's more to go, which gives us great belief that the US business will continue to do well into Q2 and beyond into the rest of the year.
James, I'm sitting here holding a new Coca-Cola Zero Sugar product. How big is this business for you now? It's you recently launched it in addition to coffee, but what's been the response?
Response, Coke Zero is doing really well. Actually, Coke Zero was growing even in 2020 despite the pandemic. It's had a good start to the year this year with the new formula. It's certainly engaging more consumers, bringing more people to the franchise of Coke Zero Sugar. But ultimately, it's still actually a small part of the total Coke trademark volume. And so we think there's great runway for Coke Zero Sugar to continue to grow for many more years to come. And Coke with coffee, we've recently kind of launched it in the US. Some good initial trial. People love to try new flavors from brand Coca-Cola. Hopefully that'll build in something that repeats and has got some longevity. But at minimum, it's giving some freshness and some interest to the Coca-Cola trademark and is engaging with consumers.
You also recently launched Topo Chico Hard Seltzer overseas. Now that's coming to the US. What's been the early response to that?
So early responses in Latin America and Europe are good. Obviously, the different degrees of success, partly due to whether the category existed in some of those countries or not. And of course, we're learning how to compete and how the business works in this category. And so we're generating some good learnings. It's been in the US for a couple of weeks, particularly in the southern states and particularly Texas, where Topo Chico's are very strong, and it's selling well. 2 weeks data, but a very strong start in Texas. So of course, what we're really focused on is how to get more national and how to drive repeat rates. That'll be the key. Can we drive repeat rates? But a very encouraging initial start.
And late last year, James, you I would say you made a bold move really to cut close to 200 SKUs, products that just weren't selling. What percentage of your business this year will be from new products? And are you focused more on innovation now?
Yeah, we took the decision in the pandemic to essentially cull the portfolio of about half the brands. They were only 1 or 2%, but we've been historically better at launching ideas than being ruthless about taking them out of the portfolio when they're not earning their right in the consumer's mind, in the store or on the truck. And so we took the decision to halve the number of brands and really focus that on, and we're seeing that happen now. And we're bringing back innovation. One of the things that happens in a crisis is you want to stick to your knitting. You want to focus on the most important SKUs and the biggest brands, which was very much a feature of 2020. So innovation is clearly back in 2021. Innovation with new brands, with new flavors and new product offerings and new ways of marketing. So we definitely see the return of innovation as a key business driver as we go through 2021.
James, I do want to switch gears here. You have been public in your response to the Georgia voting issue. You've called the laws wrong. I mean, will you respond quicker from a company perspective should these public issues arise again in the future? And they inevitably will.
Look, I think there's something special about Georgia, and clearly, some people would have preferred I weighed in sooner, some would later. But when it comes to a certain set of issues, the company has a point of view, and we're headquartered, and we drive our business from the state of Georgia, and you can go back to the 50s and 60s and see that we've always pursued a strategy of wanting to make Georgia a great place to do business and wanting to make it a place where everyone can participate in that growth equally, and that's about rights. And so we were looking for Georgia being the best place to do business and also being best in class in terms of voting rights. And over the years, both sides of the aisle have worked well to create it's the best place to do business, and that's what the best place to live, which is where our employees are, and therefore best-in-class voting rights was something we were looking for. And therefore, I don't see my role is to weigh in on every issue, but there are some, particularly about Georgia and the things that are important to be able to drive our business from here and have it be an economic engine in the right environment.
Has the response to this is it changed how you do political donations?
I mean, all of this has happened relatively short term, and certainly political donations were never a big feature of the company. We engage as one of the leading companies in Georgia with the local politicians, both at the state and city level, to continue to make Georgia an economic and thriving state and city where people want to be. I mean, and they've got the same. Ultimately, they've got the same objectives. They want Georgia to succeed too. So when we're focused on Georgia, we're focused on making it a better place.
Of course, that was Coke's CEO, James Quincy. You can check the entire interview out with Brian Sozzi on our site, yahoofinance.com. Don't go anywhere, because coming up next, the latest on when and how J&J's COVID vaccine will be reintroduced in the U.S.
Welcome back. Let's turn now to the coronavirus pandemic. According to the CDC, more than half of all adults in the United States have received at least one coronavirus vaccine. And the United States is likely to resume use of that Johnson & Johnson vaccine, which had been paused. Let's chat about this more now with Dr. Elizabeth Claiborne. She's an adjunct assistant professor of emergency medicine at the University of Maryland School of Medicine and an emergency physician at Prince George's Hospital Center. Great to have you here with us, doctor. So I want to start with the good news that more than half of all American adults have at least been vaccinated with one coronavirus vaccine dose. It is not even yet May. When do you think we might reach that herd immunity that everyone has been talking about?
Well, I, like many of the frontline physicians, are so happy with the progress we've made with vaccination efforts so far. And indeed, we are making significant progress. And we hope by the end of this summer that, the majority of Americans will be fully vaccinated. And there's a possibility that we might get close to that herd immunity that we're talking about. This is a race against time, though. We are battling against still increasing numbers of infections that we're seeing in several states. And so while I'm pleased with the progress, I am cautiously optimistic because people still need to be careful while we roll out these vaccination efforts, and certainly make sure that they're being vigilant with their social distancing and mask wearing until they receive their vaccine and even after.
Speaking of receiving the vaccine, doctor, we're hearing from Dr. Fauci that we could have that J&J vaccine back in circulation later this week, perhaps early next week. The CDC is supposed to give some guidance on Friday, and it may hit the market again with some warnings and restrictions. What's that going to mean for the vaccine? And do you think that, the public is going to feel comfortable going and getting that J&J vaccine, knowing some of the issues that it's caused?
Yeah, I'm glad that you're bringing this up. I was actually very happy to hear that the CDC and FDA took these very small number of, adverse outcomes with blood clots that they saw in 6 individuals after over 6.8 million were vaccinated with the J&J vaccine. That is a negligible number. That is a very small number. You have a much higher risk of getting a blood clot if you smoke or if you take birth control. And certainly if you get COVID-19, we have seen clotting in up to 15+% of people who get COVID-19. But the fact that they took these side effects and adverse outcomes seriously and did a pause is reassuring that the system works and that the government is being transparent when it comes to the vaccination rollout and being very cautious. So I am looking forward to seeing what the outcome is going to be. I do expect it to be reintroduced, and they may place restrictions on the type of people who are at particularly higher risk for getting blood clots and maybe not recommending that they get this particular vaccination. But I do think it would be great to have the J&J vaccine in our armory against COVID-19 because it is a one-time shot that can be more easily stored and is important to reach communities that may not have the facilities or infrastructure needed to do the other 2-dose regimen with the mRNA vaccines.
So, doctor, we've heard of some of the symptoms that folks can expect or could potentially get after receiving the coronavirus vaccine: soreness at the injection site, tiredness, for example. But what symptoms should folks be on the lookout for that might be essentially signaling that something more serious is going on? What are the symptoms if you do have a blood clot, if you do go get that J&J vaccine?
Sure. So, most people can expect to have mild headache, muscle aches, potentially a fever, a general feeling of kind of fatigue or being run down. But a more serious side effect, especially one related to blood clots, would be an intense headache that does not respond to Tylenol or ibuprofen, any kind of neurologic deficit that would be similar to a stroke, shortness of breath, severe chest pain, or leg swelling. These were things that should prompt you to reach out to a physician to at least call and see if you need to be seen in an emergency department. And then you can see a doctor like me who could evaluate you for a more serious side effect. But I do find that I have not seen any patients that have had these types of symptoms. The majority of people that I've seen that show up with concerns related to post-vaccination side effects have been in the category of just normal aches and pains where we do a short observation and usually send them home.
Doctor, I know that this is quite disturbing because even though vaccines are ramping up quite nicely in this country, despite even the setback with the J&J vaccine, we're seeing in other parts of the world, perhaps in poorer countries, the vaccine rollout not ramping up the way it should be. And in fact, more people were diagnosed with COVID-19 during the past 7 days than any week since the start of the pandemic. So what does that do for us globally when we're talking about herd immunity? I mean, can the US really move forward when there are pockets of the world that aren't moving as quickly?
Absolutely. And that's an excellent point. You have to remember that everyone is racing against the clock. Even if we get to that elusive herd immunity, which we're hoping to reach in the United States in hopefully the summer months, that does not mean that the rest of the world is not is anywhere close to reaching herd immunity. And in those environments where the vaccine is not being rolled out because they don't have as many resources as efficiently as we do here in the United States, there's a possibility that a new variant could arise that has some penetration against these vaccines. And then that could be reintroduced here into the United States and put everyone who is vaccinated or not vaccinated at risk. So although we in the United States are very focused on what we're doing for our own population, we very much live in a global community. And as a world, we need to do better, making sure that everyone is going to get the vaccine and as quickly as possible to protect us from future variants and outbreaks of infection that could potentially alter or hold up our vaccination efforts in controlling COVID-19.
All right, Dr. Elizabeth Claiborne, University of Maryland School of Medicine, thanks so much for joining us today. And coming up after the break, JP Morgan is backing another soccer league in Europe. We have those details next.
Welcome back. JP Morgan Chase is bankrolling the biggest upheaval of European soccer since the 1950s. It's a $4.8 billion bet that's already drawing some pretty heavy criticism from fans, domestic leagues, even politicians. Joining us now to break down what this means is Yahoo Sports' Henry Bushnell. Henry, good to see you here. So first off, why does JP Morgan want a slice of this European soccer pie? And what might it mean for these leagues and their earning power?
Yeah, so this is a huge development in European soccer, in the world's most popular sport. And the reason they want in on this is the same reason that these clubs are doing this. They're breaking away from kind of the traditional structure of European soccer because they think if they go and create their own league and have the best teams play against the best teams more often in high leverage games, it can be lucrative financially. And they can sell TV rights and commercial rights for huge sums of money. And JP Morgan is basically in on that bet. And one thing that JP Morgan is going to be able to do for these clubs is JP Morgan is going to be able to give these clubs an initial grant or like a welcome bonus, that they're calling it, that could offset any short-term financial losses that these clubs suffer from the result of all that backlash from fans and politicians that you mentioned.
So to that point, I hear what you're saying in terms of how lucrative it will be for JP Morgan and even for some of these clubs. Is it financially bad for some of the fans? Will they have to shell out more money, either in terms of tickets or perhaps adding on extra channels in order to watch this other league?
They could potentially. It's still unclear who the broadcast partners are going to be, and whether it could be, a tech giant like a Facebook or an Amazon globally, or whether it would be more traditional TV networks. I think who really gets hurt financially here is the smaller soccer teams, the ones that aren't going to be involved in this league. And that's where a lot of the fan backlash comes from, because these clubs are going to certainly, benefit financially from this. But the smaller clubs, the 6th and 7th place and 8th place teams in England right now, for example, are the clubs that are going to fall just short of this Super League. It's not going to be as interesting for fans of those clubs. And those clubs, there's going to be a trickle-down effect. If these big clubs, if these elite teams are hogging more of the revenue, then there aren't going to be as many solidarity payments to these smaller clubs. And that's why people fear that kind of the whole soccer ecosystem could suffer here.
What do you think this might mean for average investors who want a piece of the pie? I mean, I'm seeing Juventus Football Club of Italy and Manchester United soaring today on just the possibility that this kind of a league could actually happen.
Yeah, it's in a way. So this is, in a way, it's driven in part by some American owners. American owners own Manchester United, and it's some of the American model. And the American model, the franchise model, where these clubs aren't going to be able, in European soccer right now, there's this threat that the clubs can drop out of the top league. And there's just, in general, their revenue is often tied to success. This will be guaranteeing significant revenues to every club involved. It's guaranteeing greater revenues than they currently get to every club involved for decades to come, if it comes to fruition. So that's why it's making any sort of investment in these clubs, in this league, just a lot safer, and also with more growth potential. So that's why it's so attractive.
Yeah, we're going to be watching it. I'm sure the story is just only begun. Yahoo Sports' Henry Bushnell, thanks so much. Don't go anywhere. Coming up next, actress Brooklyn Decker joins us to talk about how she's putting her stamp on a fashion app. We're back right after this.
Welcome back. Let's talk fashion now in the time of coronavirus. We're joined now by founder and designer of fashion brand Buru, Morgan Hutchinson, and actor Brooklyn Decker, who launched a new collection with Buru called the Heirloom Collection. Thank you both for joining us today. Morgan, I want to start with you. Curious to know how the pandemic has changed how you've either approached your business and even also approached fashion and designing clothes.
Well, I've always been a huge believer in that you should wear what you want to wear, regardless if you are actually going somewhere or not. So my mentality hasn't changed very much. Now, getting our customers fully on board with that is, of course, another side to the business. But during the pandemic, we actually flourished because we had been building this infrastructure to produce and own our own factory domestically. So even though we still produce goods overseas, when the world shut down, our distribution channel did not. And we actually do our own fulfillment as well. So having complete control over start to finish in our goods and how it gets to our customer was in our hands. So we were able to keep moving.
And moving you are right along with actor Brooklyn Decker. Brooklyn, I know you've got this heirloom collection that just launched on Buru. And I love that it was inspired by the Netflix series Bridgerton, which is a period series, which I really enjoyed. I think that series inspired a lot more than just fashion, but that's for like another show at another time. But talk to me about this collection and what it meant for you to be part of this.
Yeah, well, I've been a fan of Buru for a very long time. What I love about the brand is they use all dead stock fabrics, which, you know, sustainability in fashion is pretty cloudy. It's not clearly defined, but they do their best to reduce their footprint and also create clothing that's washable, that's breastfeeding accessible. So for moms, it's ideal. And I think oftentimes in the market, moms, while the biggest spenders, making 80% of the spending decisions, they're not actually considered as far as clothing is concerned. And so I've been a fan of the brand for a long time, and Morgan reached out to me about a collaboration, and production on my Netflix series Grace and Frankie had stopped last March. I had been out of work. I had been quarantined away from my family, so I was really missing family and a creative outlet. And the idea of creating a clothing line with Buru that was sustainable, multi-generational, and where all of our proceeds could be donated, or all of my proceeds could be donated, just felt really good. It was really nourishing and energizing and fun and light and happy when I really needed it.
Yeah, I was looking at some of the pieces and I loved two things. One, the pockets. I don't know why we never put enough pockets on women's clothing. I absolutely love to see so many pockets on some of these pieces. And also the fact that so many of them were reversible. So speaking to that sustainability piece, that you can wear it one way and have one color and a different print or pattern a different way. You know, every time I think about buying clothes, I run into two problems. One is the comfort. I'm so used to wearing leggings or sweatpants now, it almost feels torturous to wear something that is not as comfortable. And two, I almost think that I have nowhere to go. Are you hearing something similar from the buyers, that they want to have comfort first and foremost going forward, even after they come out of this pandemic and can be seen in clothes again?
I think that's one thing that's, you know, at the core of Buru, a ton of our items have elastic to start, even when they don't look at it. We have a skirt called the Tegan, and it's technically a ball gown skirt, but the entire back of it is elastic. And so our concept has always been that you should be comfortable to start, whether you're home or going out. And so for us, that message has been really easy to express. And we 100% agree you should be comfortable, because if you're not, then you're not going to shop with us again. You're not going to wear it. And the idea of having things in your closet that you don't wear is so sad to me. But just because it's comfortable doesn't mean that it can't be amazing looking as well.
Yeah, I love that idea. You know, to your point, there are so many things in my closet I never touch, right? I can have so much more closet space. And I know, Brooklyn, the last time we spoke, it was a different world. You came to the studio. We talked about how you were the co-founder of a digital wardrobe startup called Finery, which you've since sold to Stitch Fix a couple of years ago. And that was all about sort of organizing one's closet and making sure you're really using what you've got. Just talk to me a little bit about that experience, about co-founding that company. And are you involved in any other startups right now inside or outside of the fashion world?
That was, I didn't go to college, and so that to me felt like what I would imagine business school would feel like. It taught me so much top to bottom. I learned about sustainability in fashion and how harmful fashion is to the environment. But that being said, I do love clothes and I love fashion, and so how can you both be a thoughtful consumer, but also be incredibly aware of your footprint and how you actually work with your clothing? When you look at your investment, women will spend more money on their clothing than their education in their lifetime, which is a pretty shocking statistic. And so your clothes should be working for you. And that was Finery's whole ethos. How can we apply tech to the closet? We use it for security. We use it for our thermostats. We use it for our music. It should be applied to our closet. So it makes sense that it would go to a tech-first company in Stitch Fix. And as far as other organizations or other businesses I'm involved in, I'm invested in several, some in the fashion space, many outside of fashion, a lot of female-founded businesses. But being fairly young and making income and being incredibly excited and inspired by founders and businesses, I'm lucky to be in a position where I can invest. And that's what I love about Morgan at Brewers. They're entirely self-funded. Being a founder, I know how hard that is. We had to raise outside capital. They're family run, and that's unbelievably difficult this day and age. They're manufactured in the USA. So there's so many facets to Buru that I love and was a fan of. And so, yes, the short answer is I have my fingers in a lot of pots, and I love to support small businesses and founders, whether that be through a collaboration or economically with my dollar or as a customer.
And before we let you go, I have to ask about Grace and Frankie. I adore the show. Looking forward to season 7, which I know is going to be the final season. What are we going to do without this show? When are you guys back taping, and has the season been written, and what do you think about the way they're going to wrap things up?
Great question. We are resuming production this summer. It's been pushed back several times, obviously due to safety concerns, and safety of our cast and crew is of the utmost importance, but we will be resuming production this summer. I have read up to a certain number of episodes, but I actually don't know how it ends. So it'll be a surprise for the cast as well. But I hear rumors that we might have a very special guest star in the form of Dolly Parton. I think Lily Tomlin or Jane Fonda might have said that publicly, and it actually has not been confirmed to me, but I think one of them announced it, which is thrilling for me. I hope I can be there that day. But yeah, we're going to go back to production this summer, and we already shot a few episodes of the season before we were shut down, so we're hoping they can air those a little earlier to give audiences what they've been waiting for a while. But we are sadly wrapping things up soon, but what a privilege it is to know when you're ending a series. I'm used to getting canceled, so this is a true privilege.
Looking forward to it. Awesome. Thanks so much.
So many people are excited for when that show does return. Morgan Hutchinson, Buru founder and designer, actor Brooklyn Decker, thank you both for joining us today. And coming up, we've got the latest updates on sustainability as Earth Week kicks off today.
Our planet's very own holiday is coming this Thursday. It is the 51st annual Earth Day. And in a year in which the pandemic has had the globe in its grip and climate change sparked a cascade of calamities from raging wildfires to a ferocious hurricane season, the focus of this year's Earth Day could not be more timely. Yahoo Finance's Brooke DePalma is here now with more. Hi, Brooke.
Hi, Alexis. You're correct. Government officials, experts, and even major consumer-facing brands have put sustainability focus first, like Dunkin' and Starbucks, with a similar goal to eliminate single-use plastic cups. And while they certainly have helped during this climate crisis, during this time of heightened attention, threatened hotspots like the ocean, forest habitats, and others have also needed much far attention. We took a deep dive into 3 of those hotspots to really bring our viewers into the crisis and see the complete toll that human impact takes.
More than 7.8 billion people populate planet Earth using its natural resources. In recent years, recycling efforts have been made across the globe to reverse human impact. But it might not be enough. In just 1 year, 8 million metric tons of plastic waste ends up in oceans. That's in addition to the 150 million metric tons of plastic that already exist within the ocean. At this rate, the ocean is on track to have more plastic than fish by the year 2050. The Earth's oceans are not the only areas feeling the wrath of human impact. The Amazon rainforest covers 40% of the South American continent and is home to nearly 10% of the world's species and 1.4 billion acres of forest. But human impact has taken a toll. Manufacturing, transportation, and industrial needs have led to rapid deforestation. And while many areas have been hit by climate change and human impact, the Arctic Circle is among the worst. Stretching 5.4 million square miles, this frozen body of water is now free-flowing, with the ice melting at a rate of 13.1% per decade.
Earth is in fact at a tipping point, and experts warn that the future of the planet is really up to us, those who inhabit it. And while actionable steps have been taken by government officials, experts, as well as major consumer companies, there's also been a heightened focus for retail investors flocking to ESG investing. That's environmental, social, and corporate governing investing. In fact, a study from One Planet Capital predicts that investments within the ESG market will double this year, with more than 12% of investors planning to move to ESG-related funds. Now, the big question here, Alexis, is will this be enough to save planet Earth?
That is, of course, the ongoing question. Brooke DePalma, thanks so much for that. All right, stay with us here on Yahoo Finance Live. Coming up in the next hour, we're going to speak with Eric Pierre, CPA of Pierre Accounting. He's going to talk to us about the IRS's guidelines when it comes to cryptocurrency. We're back right after this.
Welcome back to Yahoo. Welcome back to Yahoo Finance Live. I'm Kristen Myers here with my co-host Alexis Christoforous. Let's take a look at what is moving markets today. And we're kicking off Earth Week today. Yahoo Finance will be bringing you special guests all week as we talk about climate change and its impact on the economy and American businesses. And to coincide with Earth Day, President Biden will convene a virtual climate summit later this week. And Tesla's autopilot technology is being questioned again after a Tesla with no driver crashed in Texas. Now, that deadly accident killed 2 people. We have the details a little bit later. And we are in the middle of tax time, and you will all want to be aware of IRS guidelines regarding cryptocurrency, especially as everyone right now is looking at Dogecoin. That's the cryptocurrency based on a meme that is soaring right now. We have that conversation later on in today's show. I want to bring in Yahoo Finance's Jared Blickery right now for a look at some of the top tickers that we have today. Jared, I'm seeing some of the travel stocks under pressure ahead of United's earnings.
That's right. The reflation or the reopening trade, for that matter, both of those not really having the greatest day. We can check this out on the Wi-Fi Interactive. And indeed, we do have those United earnings after the bell. There's going to be a lot of attention on some of the metrics they're providing. And I'll go through some of the analyst commentary. But first, I just want to check out the price action. Today is a down day. We can see it coming off this peak that we had last Wednesday. But a year-to-date chart really shows the strength of the sector. Now, this is up 27%. We've been consolidating. A lot of times this happens before a major announcement, in this case, earnings. So probably going to break one way or the other, get some momentum, whether it's up or down, depends on the results, of course. But here's what Morgan Stanley is looking for. They say the most important catalyst for the travel, for the airline sector, remains the slope of the traffic curve. So are we in fact making gains, or are we on the wane? This is going to validate the bull or bear case in the second half of the year. And they're saying that management updates on the summer and also the second half of this year in terms of booking activity, it's going to be critical. Morgan Stanley holds it at an equal weight. And Jefferies also commenting they have a hold on the stock, estimating that first quarter capacity across U.S. airlines fell 45% year over year, with revenues declining 61% across the Jefferies coverage universe versus 2019 normalized levels. So lots of attention on that. We're not sure exactly what time it's going to come out, but it tends to be either at 4:15 p.m. or 5 p.m.
And Jared, I see a lot of red there on that screen. And I know there's also a lot of red in the EV space today, some general weakness. But I want to pick out Lordstown Motors because I guess they've got some bad news regarding their latest electric vehicle.
Yeah, that's right. They were in a race over the weekend. This is the Score International San Felipe 250, and their truck was not able to make the finish line. So that stock is down 9%. But really, this is not the best day for EV. I mean, check out this year-to-date chart. Since peaking in February, really kind of falling off a cliff here over the last month. And in fact, if we change this heat map to a one-month view, you can really see some of the losses here. QuantumScape basically cut in half. And then we have Luminar, that's back also down about 50% year to date. So not the best, not the most constructive environment for a lot of these stocks. But of course, we do have Tesla, the biggest one of all. That's still up 8.9% over the last month, still holding on to gains of 1% for the year, guys.
All right, Jared, tell us about the Yahoo Finance Plus investment idea of the day. I see that it's Pepsi. What's behind that call?
That's right. They announced earnings just last week, and we're going to check out this bullish call by Argus Research. Now, here we go. They have a price target of 164, so they are maintaining that. And here's what they're saying about the stock after it announced earnings last week. We expect cost cutting to continue to benefit earnings. Look for PepsiCo to achieve its goal of $1 billion in annual cost savings and productivity gains through 2023. Now, these initiatives include optimizing the company's global manufacturing footprint and re-engineering its distribution network. And a couple of comments on the numbers themselves. We are maintaining our 2021 estimate of $6.10 per share. That's up about 10.5%, leaving our 22 estimate at $6.60. That's moving along here. Our target price of $164 along with the dividend implies a potential total return of approximately 18% from current levels. And we'll just check out a one-year chart on PepsiCo. This is a staple, so sideways action is to be expected a lot of the time, but nice to see it up 5% on a trailing basis.
All right, Jared, before we let you go, you got to give us a crypto update. I know the price of Bitcoin and other cryptocurrencies plunged over the weekend. We've got some crypto-related stocks on the slide today.
Yeah, we might as well hit those crypto-related stocks, and starting with Coinbase, because that is the leader here. It's great fanfare. It listed last week, and we only have a few days of price history, but you can see so far just a little bit up from its opening day's close. But a lot of these other crypto stocks are well in the red here. Let's take a look at Diginex. That's down 61% year to date. We have Marathon. That's another one that closely tracks Bitcoin. That's up 237%, but you can see well off the highs, and a lot of that has to do with the negative price action we saw over the weekend, and for that matter, since topping last Wednesday, guys.
All right. Thanks so much, Jared. We'll see you a little later on in the show. I want to keep this market conversation going and bring in Eddie Gabor from Key Advisors Group and author of Common Sense Bull. Eddie, always great to have you join us. So Jared just finished on crypto, and I want to pick up there with you. I was reading your notes, and you had quite a bit to say on it. Wondering how folks should be approaching cryptocurrencies right now. We saw Bitcoin under pressure, as we just saw from that chart that Jared showed. Many of the cryptocurrencies under pressure right now. And I, of course, have to ask you, what is your thoughts on Dogecoin right now?
So I look at Dogecoin as more of a speculative play that when this bubble bursts, it will probably cease to exist. That's my opinion. In regards to crypto, Ethereum and Bitcoin are the two that I think will last even through the bubble. I look at crypto the same way I look at the technology bubble that we saw in the 90s. And then ultimately that busted in March of 2000. That will happen again. We are absolutely in a bubble. That's why you're seeing asset prices inflate the way they are. And crypto is the most speculative of all these risk assets. So I personally believe there's still a lot of room of upside over the next few months in crypto. Again, I'm mainly referring to Bitcoin and Ethereum because I do believe that they will continue to be here many, many years down the road, and they are going to become more and more of an asset class that institutional managers will continue to add to. So Dogecoins and the other ones, again, they're great to talk about because of the moves they're having, but I don't look at them as a real asset.
So then what would you say to investors who maybe have been sitting on the sidelines watching this bubble get bigger and having FOMO? I mean, when is the opportunity, or has that ship already sailed to jump in here? And if so, I mean, you said you like Bitcoin and Ethereum. Is that where you would be guiding investors right now?
Absolutely. Look, now you have to have the right risk tolerance for crypto because these 20%, 30% moves and corrections, it's very normal. So Saturday, fortunately, I was awake when the crash happened, and I added a little bit more for my own personal portfolio. Those are the times that you want to be adding to those positions, is when they have these big corrections. Many times it's a tough thing to do, to buy while everything seems to be crashing. But, you know, putting it in perspective, it still has had a heck of a run over the last 12 months. And again, as long as we are in this reflationary trade that we believe is going to stay intact, at least for the next quarter, possibly two, Bitcoin and Ethereum will probably be one of the higher returning asset classes because it is a truly risk on trade, and they will not completely collapse until we do have that bubble burst.
Eddie, what advice would you give, though, regular investors who are invested in crypto right now? I mean, you say you bought on the dip on Saturday. People might be looking to day trade this stuff, right? Which we know can be dangerous on lots of different levels, but also there is a tax implication there. In fact, we're going to talk a little bit later on about IRS guidelines regarding crypto. So what would you say to investors who maybe aren't very versed on tax implications, especially as it pertains to crypto? What should they be thinking about?
Well, number one, I don't think day trading is not something that's going to work in the long run for most investors, in my opinion. I think you have to look at it the same way you would look at your fixed income position, your large cap position, is figure out based on your risk tolerance, what percentage you would want to go into that speculative asset class. And let's say, for example, it's 10%. put that in your portfolio and then just keep it there. Don't day trade it. And then when you're rebalancing your portfolio, it will force you to buy more when it goes below that 10% position. And that's how you rebalance your portfolio for the long haul. But if you're going to try to day trade and time this, it's too difficult of a task for the average investor to be able to do that, in my opinion.
Eddie, let's say you're an investor that has had a bit of FOMO, but does not have the appetite for the risk levels that you're going to need to get involved in cryptocurrency, but you're looking out at the market and you really want to put your money to work where there's going to be some opportunity. Where should you look?
Right now, we think the best place for upside here in the near term is in the energy space, mainly oil. Oil is one of the recovery trades that has had a really bad month. It's when we had that March sell-off, you had the Nasdaq drop double digits, small caps, and all the areas. But oil is the one that has not bounced back. And because of the pent-up demand and travel that we're going to see over the upcoming months, we think oil has tremendous upside. And it's also one of the only sectors that's not to the pre-pandemic levels. A lot of these other stocks have hit pre-pandemic highs. Oil has not. So we think oil is going to continue to go up. And these oil stocks have a lot of catching up to do to get to where they need to be. So for the right investor, we think that's the best place to be adding if you have not had a position in energy plays.
All right, Eddie Gabor, author of Common Sense Bull. Thank you so much for joining us today. And coming up, Tesla under pressure today after a Tesla with no driver was in a crash. We have that next.
Welcome back, everyone. 2 passengers were killed in a crash of a Tesla Model S on Saturday, in which there was no one sitting in the driver's seat. This crash happened in a suburb outside of Houston. It killed the person in the front passenger seat and one in the rear seat of the car. And of course, this crash is currently under investigation. We see shares of Tesla coming under some pressure here today. Joining us now is Garrett Nelson, a CFRA analyst who covers Tesla. Garrett, what was your first thought when you heard about this deadly crash, and what's it going to mean for Tesla and Elon Musk?
Sure. Thanks for having me today. Our first thought was there's certainly going to be an investigation announced. And in fact, that's what happened just a few hours ago. The National Highway Transportation Safety Administration announced that they've opened a probe into the crash. We know that anytime a Tesla vehicle is involved in a high-profile crash such as this one, with very suspicious circumstances, it garners a lot of attention, and there's a lot of scrutiny surrounding Tesla because of their autopilot technology, because of some of the claims that Elon Musk and the company make surrounding the technology. But we'll see where this goes. One thing I would say is that there have been many probes into Tesla crashes in recent years. In fact, there have been 28 NHTSA probes, and 24 of those probes are still active. So, one of the things we've seen in recent years is a reluctance to really clamp down very hard on Tesla. They've kind of been given a pass. So, we'll see what happens with this. I would say the significance of this is that it's the first major incident under the transportation department of the new administration. So, we'll have to see where this goes.
Garrett, I'm just looking at the stock action right now. Tesla down almost 4%. Curious to know if you think that investors are going to be looking at Tesla a little bit differently, perhaps in the longer term, especially around that autopilot technology.
Sure, it's one of the concerns that we have. We currently have a hold rating on the shares. A lot of that is because the stock had a meteoric run up in 2020. Tesla shares were up over 700% last year. And there's various concerns that we have surrounding the story. And just add this development, to that list of concerns. But, we kind of view 2021 as a year in which Tesla will be finally facing a lot more competition in electric vehicles than they have in recent years, from the likes of upstarts such as Lucid Motors, Rivian, but also traditional automakers who are making a much bigger push into EVs, such as Volkswagen, Daimler, and also some of the traditional U.S. automakers.
It's interesting that you laid out for us, Garrett, how many active investigations there are against Tesla. Yet I'm curious if there's been a correlation between those outstanding investigations and people buying their vehicles. Has that dented sales at all? And if it hasn't, do you think it's because there hasn't been a real competitor, and that might start to change in the coming months and years ahead?
It really hasn't hurt. None of these headlines, these very high profile crashes have really impacted Tesla whatsoever. In fact, they've continued to grow their market share in the U.S. They've more than quadrupled their market share in the U.S. electric vehicle market over the last 5 years. So, if anything, they continue to pick up market share. But we think, their market share is probably pretty close to a peak in 2020. So, they just haven't had the competition, and they've really benefited from that. That will be changing very soon. In fact, in the next 6 months or so, you will see Lucid and Rivian vehicles on the road. You will see a number of new models from traditional automakers in electric vehicles on the road as well. So, it's really the increased competition has us cautious on the stock here.
Garrett, just looking out more broadly at this space, a lot of different companies trying to jump into, let's move now to autonomous vehicles. You've got Cruise, you've got Waymo. Nuro was a company that we were chatting about recently with their partnership with Domino's. Does something like this crash from this autopilot mode, which of course is that precursor to a fully autonomous vehicle, do you think that causes pressure to the AV space, raises even more questions about the feasibility of autonomous vehicles on our roads?
It certainly doesn't help. We'll see what the investigation shows. The early reports is that no one was in the driver's seat It's unclear if a driver was in the driver's seat and got ejected to another seat, due to the crash. So that's unclear right now. You have to let the investigation play out. But these sorts of headlines don't help, and they don't instill confidence in that technology, which many people are very skeptical of, and there's a lot of reluctance out there. And calls for from both sides of the aisle on Capitol Hill to really clamp down. And some of the Tesla's claims regarding the technology, a lot of people view as irresponsible. So when they call this feature full self-driving, are consumers actually thinking they're getting a full autonomous vehicle? It's not a full level 5 autonomous vehicle. They're not there yet. In fact, they're somewhere around level 3. So we still think fully autonomous vehicles are years away.
All right, we're going to leave it there. Garrett Nelson, CFRA analyst, thanks for coming on and talking Tesla with us. And do stay with us. Coming up next, environmental activist Erin Brockovich joins us as President Biden gets ready to kick off this week's climate summit. We're back right after this. Welcome back. President Biden has invited no less than 40 world leaders to participate in this week's climate summit. He's hoping to reach deals with the world's largest greenhouse gas emitters. President Biden's also expected to unveil a new emissions reduction target this week for the Paris Climate Accord. Joining us to talk about his efforts on climate is Erin Brockovich, environmental activist and author of the book Superman's Not Coming. Erin, it's good to see you again. I know that, of course, most of your life work has been advocating for clean water. So I want to start there and get your thoughts on President Biden's promise to commit $45 billion to replacing all the lead pipes that currently supply water to especially our older communities in this country. Do you think it's actually going to make a dent in the water that we're all drinking?
It's a start. And so I'm just glad to see the entire conversation happening again from climate change, which, by the way, is going to be water events and water, and making investments in our infrastructure. I've been out there for 25 years on the ground, and I can tell you and see you where a lot of the issues are, and it is failing, aging, antiquated infrastructure. So it's a good beginning, especially on the lead issues. And we have a far way to go because for decades we've let these issues not be attended to, gone unnoticed. Whatever has happened has happened. So it's a good start, especially on replacing aging, antiquated infrastructure. And we'll have to go from there. It's not going to be an overnight fix.
You know, Erin, I think so many communities are dealing right now with the impact and the effects of climate change, are dealing with the impact of having unclean water. Flint is just one community that comes to mind. I want to go back to the title of your book. It says, Superman's Not Coming, What We the People Can Do About That. So I want to ask you that question. What can we the people do about it? What can we do on a more local level without waiting for the federal government to tackle these issues of climate change, of environmental justice, of clean water?
I'm so glad you brought that up, because the title Superman's Not Coming might make some people nervous, but it shouldn't be, because we're here. The conversation has happened. And I can assure you, in every community I've been in, even Flint, it begins with one mom or a group of moms. And if they get up in arms, I promise you're going to move aside, because they're going to push through. And I've seen it happen in Hannibal, Missouri, and New York, and all over the United States. In Flint, you don't necessarily have to wait for some federal oversight to come down and rescue. That's not going to happen. We are going to have to push to have a seat at the table. We have a voice, we've got the courage, we have the ability to work with your community, start a conversation, and just show up. Show up at your city council. So much can happen at a very local level. Start there, and then you can work your way up and build yourself out. And I don't know if we've been comfortable or complacent or just thought that something or someone would have all of this taken care of. And we're all waking up and learning that isn't happening. It didn't happen. And we have to get involved. And don't be afraid to use your voice. Get involved with your community. Ask those questions. Don't be afraid not to ask a question. And so what if you're wrong? Keep asking. Stay involved. And absolutely get involved at a local level. So much happens right there. And a lot of change can begin right there.
I'm so glad you bring that up, because there is so much power in our local communities, right? And oftentimes that's where we can affect most change, is at the local level. And you're right, the federal laws are sort of falling short here. And I know in Buffalo, they did something recently where they sort of took matters into their own hands to help their own water situation there. Who, in your opinion, is doing it right now? Where might other cities look to them as a blueprint?
Well, we point out quite a few in the book, Superman's Not Coming, and what we, the people, can do about it. And I don't want us to forget about we, the people. We have a huge voice. And in response to your question, what comes to mind is at a very local level in Poughkeepsie, New York, right at the municipality, where you had a municipal operator paying attention to when he was turning on an ammonia feed that all the consumers were calling, and that they were experiencing problems, itchy skin, rashes, change of smell, what's going on. One of the first things that can happen at that very local level is at the municipality, and listening to what the consumer is telling you that they are seeing and experiencing, and a change in their water, and responding to it. So ultimately what they did in upstate Poughkeepsie, New York, and this water operator, listening to the customer or the consumer, they stopped using the ammonia feed, which they later learned was creating a corrosive system within the distribution system. And they got to work, stopped using the ammonia, fixed the distribution system, replaced it, and they're now delivering water, safe water, free of ammonia, that doesn't cause lead outbreaks or Legionnaire problems to the community. That's just one municipality. There's 60,000 plus. Imagine if everyone across America did that. They could make change at a very local level and across the board, make a difference for everybody in our drinking water. Now, that's one issue and one chemical, but we do have to broaden from there and look at our overall aging infrastructures and how we deal with that.
Aaron, I want to quickly ask you on that broadening point about communities of color that we have seen so impacted by climate change, so impacted by the water crisis that we currently have. How can we make sure that we center those communities going forward, at least on broad federal policy?
Again, back at a very local level, and they oftentimes are absolutely overlooked. They're not listened to. I don't know, someone thinks that they're just going to go away. Getting involved down on the ground. This is something I've said, there's such a disconnect between federal and federal agencies and what's happening in a particular state, and then a further disconnect from the state to that community. And it's working with the community and being on ground with them and supporting them in their voice. They suffer and they're not heard. And I desperately want to say and get to all of these communities, you can be heard, and I need you to get collective and be together and don't get pushed back or away at the first time that you try to approach a subject and someone doesn't want to hear it. Come back to your community, get more, get another, get 100, get 200, get 500. Don't go away. But we, in my opinion, at a federal level and a state level and at a local level, you need to get out on the ground and be with these people and see what they are living and experiencing and be support to them and start from there. There's such a disconnect from these agencies and what's happening to the people on the ground. So I want to say to all of them on the ground, and I'm down there with you, we will come in and support you. We will give you the tools you need so your community can be heard, but speak up. And if you don't, we can't always see you and get to you. But it's very frustrating, and I feel their frustration because they're oftentimes overlooked.
Aaron, before we let you go, I know you've got that new ABC series Rebel that was, I guess, inspired by you and your life story. Katie Seagal playing sort of Erin Brockovich 2.0. I know it just launched, but your thoughts on being part of that after all these years?
I can't even think that 10, 15 years ago, television would have had a female of age protagonist playing on something, but I'm really proud of Rebel, and it's been fun and great to be a part of it. There's a huge message there, and Rebel is that person down on the ground. And you know what? Rebel is all of us, and I hope it inspires you to find that voice within and not to be afraid to speak up and be a part of such a huge message that's impacting all of us. So I'm inspired by Rebel. I watch it and I'm like, go girl. So it's been a lot of fun.
Rebel in us. Yeah, Erin Brockovich.
Absolutely.
Yeah, thanks so much, environmental activist. In the name of the book, Superman's Not Coming. Coming up next, we're going to find out why GameStop is on the move today after news that its CEO is stepping down. All right, welcome back, everybody. Time now for a look at the commodities markets. Jared Blickery here with his eye on oil. And Jared, I know just a little while ago we got some news from OPEC. They might not be having their next major meeting, which we know is usually moving for the oil market. Why not?
That's right. Well, they made a pretty big decision at their last meeting several weeks ago, and they're meeting once a month now. It used to be once a quarter or thereabouts. And they're not going to cancel all the festivities, if you can call them that. They'll probably still have their joint ministerial meeting and maybe some of the other minor ones, but just kind of skipping the major one possibly because they've already set in line production hikes for the next several months. And so if they were to simply leave this one on hold or just stand pat, they wouldn't really be making any decisions that would affect oil output for probably to the July to August time period. So let's take a look at the price action. We just saw it settle at $63.38, still trading here in the electronic markets. And since Sunday evening, you can see it's just been steadily drifting towards the upside, but not really any major price action going on here. And here's a chart we've been looking at for a while. We got this big breakout last week on the drop in oil inventories, and we just kind of been hanging out by the $63 per barrel price target. So all in all, we're going to get some news from API tomorrow after the bell, as we do every week on the weekly inventory figures. Then the Department of Energy confirms them Wednesday morning. But I think investors are going to be concentrated on the reopening trade and also on OPEC Plus. We'll have to see if they actually decide to just skip a meeting or so. Alexis?
All right, guess it's to be expected now that those meetings are more frequent. Jared Blickery, thank you. All right, if you've been paying attention to GameStop, it is one of our most widely searched tickers on our site. It's actually a trending ticker right now on yahoofinance.com. We've got Dan Howley, our tech editor, joining us now for a look at what is moving this stock higher today. I know that CEO George Sherman is stepping down, but any idea on who might lead this company now, Dan? I know they're looking to make that hard pivot and go to e-commerce.
Yeah, it really is. I think the George Sherman story kind of coming down from the position, not necessarily right away. They did say that July 31st is likely the time that they could move that up if they find a replacement sometime sooner. Obviously, the big deal here being that this is all part of GameStop's turnaround plan. And we also have, obviously, Ryan Cohen. He's the investor who moved in, bought up a ton of shares, and is now going to be chairman over at GameStop, obviously co-founder of Chewy, who wants to be instrumental in this turnaround for GameStop. Really what the company is trying to do is turn itself from a primarily brick and mortar operation to a digital operation with brick and mortar. And while doing that, they want to become more of not just games provider, but anything that's tangentially related to games. So TVs, gaming accessories, PCs, anything along those lines to kind of goose the sales there. And then, in its most recent quarter, they did have net sales down year over year from 2.19 billion to 2.12 billion. But they did see an increase in online sales of 175%. So obviously, they're doing a good job getting everyone online, but they still have this huge overhead with those stores. It's also worth pointing out that Keith Gill, otherwise known as Roaring Kitty, and another name online, he did increase his stake in the company by about 50,000 shares. He's now up to 200,000 shares of GameStop, and that is valued at $33 million now. So he's done quite well for himself. I don't know how much better off the people at Wall Street Bets, the Reddit board, are compared to him. But obviously, he made the right call. GameStop up around 3,000% in the last 12 months of trading.
Wow, incredible. I have to see if Roaring Kitty doubled down on GameStop, decided not to trade on those options for some tax consequences, right? We're going to actually talk to somebody a little bit later on about some of those tax consequences. But all right, curious to see. Thanks a lot, Dan Howley. Peloton, another stock that is trending on our site today. Here with the story behind that is Yahoo Finance's Alexis Keenan. And it looks like this story is not going away, Alexis. In fact, it's getting even worse. Now we've got U.S. regulators telling folks if you have young children or pets, don't use that Peloton Tread Plus treadmill.
Yes, Alexis. And that warning came from the U.S. Consumer Product Safety Commission on Saturday, recommending that Peloton treadmill be put aside for people who have children and pets who could become entangled in this equipment. They called it dangerous. They recommended a recall for this product. And that has to do with 39 different incidents that have happened that have involved injuries. One includes an infant's death that was reported by Peloton to the agency back in March, and also multiple injuries of small children, also a pet. So far, the agency said they're just aware of those 39 incidents. I checked again today. They said that they do expect that perhaps there could be more reported now that this news is out there. The reports are that the children become either entrapped, pinned, or pulled under the rear roller of the product, so the very back of that treadmill. Now, the agency released a video of what this looks like. We're just going to show you a still image. The agency telling Yahoo Finance that they are very focused on this investigation as it continues. Now, for Peloton's part, it issued a response to the commission, and it said it will not recall the product at this juncture. They called the agency's press release inaccurate and misleading. They went on to say the Tread Plus is safe for members to use in their homes. Like all motorized exercise equipment, the company said the Tread Plus can pose hazards if the warnings and safety instructions are not followed. They went on, Peloton did an additional statement on its website and said there is no reason to stop using the Tread Plus as long as all warnings and safety instructions are followed. Now, in that statement, though, the company also disclosed that as they were going through this process and reporting to the agency, that another child had suffered a brain injury and was expected to fully recover from that. Now, in the company's user manual that I took a look at, mind you, this is a treadmill that goes from anywhere from $2,400 all the way up to $4,300. They do have a warning that comes with it, and it does say that that users should keep children, pets, and objects away at all time. Also, that this equipment should be unplugged when it's not being used. But whether Peloton will ultimately end up having some sort of a mandatory recall, that's not happening at this juncture. Or whether they'll end up legally responsible really depend on whether those warnings that they have are sufficient in respect to each individual circumstance. All of these cases, all of these injuries would essentially be treated as a case-by-case basis. The agency's knee-jerk reaction is not usually to just go ahead and issue a mandatory recall or to sue the company. And like I said, the investigation is still ongoing.
All right, Alexis Keenan, thanks for the update. We will continue to be watching Peloton. Coming up next, the IRS's guidelines when it comes to cryptocurrency.
Welcome back to Yahoo Finance Live. Now, everyone is looking to cryptocurrency as we see huge run-ups in Dogecoin, and Bitcoin was hitting some record highs just recently, but you want to make sure that you are protected when Uncle Sam wants to collect. So let's talk taxes and cryptocurrency now. We're joined by Eric Pierre, CEO of Pierre Accounting. Eric, so what is the guidance that we have from the IRS and how we should handle cryptocurrency around tax time?
That's a great question, and thank you for having me. Now, it's going to depend on how you acquire the cryptocurrency. So these days now, we have people that are paid in cryptocurrency for their services. If you're paid for your services, so let's say I'm paid 100 coins Ethereum at 2,500, I would record that as 250,000 of income because that's what Ethereum is worth of that day. And then if you're doing the buy and hold strategy, when you buy it, you're tax dependent when you sell it. So if I buy some Dogecoin today, say $1,000 worth, and I sell 3 months later for 10,000, I'm taxed at ordinary income at the 9,000 gain because it's less than a year versus the same coin. Now, if I sell it a year and 5 days later for say 100,000, that $99,000 gain is taxed at capital gains rate, which the cap currently is 20%.
So what if you have a business such as selling NFTs, right, or data mining? What should you know come tax time? What is allowable?
Okay, so selling NFT, you can create an entity and treat it like a business. So if I were to sell, let's say, a digital art of LeBron James dunking a basketball, like recently for 200,000, I would record that as my gross receipt. But if I incurred expenses creating it, such as buying the computer and the digital art, I can deduct it as long as it's considered ordinary expenses to create the digital art. Then I can deduct it against that income. One thing to keep in mind is that if you're into NFT, you're not doing a trade of business, the IRS is looking to potentially treat that activity as a collectible, and the collectible tax is up to 20% for the high earners, and that's for single people at 441 and higher, and married 496. So that's a little different from how they're treating the rest of the coins.
Now, Eric, when it comes to taxes, I think everyone is always looking out for loopholes. What you're saying seems to be fairly straightforward. Are there any loopholes or specific tax laws that perhaps folks that are dealing with cryptocurrency should be aware of or could potentially use?
Yes, that's a great question. Now, you can also create Roth IRAs and traditional IRAs with cryptocurrency that allows you to defer tax or not pay tax, depending on how it's set up. It's a little trickier, but with the right brokerage and the right strategy, you could have a Roth IRA with cryptocurrency, or you can put all of it in a traditional IRA, grow it tax-free, and then pay the tax in retirement with the RMDs, et cetera, et cetera.
Before we let you go, I'm just curious about what counts as a deduction when you're dealing with cryptocurrencies or NFTs.
Can you repeat that? My signal was compromised for a second. I apologize.
Oh, sure, no worries. What would count as a deduction if you are dealing with cryptocurrencies or NFTs at tax time?
Okay, that's a great question. Now, I know that if you're data mining, you can deduct your electricity cost. You can capitalize your server if you were to start data mining today. I actually was looking into mining, but I got out of it because I was concerned about the electricity cost. But I could have capitalized, a $10,000 server. And for NFTs, if you're buying a computer, and of course, if you're listed on sites for marketing, you can deduct those costs as long as you treat it as a regular business.
All right. Definitely some tips that everyone is going to want to take advantage of. Eric Pierre, CPA, CEO of Pierre Accounting. Thanks so much for joining us. And coming up, McDonald's is teaming up with K-pop band BTS. We have those details next.
right, McDonald's adding another collaboration to its star-studded famous orders lineup, the global pop icons BTS. Brooke DePalma here now with another installment of Brooke's Bites. So give us the skinny on this one, Brooke.
Alexis, this new meal, this new famous order includes 10-piece chicken McNuggets, a medium fries, a medium soda, and for the first time here in the US, it will also include a Cajun and chili dipping sauce inspired by McDonald's South Korea locations. Now, it's worth noting that this will be the first of the famous order installments that will be available to customers worldwide. Now, in the past, there's been collaborations with Travis Scott among Patrick Mahomes, and those have only been apparent or available in select countries. This will be available to nearly 50 countries across 6 continents. Now, back in September, McDonald's did in fact launch that collaboration with Travis Scott. That was a quarter pounder in addition to a with bacon, fries with barbecue sauce, and a medium Sprite. Now that collaboration with Travis Scott reportedly earned the pop star, or the rap star, $20 million for Scott alone. Now, McDonald's also told Yahoo Finance that in the second half of 2020, it was a significant driver here in the US. Now, today, McDonald's, with this announcement, said, we're teaming up with BTS, and they also dropped a TikTok upon this announcement. That was a significant part of the Travis Scott collaboration. That sparked a frenzy, a TikTok drive-in order trend. And McDonald's also confirmed to us that this famous orders campaign is part of Accelerating the Arches, a campaign that's really doubling down on delivery, drive-in, as well as digital. So anything that BTS touches seems like it's a gold mine. So this should be an exciting collaboration and one worth noting for McDonald's.
For sure. They're on to something over there at the Golden Arches. All right. Thanks a lot, Brooke, with Brooke's Bites. Let's take another look at the markets. Things are not improving here as we move closer to the closing bell. Still lower across the board, I guess off our worst levels of the day. So there's something. The Dow off 116. We've got the Nasdaq Composite off about 150. S&P down 22 points right now. And coming up next on Yahoo Finance Live, astrophysicist Neil deGrasse Tyson will be joining to talk about NASA's first successful controlled flight on Mars. We're back right after this short break.
Crypto crash and rebound after Bitcoin plunges almost $10,000 in 1 hour on news the U.S. government may crack down on money laundering. Joe Brusuelas joins us to explain the pros and cons for crypto investors as governments worldwide consider regulations. Tesla shares fell at the opening bell after 2 men were killed in Texas when their 2019 Model S crashed. Police say there was nobody in the driver's seat, and investigators are now trying to determine if the autopilot was engaged. We're going to get an update on that. And NASA's Ingenuity helicopter made history, becoming the first powered controlled flight on another planet. America's favorite astrophysicist, Neil deGrasse Tyson, joins us to help explore where no one has gone before. Fasten your seatbelts. We're zooming toward the closing bell. I'm Adam Shapiro.
And I'm Shauna Smith. And Adam, with an hour to go here in the trading day, we have all 3 of the major averages in the red: the Dow, the S&P, the Nasdaq, all moving lower, coming off 4 straight weeks of gains. So let's first get to Jared Blickery for a closer look at today's action. And this afternoon, Jared, it looks like technology and consumer discretionary here leading the broader losses that we're seeing across the market.
Yeah, that's right. And of course, those are the sectors where we have some big FANG stocks. And we'll take a look at that in a second. Just want to cover the sector action, the index action right here. Russell 2000 has accelerated to the downside. It is now down 1.5%, although it's holding near its session lows. Other stocks really haven't made new lows since the lunch PM hour. And we're going to take a look inside the NASDAQ 100, where we see, well, guess what? This is meme stocks. Might as well start with GameStop, right? Because that's what everybody wants to know about. So GameStop here up 6%. That's after news that the CEO is going to leave about mid-year, and they're in the search for a new one right now. We know that they've made some switch outs in the board of directors as well. So Ryan Cohen, co-founder of Chewy, in the midst of a turnaround strategy, but everybody's on pins and needles to see exactly what it is. Now let's go to the NASDAQ 100, and here we see a mixed picture for the mega caps. Apple and Alphabet only up about 0.2%. Microsoft, Amazon each up or down more, 1% or less, and then Facebook off 1.5%. Tesla is a standout here, down 4%. Adam, you were talking about that crash over the weekend. Ride not doing very well either. Lordstown Motors was not able to complete a Cybertruck race, not the Cybertruck, but a race for trucks. That stock's been off about 8 to 10% today. The big picture with EV is just lots of red. And you take a look at what's going on a trailing month basis, and several of these names off more than 40%. Check out that bottom row. All right, going to wind down this presentation with the sector action. That's 1 month. We're going to check out daily. Only real estate now in the green for about 0.2%. Healthcare and staples up towards the top, so kind of a defensive setup. And then discretionary and tech, as we were talking about before, those are each down more than 1%, guys.
Jared, thank you. We want to keep talking about what happened with Bitcoin over the weekend, because what a roller coaster. Joe Brusuelas is RSM US LLP chief economist. He's joining us. It's always good to see you, Joe. And when anything drops 14%, almost $10,000 in the course of an hour, you have to say, in addition to the things you can't say on live television or streams, you have to ask, what is going on here? So your take on all of this, because there's a whole lot of regulation that could be following it.
Sure. So Bitcoin's entering its infant stages of doubt and somewhat some insecurity here. They're going to go through some growing pains, right? We've got a highly speculative asset that's clearly not a store of value. It's not going to replace the dollar. It's a highly speculative asset that is now entering the phase where it's going to come under increased regulatory scrutiny. And you could see Bitcoin enthusiasts begin to sort of hedge their positions. I think when you take a look at this, right, and you think, okay, is this a mature industry? It's probably not. On one hand, I see Coinbase, very impressive. There's a lot of enthusiasm out there for that amongst the retail investors, but you also see Dogecoin. Dogecoin, of course, was started in 2013 as a joke. It is a joke. The question you have to ask here, is this industry mature enough to where it can police itself? Or are the risks to retail investors so sufficient that we're going to see heightened scrutiny and regulatory activity? And I tend to lean towards the latter as explaining the sharp drop we've seen in past days in the value of these highly speculative cyber assets.
Joe, would you say that the activity over the last couple of days, the large drop that we've seen, has this kind of undone the notion out there that maybe Bitcoin and some of these other crypto assets aren't as risky as they once were because of the increased involvement that we're seeing from some institutional investors?
Well, I think there are some people out there who were trying to make that argument. I don't know that that was ever going to be conventional wisdom. It's certainly not my observation or evaluation of crypto space. Look, just because a couple big institutions are dipping their toe in doesn't going to mean that it's going to lend complete credibility to this asset class. Probably what you want to look at is the stepped up amount of lobbying that's going on in Washington, D.C. right now. It's a classic two-level game. Those who've entered the market over the past 10 years are now trying to erect barriers to entry to keep other competitors from getting in. And second, they're going to try to limit the extent to which the regulatory authorities, are going to put constraints on this. I'm probably like a lot of economists out there. We look at this and we think, okay, this isn't a currency. 10 years ago, everybody was talking about how it was going to be the substitute for the US dollar. Okay, that's clearly not the case. If you look at the discourse around the asset class, take the Winklevoss twins, for example. They're no longer talking about this as a currency. They're talking about it as a substitute for gold. Okay, sure, I get where you're going on that. I can see where you want to build that business. But when I look at this, I still think of Bitcoin as what was the medium of exchange along Silk Road that caused the FBI to crack down on the use of this, 2013, right? That's why you're beginning to hear the word, or you're beginning to hear words such as money laundering around this. And that's a clear concern, especially if you're not a, what I'd call, fully informed crypto enthusiast. Yeah.
When we talk about Bitcoin, we had a guest on about a month and a half ago who kind of schooled me when I brought up that issue of money laundering. And they said that, look, Bitcoin, every I don't want to say token, but every nugget of Bitcoin and its derivatives, there is blockchain that identifies the owner. Therefore, when I pointed out when they hack school systems and demand ransom, they want it in Bitcoin. I was trying to make the argument that just because that might be the case, it's still hard to trace all of this. Are you saying that it is hard to trace and that they are using it for money laundering and that's where government's going to crack down?
Yes, I am. And I mean, I watch lots of interesting strategists and crypto enthusiasts come on the air and talk about this. But at the end of the day, it's what Janet Yellen thinks. It's what Jay Powell thinks. It's what Gary Gensler thinks. That's what's going to determine the scope of the regulatory activity around this. I mean, if you're a corporation and you've got clients who are interested in improving their payment systems around blockchain, okay, that's a very legitimate business. But you have to protect your reputation and you have to refer to these as highly speculative assets. Therefore, as we see what's going on with Dogecoin, right, which is clearly not, let's say, extending the legitimate underpinnings of capitalism because it looks like very savvy investors are taking advantage of not so very savvy investors. All right, maybe that's not what you want if you really believe in this as an asset class, right? And we are at that hinge point here, I think, with respect to this asset class. Is it mature enough to police its own and really move to sort of put a lid on these jokes like Dogecoin? Or is this simply the wild, wild west and we're going to tell ourselves, well, this is how markets operate? I have to tell you, folks, the people who are in charge of the regulatory agencies, they don't see that this way.
And while the world may care what Powell and Yellen have to say at $55,000 of Bitcoin, Joe Brusuelas, our investors, care what you have to say. RSM US LLP Chief Economist. It's always good to see you, Joe. Be well. When we come back, we're going to be talking about COVID-19 and the latest on how the fact that everyone 16 years and older can now get a vaccine, but will they, is next.
A significant milestone today in the fight against COVID, the CDC announcing that everyone aged 16 and older are now eligible to get a vaccine. So we want to discuss this and what this means with the U.S.'s fight against COVID. And for that, we want to bring in Dr. Nida Fadel. She is Associate Professor of Infectious Disease at the University of Nebraska Medical Center. And Dr. Fadel, it's great to have you back here on Yahoo Finance. So we have the CDC now expanding the eligibility requirements, saying everyone 16 and up can now get the vaccine. We also have data that just around half of the U.S. adults, just over half of U.S. adults, have now received at least one shot. Yet we've been stuck in this range between 55,000 and 70,000 new cases now for just around 2 months. Is this what is going to be needed? Are we finally going to see that case count drop as a result of this?
Yes, thank you for having me. So I think this is a great milestone that's really worth celebrating. But we also have to remember that vaccines take time before they start becoming effective. And meanwhile, it's really important that we don't lose all the gains that we've made so far. So we need to stick to basic preventive measures until we see that effect of vaccination. So my message here is that we don't celebrate too early, and we need to kind of wait until we see a bigger impact of vaccination in the community. We've so far seen that effect in long-term settings where we've seen a decline in COVID outbreaks due to vaccination of that population. So I'm hopeful that we're going to get to the end of the tunnel pretty soon, but we need to kind of stick to basic preventive measure, wear your mask, social distancing, avoid congregate settings until then.
Dr. Fuddle, we'd probably get to the end of the tunnel and see the light had the J&J vaccine not been put on pause. And it was, as they pointed out, 6 cases of that rare blood clot situation and 7 million vaccines which had been administered. Now, we've heard Dr. Fauci say that vaccine could be coming back soon. Did we overreact to the blood clot situation with that vaccine?
I don't think so. I think the pause was necessary to see what's exactly going on. I mean, it's very clear that these 6 cases probably have something to do with the vaccination. There is a situation where we're seeing this thrombocytopenia or low platelets accompanied by blood clotting, which is not a common combination to see. So that leads us to think that maybe there is association there similar to what we've seen with the AstraZeneca vaccine. But how strong or how big that of a concern, that still remains to be determined. I think the pause and taking a deeper look at these cases, seeing what demographics, what other comorbidities they had, what other medical issues that could have led to this. Now we know that the treatment with heparin in these patients might have worsened their outcome. So all of these things were very important to find out. So the pause I think, was very necessary. And even if the vaccine comes back, I think we have to be kind of cautious and careful in what population should be receiving the vaccine. I'm hopeful that the ACIP is going to provide us with that data and that recommendation. So it's, we're avoiding these kinds of situations.
Doctor, how do you see this, though, affecting the vaccine hesitancy? Because that was a risk, or that was a thought out there, that just in terms of if we delay this and don't bring J&J's vaccine back to the market in a timely manner, that more people will then question the safety of the vaccines. What's your response?
Yeah, I think that was kind of a bummer, to be honest, to all of us in the infectious disease world, because we were very optimistic about the J&J vaccine, especially in harder to reach populations, because it's a one and done vaccine and you don't have to keep tracking or reminding them for the second appointment. And that's a population also that we're seeing somewhat concerns about vaccination. So the fact that, we've seen this data, that was kind of a setback, but I'm not really, I'm still hopeful that we will be able to kind of undo the myth and the misinformation that happened due to the pause of the J&J vaccine. We have to remember it's just a pause. It's not a termination, and we're not discontinuing this vaccination. As I said, it's probably going to come back, and I'm very hopeful that it will come back, but with some restrictions on where and when can we use it.
Dr. Nida Fadel, Associate Professor of Infectious Disease at the University of Nebraska's Medical Center. Thanks so much for taking the time to join us again. And of course, we will talk with you soon. We are going to take a quick break here, but when we come back, NASA's Mars helicopter successfully completing its first historic flight. So we want to talk all about this with Neil deGrasse Tyson. He will join us right after the break.
40 minutes to the closing bell, NASA gave us all something to cheer about this morning when the Ingenuity helicopter became the first powered craft to fly on another planet. To help us talk about this and where we go from here, let's bring into the stream America's favorite astrophysicist, Dr. Neil deGrasse Tyson. He's also the director at the Hayden Planetarium. It's good to see you again, Neil. And
yeah, thanks for having me back.
Those of us who are children of the 70s and used to cheer when the Apollo rockets would go up, it was the same thrill watching that little helicopter go up for 30 seconds today. What do you think this means as we go forward in our exploration of space and other planets?
Well, it won't mean anything unless what we learned from this sort of engineering experiment takes taproot and then influences the design of future journeys to Mars. So no one has ever flown anything in the atmosphere of another planet before. So that's first. Second, think of what they had to do. The Martian atmosphere is only about 1% the thickness of Earth's atmosphere. So in order to get the same thrust, you need big blades. They have to rotate fast, and you've got to make sure everything is as light as possible. So these blades were made of carbon fiber. And so it's an engineering experiment. And think about the rover, where suppose the rover came to a cliff. You don't want it going over the cliff, so you send the copter, and then it can go over the cliff and down into the ravine, can look around and then come back. So it's the natural extension of your exploratory wheels when you take to air.
Neil, I'm curious just to get your reaction, just what was going through your head when you've been looking at this footage that we've been seeing today, because there was so much hype, so much uncertainty just around how successful this mission would be. So what's your take on what we've seen so far?
Yeah, it's just badass. I don't know what else. It's an official scientific term. It's a badass accomplishment. And I want to remind people, because you don't often get to see the engineers in the news, because all the machines are in the service of a scientific question being asked. But science and engineering are important cousins on the exploration frontier. It doesn't matter how interesting or clever my scientific idea is, if I cannot execute it with brilliant design, engineering design, nothing happens. So for me, this is a moment where engineers get to shine. And like I said, it's the birth of a new era of powered aircraft on other planets, vastly extending the reach of rovers. And I remembered when we went to rovers from just landers. I mean, think of what landers are. They just pick a spot, land. Then you just dig and look around, and that's it. So rover was a great improvement over a lander, and no less of what an aircraft is relative to a rover.
I have so many questions about this for you, but let me just, when this thing is actually flying, for instance, in the analogy you gave us, into a crater, can just the pictures it will be able to take give us a better understanding if there was once water, life, those kinds of things on Mars, or do you need to land and take a sample?
So you always want to get a sample. Okay, that's the holy grail, if there were such a thing, for this enterprise. And the next best thing is to get a close-up image of it. So right now, the best close-up images we have of dangerous cliff faces and ravines are from orbiting satellites that take sort of high-resolution, basically satellite maps of Mars. But there's no substitute for getting right up and close to it. And in this engineering experiment, they had the rotors turn on. And by the way, there are two simultaneous rotors going in opposite directions. That stabilizes the craft. You can't just have a craft spin one set of rotors into motion, because the laws of physics require that the craft spin the other way. And so you don't want that. So you have two sets of rotors spinning opposite ways. That aspect of the momentum cancels, and then you just have pure lift. So when you do this, you can lift it up. And one of the things they had to test was, can it just, in place, can it redirect where it's looking and then come back down softly? Very important maneuvers for the first time ever. This is what you would do in another place, that is going over a ravine onto a cliff face. So yes, whatever you could see from orbit, you'll see better up close. You'll see even better if the thing lands. So I'm all in on this.
Neil, if you could just give us a better idea, just how long are these types of flights? How long is this normally in the air? And then when you talk about the fact that this vastly extends the reach of rovers, then pointing to your comments before just about what this means for the future and for future exploration here, where do you think ingenuity will lead us then?
Yeah, so there are people who are analogizing this moment to the Wright brothers. And imagine if the Wright brothers had the first powered flight in Earth's atmosphere, and then no one did anything with it. So it's only a milestone if people keep moving. Now, this particular craft is not sort of heavily clad with science experiments the way the rover itself is, because it's primarily an engineering demonstration. And so you want to make sure, you don't want to risk very careful scientific instruments on something that could crash or not lift off at all. So once this has been demonstrated, they're getting very good data on it. Oh, and by the way, Mars right now is 15 minutes away, something like that. A round trip. Round trip signals. So if you want to tell it what to do, it doesn't get the signal for till another 15 minutes, and then you don't know if it succeeded for another 15 minutes after that. So some autonomy has to be built into all of these craft when the planet is at such a distance.
It was carrying a little bit, they said, of the fabric from the original Wright brothers flyer. I want to look to the future. There was an article about this today, which talked about future missions to Mars, which will take samples, but then bring them back to Earth. Do we have the technology today to go beyond this, to land and then take off again to come home?
Yeah, so right now, the way we are conceiving such achievements is you go there, look around, find a good sample, sort of package it, and lay it down there for a separate mission to come grab it and then take it back to Earth. And that sort of divides the kingdom of what the tasks are. If you start piling on everything something has, you got to go there, look around, grab samples, put it back in your pocket, take off, come back to Earth. That you're putting too much, at least for how we currently designed spaceships, space probes. You're putting too much, too many tasks on it. So right now, it's the most coveted thing out there is the sample return mission. And yes, that's what you really want to do ultimately, because there's no substitute for laboratories here on Earth's surface.
As long as we've got powerful dilithium crystals, as Scotty would say, they can help us. Dr. Neil deGrasse Tyson, he is America's favorite.
Possible, the dilithium crystal, that's what you need. Plus the flying cars, please. We can fly on Mars, we can't fly our cars. I want the future that never came. Give it to me.
I'm listening to them honk out on 2nd Avenue here in Manhattan right now. I'm with you. Neil deGrasse Tyson, the Hayden Planetarium director, and all of the titles we could give you, but I think America's favorite astrophysicist says it best. Thank you. It's good to see you. We look forward to having you back. Excellent. When we return, President Biden and the calls that he should spend big on the MMT movement.
Time for our 2 and 2 stocks that I'm watching and 2 that Adam has for you with 29 minutes to go in the trading day. So first up, let's take a look at Peloton. Now this stock under significant amount of pressure today, shares off just around 7%. Now the U.S. Consumer Product Safety Commission coming out, issuing a warning on the stock today about Peloton's Tread Plus. Now they're saying that it is dangerous. With pets or children in the house, the agency started its investigation in March after CEO John Foley said that a child had died after an undisclosed incident with the treadmill. So they are urging Peloton users to stop the usage right now. The agency said that it is now aware of 39 incidents with the Tread Plus. Peloton has said that it will not recall the product following a call from lawmakers to do so. You can see the reaction, though, in the stock today with shares off just around 7%, the stock trading at 107 a share. Flipping over to NVIDIA, another stock here under pressure with a half hour to go in the trading day. Its $40 billion deal for ARM now faces a national security probe. Britain's digital secretary Oliver Dowden issuing a public interest intervention notice today. Dowden is asking for UK's watchdog to start a, quote, phase 1 investigation into this transaction. Now, the report is set to be delivered by July 30th. Investors, though, a bit spooked on this news with the stock off just over 3.5%. Adam?
Shauna, before the pandemic, we were all wondering what would happen with Harley Davidson and the tariffs that Europe was imposing. Take a look at how they are performing right now. Shares up about 10%. And that's been all day long after they reported earnings and revenue, which rose more than 30% to $1.4 billion in the quarter. Harley now expects full year revenue to grow between 30 to 35%. In fact, sales grew for the first time in 6 years. Obviously, lots of Americans want to hit the road, and that stock hit a more than 2-year high. They plan to lodge, by the way, a legal challenge to the European Union ruling that will levy a 56% import tariff on all of Harley's products, regardless of their origin. That's going to start in June. Let's turn our attention to United Airlines. They are going to report after the bell today. Big earnings call tomorrow. Shares are down just a bit. But again, the airline announced summer routes to Croatia and Greece for vaccinated passengers. One thing to keep in mind with United is they were the first of the major airlines to report they had gone in March cash flow positive. We heard from Delta last week that they expect to possibly be profitable by June. We'll be looking for that kind of announcement from United, but we do know they were cash flow positive. They let us know that 2 weeks ago. Shauna?
All right, Adam, we want to turn to Washington because President Biden's plan for his $2.2 trillion infrastructure package, of course, he's also laid out plans to raise taxes in an effort to pay for it. But we want to talk about this with our next guest. We have Stephanie Kelton, professor of economics and public policy at Stony Brook. And Professor, it's great to have you on the show. And I know you recently wrote in an op-ed in the New York Times titled "Biden Can Go Bigger and Not Pay for It the Old Way," essentially making the argument that Dems are going about this the wrong way. So how should they be thinking about fiscal responsibility then?
Well, look, we had Congress pass a series of spending packages, right, to deal with coronavirus and the economic fallout. So, of course, we had the big CARES Act last March, $2.2 trillion. We got $900 billion in December, and then we had the $1.9 trillion COVID rescue package last month. Now, all of these were passed without offsets. In other words, they weren't quote unquote paid for. They were just pure spending bills. So we get to infrastructure, and now Congress is deciding, the Biden administration is saying, listen, we want to do it differently this time. We want to try to quote unquote pay for this. So what does that mean? It means that they want to try to offset the spending so that they can demonstrate that they have a plan to take a dollar out of the economy in the form of taxes that fall on someone for every dollar they want to spend into the economy. And the point of doing it this way is just to keep the thing deficit neutral. That's really what this is about. And, from where I come from, the point should not be to minimize the impact on the deficit. The point should be to minimize any adverse impact on inflation. So, I'd much rather see them approach this in a very different way, where you're trying to figure out how much low-hanging fruit remains in the economy, how much fiscal space is still out there that you can take advantage of before you have to begin raising taxes.
And when you wrote about this, you said it should be recognized that raising taxes will do relatively little to offset the spending pressure. So when you talk about the other things the government could do, this gets to immigration. This gets to making sure there is a supply not only of labor, but of the input goods that are necessary to produce so that we get an outcome without driving prices up.
Yeah, that's exactly right. And when you say, that I said in that New York Times piece that this raising taxes would do little to mitigate any inflationary pressure, it's because of the particular kind of taxes that the Biden administration is talking about raising. When you say you're only going to increase taxes on people making more than $400,000 a year, you're only going to increase taxes on corporations, you're not really hitting the kind of people who were going to turn around and spend a lot of that income that you're taxing away from them. So yeah, the point is that if you're going to roll out a multi-trillion-dollar infrastructure spending program, what you need to make sure that you're doing is that you've got the real resources that you're going to need from start to finish through that rollout of that infrastructure spending. You've got to have the construction workers, the architects, the engineers. We're talking about care work. You need to have people to do elder care and child care, where you need people to put up EV charging stations and solar panels. So you have to manage the rollout of the infrastructure spending, keeping in mind that you could possibly run up against some supply constraints along the way, and that there are ways to mitigate that. And you mentioned immigration as one. I talk about that in the piece. Building capacity itself is a way to relieve strain on the productive capacity, because as you build out your infrastructure, of course, you're adding more productive capacity into which you can grow with that higher spending.
And certainly this makes sense. And a lot of the other things that you also laid out, you also mentioned trade policies and some of the reforms that we could see there. But stepping back just a little bit, not so much specifically looking at the inflation impact that higher taxes could or potentially couldn't have, but also just the fact of potentially raising taxes at a time like this, when the economy is still recovering from the pandemic, when there certainly is much uncertainty ahead. Is that a real risk, do you think, of derailing some of the progress that we have made?
I mean, it would be more of a risk if the taxes were going to fall on people who were actually going to be spending a lot of the income and helping to support jobs and helping to support the recovery, because these particular tax increases, again, fall mostly on corporations and wealthier people. It's less risky in that sense, but I hear you and I agree with you that the point of doing infrastructure spending is both to give us better infrastructure, both human and physical infrastructure. But why do anything that in any way counters the effectiveness of the stimulus if you don't have to? So that's why I keep coming back to, the low-hanging fruit, the fiscal space. If you can do this without the offsets, without doing anything that creates drag on the economy, then, my position is take full advantage of the fiscal space that you have and don't do anything unnecessarily to create drag.
What's the likelihood that people on Capitol Hill would even listen to this discussion, though?
Well, I'm headed there tomorrow morning, and I've got meetings for 3 days. So I'm going to say it's pretty high.
Well, we'd love to invite you back on then to tell us about exactly how those meetings went. But Stephanie Kelton, Professor of Economics and Public Policy at Stony Brook, we really appreciate you taking the time to join us here today. Just have 20 minutes to go in the trading day and taking a look at where we stand right now. Dow, S&P, and Nasdaq still all in the red. We have the Nasdaq off just over 1%, the Dow off 144, and the S&P also in negative territory. We'll be right back.
So tomorrow is April 20th, or 420, and for people who consume cannabis products, there may be some irony or perhaps some hope, and maybe even a Schumer surprise. To explain what we're talking about here is someone who understands this market very well from the Advisor Shares and their ETF MSOS, which actually trades US-based cannabis companies, includes rather. Noah Hammond is joining us, and forgive me for rambling here, but tomorrow and the potential Schumer surprise, which is it?
Well, actually, there's something going on today, too. The House is set to vote on the Safe Banking Act. This is some legislation that went through the Finance Committee late last year. So we actually will get some interesting news, we hope, today when the House approves safe banking. So it's just focused in on the cash management component, the cash needs of cannabis companies that are operating legally in the states in the U.S., but Schumer has been dropping a lot of hints on social media that legislation is coming that he plans on introducing in the Senate, which will be really interesting to see the reaction. And he's also been pretty clear that it's not to legalize cannabis, but it would be to focus on around decriminalization or descheduling, which really opens up the opportunity for these U.S. Focused companies, but really closes the border for external companies to try to make their way in.
You know, I want to follow up on that point. So that means that this could potentially be bad news for some of those Canadian cannabis companies that are potentially looking to expand then here in the U.S.?
Right, definitely bad news for their plans in that area. Probably not so great news relative to some of the valuations those companies have seen and the multiples they've seen when they've really had a hard time achieving profitability just in their own local jurisdiction. So absolutely. And so what you have, though, is a situation with U.S. multi-state operators, and these are companies like Trulieve and Green Thumb and Cresco Labs that they list in Canada because they can't list in the United States just yet. They trade here OTC, so they don't have really that financial advisor and institutional support you get around securities that normally list. But as these things start to open up and still keeping the borders closed a little bit, letting states decide how they want to approach it, it really creates an amazing opportunity for those companies, for them just to grow themselves, or we could see our own M&A activity go on in the United States as well.
Well, what would the catalyst be for that M&A activity? Would it be the Schumer surprise, or would it just be the Safe Banking Act? And who would the players be?
It's a good question. It's hard to know exactly what will be the catalyst, but both help, right? So with safe banking, getting, there's over 300,000 employees in the cannabis industry in the United States. People are pretty shocked by that number. And all of those businesses have to operate on a cash basis. So it's incredibly unsafe for those people who have to work in that industry. So safe banking fixes that significant problem, but also then just opens up regular banking, regular custody for these companies. So that alone could start to introduce that institutional M&A opportunity. But certainly with cannabis being deschedulized, decriminalized, that really, I believe, will open up the floodgates. And who might it be? It might be some of the same companies you've seen make some acquisitions in Canada, right? So probably a Constellation Brands. In the alcohol industry, you certainly could see some tobacco companies who have also made some strategic investments in Canada turn their focus instead of coming through Canada, but buying just in the U.S. So, depending on how you want to play it, you mentioned the MSOS ETF. It's the only one that's U.S. focused that has those MSO companies in it. So that's a little bit more volatile, but you can look at something like the Vice ETF that has those alcohol, tobacco companies that we think will be some of the leaders in being very aggressive at looking at some of these U.S. companies as this decriminalization process continues.
No, let's take a step back just a little bit and look at what's been going on in the market. Today, we're seeing losses across the board. Of course, so we're coming off of 4 straight weeks of gains. When you take a look at the dynamics that are at play, we're in the midst of earnings season right now. We had the big banks kick it off last week. Do you think earnings will be enough to fuel this momentum that we've seen in the market over the last couple of weeks?
I hope so, right? It's all about sort of the reopening trade, right? And things opening back up. We're actually getting ready to launch, and I'm probably, getting ahead of the announcement. We're launching on Wednesday Eats and Beds, or the restaurant ETF and a hotel ETF that we think as, things do open up and they're hiring more people and people are spending money and it's probably more leisure and personal travel right now. I think businesses are still going to be slower to really kind of get, employees out there. But yeah, we think, the activity that people are going to be spending and doing and getting out of their house, I think can really help prop up the economy, prop up the businesses, prop up the fundamentals, get people back to work. So we're counting on some of that happening. We know it won't be a straight, smooth line, but definitely counting on that happening through the rest of the year.
Noah Hammond is the CEO from Advisor Shares. Thank you for joining us here. But when we come back, we're going to keep talking about legal weed in the United States and how it's going to play out here in a moment.
Tomorrow is 420. It's a day when activists and cannabis companies will look to promote marijuana reform. And we want to talk a little bit more about this with our editor-in-chief, Andy Serwer. He wrote about this over the weekend in a piece titled, "Here's How Legal Weed Will Play Out in America." And Andy, you took a look at a few different angles of this story, but specifically the legalization efforts or the reform efforts that are underway across the country. Then, of course, the various ways that investors could potentially play this.
Yeah, and I think the first point, Sean, is that we really have reached a tipping point in this country when it comes to acceptance of weed. 2/3 of Americans now support legalization of marijuana. That's up from 1/3 20 years ago. And plus, we've got about 18 states, and I say about because do you include the District of Columbia, et cetera, and things are changing so fast. 18 states where marijuana is completely legal, which is to say recreational. And just to give you an example, Virginia voted this year to legalize weed. It wasn't going to happen until 2024, but then the governor decided to accelerate that to the 1st of July. So things are changing fast. We're probably going to get other states as well this year. And the reason why is because Americans are smoking pot and they want to do it legally. And the downside does not outweigh the upside. And there's a tremendous amount of downside when it comes to $3.6 billion a year for enforcement, incarceration. Of course, the incarceration rates are strongly show that people of color are disproportionately incarcerated, arrested, fined, etc., even though marijuana smoking seems to be done equally amongst all Americans.
Andy, there's this whole issue of Senator Schumer. We just talked about the Schumer surprise in the last block, but that he might, instead of total federal legalization, as you wrote about, you get a lower, I don't know the terminology, lower schedule for this. But would President Biden ever buy into this? Because we know he's been opposed to legal marijuana.
Yeah, it's really interesting. And it sort of puts a lot of politicians in a curious bind, Adam. And I mentioned Governor Hickenlooper, now Senator Hickenlooper of Colorado, and Governor Inslee of Washington State as being Democrats, liberal Democrats, middle of the road Democrats who were opposed to legalization initially and then came around and changed their mind. And I think that when you start to talk about these social justice issues, number one, and number two, when you look at the societal effects in a Denver, in a Toronto, or in Montevideo, which is the capital of Uruguay, which is one of the two countries where marijuana is completely legal, which is Canada and Uruguay, there just haven't been these negative effects. So that's why Hickenlooper changed his mind, and that's why Inslee changed his mind. I think if there is a majority of the bill, if it's passed by the House and the Senate, I think the president would sign it. But remember, as Noah Hammond was talking to previous guests, it's just going to be decriminalization at this point. There's not going to be full legalization this year, but that's going to be important because it's going to allow these companies to bank and to list, the U.S. companies to list on U.S. exchanges, which is very, very important.
Andy Serwer, thanks so much. And we, of course, are going to continue this conversation tomorrow because we have a special at 12 p.m. Eastern time, the business of cannabis. And we have an all-star lineup for you. You can see some of the guests on the screen right there. David Klein, the CEO of Canopy Growth, Boris Jordan, the executive chairman of Curaleaf, and Kim Rivers, the CEO of Trulieve. Again, that gets underway tomorrow at 12 p.m. Eastern time. Got just over 5 minutes to go until the closing bell. Again, losses across the board. Dow off just around 150 points. We'll be back with the closing bell. Got 3 minutes to go until the closing bell. We want to bring in Matt Brill, Invesco's head of North America Investment Grade and Senior Portfolio Manager. We're also joined by Andrew Smith, Chief Investment Strategist at Delos Capital Advisors. But first, let's get to Jared Blickery for a closer look at some of these movers into the bell. Jared?
Yeah, let's take a look at the Wi-Fi Interactive here because I want to show some charts here of the day's price action. And guess what? Not a lot has happened this afternoon. We've just been camped out near the lows for most of the day here. So not a lot of whole action in the afternoon, but still sitting on 1% losses for the Nasdaq. Here is the Dow. You can see that choppy sideways action at the bottom range of that chart as well. Dow's down 128 points. But now we're going to take a look inside the Nasdaq 100, as we typically do heading into the bell. We got a mixed picture. Apple up 0.4%, Alphabet up about 1/4, but Microsoft, Amazon, and Facebook all mired decently in the red there. Tesla is another standout. That stock a week after that fatal collision over the weekend that killed 2 people. And then the semiconductors, got to take a look at these. The Philly Chip Index is having its worst day in about a month. And the news overnight, NVIDIA and that proposed merger with ARM facing some hurdles in the UK. Also Susquehanna downgrading Qualcomm. But we're seeing the biggest weakness in Lam Research and Broadcom. Those are each down more than 3% as well. Well, checking in on the travel space, we're seeing a lot of red here. Royal Caribbean now down almost 2%. American Airlines also down 2%. Norwegian down about 1.5%. But we are seeing some positive action in Trip.com. That stock is up 1%, kind of bucking the trend there, 5% over the last 5 days. Well, with 30 seconds to go, we're looking at the sector action. Only real estate is in the green. And then following that, we got healthcare, energy, financial, staples, industrials. I could go on, but not a whole lot of bullish news today or catalyst. Discretionary, consumer discretionary is off the most. That's down 1.2%. That houses Amazon. And then tech, which of course has those chip stocks we were talking about in Apple. That's down about 0.9%. Here's the closing bell on Wall Street. And just rounding out the price action, I'm going to give you the price of Bitcoin here, $55,975.
All right, Houston, we have ignition. It's a space-themed kind of day because of the Ingenuity rover helicopter. But let's talk about where these markets are going to settle because this is a big day. The Dow is going to be off about 118 points. S&P 500 is going to be off about 0.5%, roughly 20 points. Nasdaq will close down 137 points, almost 1%. As you heard Jared say, all of the sectors except real estate in the red today. Let's get to the guests and get their take on what's going on here. And let me start with you. Matt, I want to talk to you about the 3 Res. And you pick it, whether it's reflation, reopening, or re-rating. Which is this market paying most attention to?
So good afternoon. And in the fixed income market, the re-rating is really where it's at right now. That's the ability for companies to cross over from high yield and into investment grade. We think we're going to see about $100 billion get upgraded this year into investment grade. And with that, high yield has really been on fire lately.
Andrew, what about today's action that we're looking at? We have the Dow, S&P, and Nasdaq all in the red. We saw a bit of a reversal. Some of those tech trades and consumer discretionary trades that investors have been favoring over the last couple of weeks, taking a bit of a breather today. What's your takeaway from that selling action today?
Yeah, so it's really been an amazing tug of war between growth and value, cyclicals, defensives. Tech has outperformed phenomenally well over the last 3 to 4 weeks. But what we're seeing today is a little bit of a move underneath the surface. So while the headline sectors really kind of underperform from a technology consumer discretionary perspective, we have looked at industry groups and we've seen tech hardware do well. We've seen software services continue to do well. And we think that really is an economic function that the momentum that we've seen in a V-shaped reflationary recovery is now set to pull back and wane a bit. And we're going a little bit more growthy/defensive within the markets.
Andrew, when we look being defensive in the markets, a lot of people a year and a half ago might have said, look at emerging markets. But you would caution people right now to look at emerging markets. Why?
Yeah, that's exactly right. So, the monetary policy that was injected really began in China with their credit impulse really moving to all-time highs. But we've seen them really start to pull back the reins a bit. And with commodities doing so phenomenally well because of emerging markets really leading the pack on this COVID recovery, we now are at the point where we think the United States versus at least emerging markets is going to have a growth differential that really dictates a higher U.S. dollar, that really puts a little bit of pressure on commodity prices, thus thus in turn hurting EM assets. We've seen India, right? India, if we add back in, the COVID situation that's happening there, has not been a great place to be. So while it's done well from a reflation and recovery perspective, we think taking some money off the table is the right thing to do.
Matt, it was a rough start to the year when it comes to U.S. investment grade bonds. When you take a look at the landscape right now, are there any signs of stabilization, do you think?
Yeah, it was certainly a tough quarter. The U.S. IG market was down about 4.5% to start the year, but we've seen stabilization. We've seen about 1% recovery in prices since then, or total return since then. Most of that's really been driven by institutional buying, though. The retail investor hasn't really stepped in yet, but Japan and Europe, the yield differentials between the U.S. and the rest of the globe is still so large that once you saw any sort of stabilization, investors have been looking for higher yields. Once they got a little stabilization, they've really piled in. So we think we're in a new range now between 150 and 175. Today rates were off a little bit, but we think we've really settled in here.
Has the individual investor possibly missed the investment grade bond action? I think you pointed out, Matt, that we had something like it was 400 plus billion issued year to date, but then just so far we're only at about 90 billion for the month.
Yeah, so the supply is starting to slow down just because corporations no longer really need any more money. They borrowed so much last year. They borrowed 1.8 trillion. They borrowed a lot to start this year just because they were afraid that rates were going to go higher. Now they're sitting on a lot of cash and they're saying, well, what are we going to do with all this? Maybe you need to start doing something from a capital expenditure standpoint. They're seeing the M&A pick up though as well. So mergers and acquisitions would be one way for corporations to spend the money. I think retail investors, though, they certainly still have an opportunity here. Again, I stated they wanted higher yields. They have them, but they don't like to look at negative total returns. We don't like the path to get higher yields, but now that we're here, it's certainly making a better entry point.
Andrew, some of the recent data that we've gotten out recently certainly has been pretty encouraging. We got that retail sales number jumping just around 10%. When we get a print like that, does that make some of these consumer discretionary stocks, although the fact that they were under pressure today, does that make some of those names look a little bit more attractive to you?
Well, it does. Obviously with the fiscal payment that went out for our stimulus checks, but we have to incorporate the savings rate that is truly at a very high level. And now that the reopening is occurring, people are going back to work. We do think this pent-up demand, even though that's been a story that has been used quite a bit, is going to be alive and well. So while consumer discretionary stocks are taking it in the chin a little bit today, which might be a function of higher costs or inflation, we do still think the American consumer has a propensity to spend, especially given where savings rates have been and how low debt service ratios have gone.
Andrew Smith, Chief Investment Strategist at Delos Capital Advisors, and Matt Brill, Invesco's Head of North America Investment Grade and Senior Portfolio Manager. Our thanks to both of you for joining us today. One mover today to the downside is Tesla. Now that stock under a bit of pressure following news out over the weekend that there was a deadly crash involving two people who put the car into what is believed to be the autopilot mode. We want to bring in Rick Newman for a little bit more on this. And Rick, what can you tell us about this, and also just what this means for the future here with Tesla when it comes to its autopilot features?
Well, a car went flying off a road near Houston, hit a tree, exploded, and burned for hours. And when they found the victims, there was a body in the passenger seat, and there was a body in the back seat, and there was nobody in the driver's seat. And it's not likely anybody moved around after the crash. So this suggests not only that the vehicle was traveling by autopilot, Tesla's self-driving technology, but possibly that the owner of the car was showing off the technology and not even sitting in the driver's seat. This is not the way you are supposed to operate autopilot or any self-driving technology, because this is nowhere near full self-driving. This is way below that. In fact, technically, Tesla says the driver needs to be able to retake control of the car on a split second's notice. But a lot of Tesla drivers don't drive that way. You can argue that it's in part because Elon Musk, the CEO, he does kind of promote this as an amazing technology, as if it's far ahead of any other technology, which it is not. And as he talks about it as if it is full self-driving, but it is not. There have been several other deaths in Teslas in which autopilot seems to have been engaged and was a factor. So this is a mounting problem for the company.
Rick, doesn't Tesla have the ability to know whenever a car is in motion that it's produced, whether it's in autopilot or not? Isn't there some kind of communication constant between Tesla and the vehicle?
I think that's true, Adam. I don't know the specifics of the connectivity between Tesla and those cars, but they do gather data on all those cars, which is a genuine advance that Tesla has brought to the market, the real-time connectivity with the cars. So what you might be getting at is, doesn't Tesla have some capability to intervene or to warn a driver if there seems to be something unsafe happening with the vehicles? And whether you do it one way or another, this is what a lot of safety advocates say Tesla needs to do. They don't say Tesla needs to withdraw autopilot, but Tesla is much more lax with what it lets drivers do. Just to give you one example, you don't have to have your hands on the wheel. You can be asleep. There's no kind of sensor that will tell you to wake up, as there is in General Motors' Super Cruise system, for example, where there's a camera that watches your eyes. And if you nod off or your head drops back, an alert goes off and tells you get your hands back on the wheel or we're going to disable the system. So what safety experts want to see is more safeguards on this system and a better acknowledgement from Tesla that you can't just sit back and close your eyes and let the car do everything. It's just not nearly there yet.
Yeah, Rick, I want to follow up on that. Do you think investors want to hear directly from Elon Musk about this issue?
I think investors have given Elon Musk a pass on this. Tesla is the only company that has a mounting death toll, if you will, connected with its self-driving system. Most other automakers are rolling out self-driving systems not as aggressively as Tesla, but they're doing that on purpose. This has been a problem before. This is not the first time journalists or analysts have looked at this mounting toll of accidents and fatalities that seem to be related to autopilot and said there's a problem here. The company needs to change something. Federal safety officials have called on the transportation department to toughen up the rules, which are very lenient in terms of self-driving technology. And none of this so far has really affected Tesla's stock price. And Tesla, if this were another automaker, you have to wonder, would there be more scrutiny of this? Because think of all the safety so-called scandals there have been with Ford SUVs and Firestone tires, or General Motors and the ignition switch that was causing crashes, or Lexus and unintended acceleration. Automakers are used to just getting creamed by the press and by class action attorneys, congressional hearings. And that is not happening with Tesla. Personally, I think there needs to be a lot more scrutiny of this, and Tesla needs to answer for this and probably do something.
You can check out Rick's piece on this. It's up on yahoofinance.com right now, titled "It's Time to Notice Tesla's Autopilot Death Toll." Rick Newman, thanks so much for hopping on here with us. We are going to take a quick break, but when we come back, we are going to talk about NASA's Mars helicopter successfully completing that historic mission that we were talking about earlier. But right now, we are going to talk to the man that helped make it all happen, Josh Ravitch. He is Ingenuity's Mars helicopter mechanical engineering lead. He will join us right after the break.
Welcome back to Yahoo Finance Live. We got IBM earnings, and Jared Blickery is telling us what they're reporting. It's all about the cloud, right?
Oh, it's always about the cloud, Adam. Stock is up 4.5% in after-hours trading here. That's because we got beats on all the key numbers, and I'll go through those right now. For the first quarter, revenue came in at $17.73 billion, and guess what? That is up year over year, nearly 1%, and the street was not expecting that. We know the historical issues that revenue have been, the headwinds that revenue have been for IBM as it implements its turnaround strategy now, but if you go down all the segments, nice beats on all of them. Not big ones, but just small enough that we really didn't see any weak places. Now we got cloud and cognitive software revenue. That's up about that came in at 5.44 billion. Estimate was for slightly lower, 5.39 billion. I'm not going to go through all of these segments, but global technology services, that revenue was pretty strong at 6.37 billion. Estimate was for lower at 6.23 billion. And when you look at adjusted gross margins, that beat by just about 10 basis points, coming in at 47.3%. Total cloud revenue, get this, Adam, up 20%, 21% year over year to 6.5 billion. Red Hat accounting for 17% gains in revenue year over year. Your forecast, they're standing pat on it, but hey, we'll take it. They expect to grow revenue based on mid-April 2021 foreign exchange rates, and they're still seeing adjusted free cash flow of $11 to $12 billion. And here's a quote from their CEO, Arvind Krishna, saying strong performance this quarter in cloud, driven by increasing client adoption of our hybrid cloud platform and growth in software and consulting. Those enabled us to get off to a solid start for the year. And while we have more work to do, we're confident we can achieve full year revenue growth and meet our adjusted free cash flow target in 2021. So just looking at the stock here, it's still up about 4.5%. I just want to show everyone a one-year chart because this is about as sideways as it gets. Now you go to 10 years, looks a little bit different. Something I want to point out here, still got some work to do to break out of this downtrend. You got to get up around 150, but this is a step in the right direction, guys.
Thank you very much, Jared. We're going to turn our attention to, we were talking about reflation and the reopening trade, but one of the things you hear some companies talking about is potential labor shortage going forward. Well, the Mom Project may be able to help solve that issue. They help working moms get back into the workforce, and Allison Robinson, the founder and CEO, is joining us now in the stream because we're talking about millions of women who have the skills to work and need help getting back into the workforce. How do you come into this situation?
We're the matchmaker that brings the two together. We are a talent marketplace with over 500,000 incredibly talented and diverse women who come to us looking for employers that get it, who understand the valuable skills that they have to offer, both as a mother and a professional. And we connect them with some of the best brands in the entire world, companies like Google, Apple, Facebook, Accenture, to unlock this tremendous strength in our economy and getting these women back to work.
Allison, from your perspective, because we talked about time and time again here in Yahoo Finance, just the challenge specifically that women have felt over the past year and the number of women, almost 3 million women dropping out of the workforce since the start of the pandemic. Do you think we're finally making strides in the right direction and more companies are taking notice of this issue?
You're absolutely right. 5.4 million jobs held by women were eliminated last year. Over 2 million women just vanished from the workforce. We know they were most impacted by unemployment, furloughs, and then we saw our already fragile childcare infrastructure implode in front of us and schools shifting to become remote. I am optimistic. I think this has accelerated companies' true commitment to solving for these structural issues that have existed for decades, but because the situation has become so dire, companies are taking bolder, more dramatic action to help women get back into the workforce and retain the women already within their organizations.
Can you think of one or two companies, the names of which you could share with us, that are doing this well? Because it seems incredibly unfair on one hand to require a woman to pause her career when they have children. And on the other hand, companies need this skill set. So who's doing this well, reintegrating moms?
They absolutely do. And we know 86% of American women will become moms by age 44. So it is the vast majority of the female labor population at the more experienced levels. A partnership that I'm most excited about is Accenture, working really closely with the CEO over their Midwest region, Lee. And Lee has put together an incredible program to bring 150 women back into the workforce at Accenture in really coveted roles in technology and consulting. So they are really doing their bit to make sure that the Midwest leads the country in female labor participation, as well as stopping the dramatic backslide that we saw last year.
The Mom Project's founder and CEO, Allison Robinson, thank you so much for joining us here on Yahoo Finance Live. When we come back, we're going to Mars along with NASA and one of the people who made it possible for that Ingenuity helicopter to actually fly on the red planet. Time for your news on the move. Now, Republican Congressman Steve Stivers of Ohio announced on Twitter that he is stepping down next month to become president and CEO of the Ohio Chamber of Commerce. Now, this leaves the GOP with one less vote in the narrowly divided House. A date for a special election to fill the seat has not yet been announced. A doctor for Russian opposition leader Alexei Navalny is warning that his health is rapidly deteriorating, that he could be on the verge of death. Now, recent test results from Navalny, who is on his third week of a hunger strike, showed risk of cardiac arrest from sharply elevated levels of potassium, as well as signs of impaired kidneys. And elite soccer clubs, including Manchester United and Real Madrid, announcing plans to abandon the Champions League and form an exclusive Super League. Now, major footballing bodies are condemning the league's plans, though, threatening players of those teams that they will be barred from domestic and international competitions. JP Morgan is backing the Super League with $4.8 billion, and this is a story that we will continue to follow here at Yahoo Finance. Well, let's now turn our attention to today's historic event, and that, of course, is NASA's Mars helicopter Ingenuity successfully completing its first flight. Now, we want to talk to one person who helped make all of this happen, and for that, we want to bring in Josh Ravitch. He's the mechanical engineering lead for the Ingenuity Mars helicopter. And Josh, it's great to have you
on Yahoo Finance, and congratulations on this massive feat. I guess first, just walk us through the emotions that you felt this morning when you realized that this was a success.
Yeah, great to be here. Thank you so much for having me. And I don't know, I still probably haven't processed the emotions, but they were fairly high, amplified by the fact that it was 3:30 in the morning when they happened. It's just for all the team. We've been working on this for years. Myself, about 5 years, for others even longer. So just the culmination of that to take part in something that's changing the way we can explore space, an aviation milestone. It's just, it's hard to explain, right? It's pretty great feeling.
Well, we had Josh Neil deGrasse Tyson on, who called it one badass accomplishment. So when the world's favorite astrophysicist gives you a compliment like that, it's hard to top it. But let me ask you, how do you top this? Because your own project manager, Mimi Ang, actually said each world gets only one first flight. So what's next?
Oh gosh, there's so many things out there to do. A next big milestone for us is actually what Perseverance's main mission is: caching samples to bring back to Earth. This is the first flight from the surface of Mars. However, soon hopefully we'll have the first return of actual material from Mars, just like moon rocks. We'll have some Mars rocks. As well, there's another helicopter project in the works called Dragonfly, aimed to fly at Titan in the not too distant future. So we're all really excited to see that one too.
Josh, will we be able to use this data, you think, for future projects to make even bigger and better and more sophisticated helicopters?
Absolutely, we will. The data we're getting back is actually the primary return for this, besides the cool factor of actually having done this. It feeds forward to future larger science helicopters, helicopters that can actually carry science payloads or do more complex things. Talking in the 10 to 20 kilogram range with a couple kilograms of payload. About 4 pounds ish of payload. So that can do a lot of things in the future, right? Scouting for future rovers, future astronauts, as well accessing for science very hard to reach areas, up mountains, down ravines, places you can't actually take a rover.
The geek in me, my ears perked up when you talked about a helicopter mission to Titan. Is that the moon of Saturn?
Yes.
We're going to send a helicopter there?
Yes, called Dragonfly. Yes. When
does it get there? And I'm thinking back to 2010 or 2001. All these worlds are yours except Europa. So I'm glad we're going to Titan.
Yeah, actually, it's a mission out of back east. I think one of the other NASA centers, and I believe APL. So I actually don't know the launch date offhand, but I'm sure we can find that information for you. Or a quick search should show what plans are.
Josh, how long does something like this to plan for? I guess, how long have you been working on this?
I started about summer of 2016, just as we were starting to build our engineering model units that we tested both for dynamic testing, flying in a very large 25 foot diameter, about 80 foot tall vacuum chamber, as well as another similar model that we used for testing for thermal vacuum testing, vibration testing. How do you survive launch environments? There's some other folks who've been on even longer. I think our chief engineer basically had this idea almost 20 years ago. So it's been in the works for a long time.
Josh Ravitch, congratulations again, and thanks so much for hopping on here to tell us all about it. We wish you all the best. We hope to have you back soon once you complete more missions like this. We are going to take a quick break, but up next, our special Earth Week coverage continues, and we are going to talk with Senator Susan Collins of Maine. We also have Senator Jeanne Shaheen of New Hampshire. That all happens right after the break.
Let's head to Washington, D.C. Jessica Smith has been watching what's happening with President Biden as he meets with politicians from both sides of the aisle to talk about potential deals on infrastructure.
Yeah, Adam, President Biden met with a group of lawmakers today, both Republicans and Democrats, all of them having previously been mayors and governors at some point. The president said he wanted to talk to those lawmakers in particular because he says local and state officials know how to get things done. We have not heard from all of the lawmakers who took part in the meeting just yet, but Senator Mitt Romney did talk to reporters. He said the president was in listening mode, wanting to hear from these lawmakers and hear out their ideas for a potential infrastructure plan. He told the president he thinks a big piece of the $1.9 trillion relief deal that was signed into law earlier this year should go towards some infrastructure. He says state and local governments should be able to use some of that money to pay for infrastructure projects. He said they also discussed pay-fors. He said that he told the president he would like to look at each individual piece of the plan and come up with ways to pay for those measures instead of paying for it all with tax hikes. Now, the president said ahead of that meeting, at the beginning of the meeting, that he is open to compromise. The White House has said many times that it would prefer this be a bipartisan bill. They're looking for ideas, listening to ideas here, but Republicans have largely opposed this plan, as you know, mainly because of those tax hikes, the big price tag, and because of measures included that aren't necessarily physical infrastructure. Some Republicans say the plan focuses too much on climate change. Of course, Democrats say you cannot separate climate change and infrastructure. They are too intertwined. Vice President Harris was also pushing this American Jobs Plan as well today. She was in North Carolina. She gave remarks and then toured an electric school bus factory. Of course, that is a key piece of the American Jobs Plan, electrifying vehicles, part of that clean energy push. So we will see what we hear from these lawmakers as we start to hear more about the meeting at the White House, and also as committees start really putting together pieces of this plan and trying to craft legislation. Adam and Shauna.
Justin, speaking of President Biden's agenda this week, we also have his climate summit that we're expecting later on this week. What can you tell us about what we should expect to come from that?
Well, the White House has invited 40 leaders from around the world to attend this virtual climate summit. It's part of the Biden administration's efforts to really show that it is rejoining global efforts to fight climate change after President Trump left the Paris Climate Accord during his time in office. So ahead of this meeting, we are expecting the White House to unveil its new goal for how much it wants to cut carbon emissions. That's something that we'll be looking for ahead of this meeting. But as this meeting comes up on Thursday and Friday, again, this is a chance for the president to show that this is a priority for the United States now.
Jessica, thank you very much. We'll be right back after this.
United is out with earnings. Let's get to Jared for the numbers. Jared?
The stock is down about 2%, and that's after posting a wider than expected loss for the first quarter. Adjusted loss per share coming in at $7.50 versus the estimate of $7.02. Operating revenue beating just slightly, coming in at $3.22 billion, down 60% year over year, but beating the expected results by just a smidgen. Passenger revenue coming in at $2.32 billion. Estimate was for higher at $2.38 billion, so a little bit of disappointment there. And then here's a key metric that I'm looking at. Revenue passenger miles, 17.25 billion. This is one of those key stats that all the airlines look at. Revenue seat miles, 17.25 billion. The estimate was for materially higher, 18.48 billion. So I think this is going to raise a couple of eyebrows with respect to the other earnings that we're going to get from the airlines as we progress through this earnings season. Now, the forecast for the second quarter, they're seeing capacity down about 45% versus second quarter of 2019. They're seeing adjusted EBITDA margin about negative 20%. So here's a quote by the CEO, Scott Kirby. We're encouraged by the strong evidence of pent-up demand for air travel and our continued ability to nimbly match it, which is why we're confident as ever that we'll hit our goal to exceed 2019 adjusted EBITDA margins in 2023, if not sooner. So we're still talking about a multi-year turnaround here. So the stock is down about 2%, as you can see on your screen. And we're going to take a look at a chart over the last year. Pretty impressive, up 89%. Of course, those are from those post-pandemic lows. Taking a look at a longer-term chart, here is a 10-year chart. You can see just how drastic that sell-off was and really only recovered about 50% of those losses. So bottom line, wider than expected loss. Not the best report, but I suppose it could have been worse. And that's something we're probably going to be saying quite a bit this earnings season.
All right, Jared Blicker, thanks so much. And of course, United, a name that you want to keep watching here as we look ahead to tomorrow's opening bell. Well, another stock that we closely watch here at Yahoo Finance is Coca-Cola. Now shares closing at $54 a share today after beating the street's estimates on first quarter earnings. Now, Yahoo Finance's Brian Sozzi caught up with Coca-Cola CEO James Quincy earlier today to discuss everything from Coca-Cola's recovery from the pandemic to Georgia's new voting laws. Let's listen.
Yeah, so I mean, the fountain business in the US is clearly completely linked to the away from home, and so that has suffered very much during the lockdowns and the work from home and very negative numbers all through the last three quarters of last year, and even negative for the quarter this year, but actually bouncing back in March. But what you see is very much the first phase of those three phases of reopening that I talked about, which is a big bounce back in fountain, in the kind of bars and cafes, more the nighttime orientation, and while some improvement in kind of the getting out and about, work, educational, commuting ecosystem, and the large gatherings, still negative numbers in those sort of sub-channels for fountain. So we're starting to see the comeback, but there's more to go, which gives us great belief that the US business will continue to do well into Q2 and beyond into the rest of the year.
James, I'm sitting here holding a new Coca-Cola Zero Sugar product. How big is this business for you now? It's you recently launched in addition to coffee, but what's been the response?
Response, Coke Zero is doing really well. Actually, Coke Zero was growing even in 2020 despite the pandemic. It's had a good start to the year this year with the new formula. It's certainly engaging more consumers, bringing more people to the franchise of Coke Zero Sugar. But ultimately, it's still actually a small part of the total Coke trademark volume. And so we think there's great runway for Coke Zero Sugar to continue to grow for many more years to come. And Coke with Coffee, we've recently kind of launched it in the US. Some good initial trial. People love to try new flavors from brand Coca-Cola. Hopefully that'll build in something that repeats and has got some longevity. But at minimum, it's giving some freshness and some interest to the Coca-Cola trademark and is engaging with consumers.
And late last year, James, you I would say you made a bold move really to cut, close to 200 SKUs, products that just weren't selling. What percentage of your business this year will be from new products? And are you focused more on innovation now?
Yeah, we took the decision in the pandemic to essentially cull the portfolio of about half the brands. They were only 1 or 2%, but we've been historically better at launching ideas than being ruthless about taking them out of the portfolio when they're not earning their right in the consumer's mind, in the store or on the truck. And so we took the decision to halve the number of brands and really focus that on, and we're seeing that happen now. And we're bringing back innovation. One of the things that happens in a crisis is you want to stick to your knitting. You want to focus on the most important SKUs and the biggest brands, which was very much a feature of 2020. So innovation is clearly back in 2021. Innovation with new brands, with new flavors and new product offerings and new ways of marketing. So we definitely see the return of innovation as a key business driver as we go through 2021.
James, I do want to switch gears here. You have been public in your response to the Georgia voting issue. You've called the laws wrong. I mean, will you respond quicker from a company perspective should these public issues arise again in the future? And they inevitably will.
Look, I think there's something special about Georgia, and clearly, some people would have preferred I weighed in sooner, some later. But when it comes to a certain set of issues, the company has a point of view, and we're headquartered, and we drive our business from the state of Georgia, and you can go back to the 50s and 60s and see that we've always pursued a strategy of wanting to make Georgia a great place to do business and wanting to make it a place where everyone can participate in that growth equally, and that's about rights. And so we were looking for Georgia being the best place to do business and also being best in class in terms of voting rights. And over the years, both sides of the aisle have worked well to create it's the best place to do business, and that's what the best place to live, which is where our employees are, and therefore best in class voting rights was something we were looking for. And therefore I don't see my role is to weigh in on every issue, but there are some, particularly about Georgia and the things that are important to be able to drive our business from here and have it be an economic engine in the right environment.
That's Coca-Cola CEO James Quincy. Now, attorneys are laying out the closing arguments today in the trial of Derek Chauvin. Now, we will discuss how Minnesota businesses are preparing for that verdict right after the break.
Yahoo finance correspondent and anchor Akiko Fujita has devoted the whole week to a series of reports because it's Earth Week, and she's joining us now.
Yeah, not just Earth Week, Adam, but we've also got that two-day summit over at the White House coming up, convening 40 leaders virtually to have a discussion on how to tackle climate change. Not often that we get a bipartisan conversation going, but that's certainly what's happened with 14 lawmakers tackling this issue through the Climate Solutions Caucus. And we've got Senator Susan Collins from Maine, as well as Senator Jeanne Shaheen from New Hampshire, both joining in on the conversation today. Great to have you on. Senator Shaheen, let me start with you, because I know you were part of the group that met with the president today. Certainly, when you look at the infrastructure package right now, there is a lot of focus on climate initiatives there. What's your sense of how much progress was made in trying to at least narrow the divide between the two parties on this?
Well, I think it was a good discussion. It was bipartisan and bicameral, but it's a beginning. Obviously, the president has been doing a series of conversations with members of Congress, and I think it's important that he's willing to listen to what people have to say and to talk about how we get to some agreement. And obviously, one of the important things about some of the climate provisions that are in the infrastructure package is that they're going to add jobs. And that's the goal. We want to invest in America in a way that provides economic opportunities and ensures that we can stay competitive with our adversaries, China and Russia, and of course, the rest of the world.
Senator Collins, when we talk about this Climate Solutions Caucus, it was formed back in 2019, really as a way to bring both parties together on this issue of climate change. 2 years in, how would you assess the progress that has been made through this caucus so far?
I think it's been very valuable. For example, in the last Congress, I authored a bipartisan bill called the BEST Act that has to do with energy storage. One of the keys to getting more renewables into our electric grid is figuring out a way to better store solar and wind energy so that when the sun isn't shining, the wind isn't blowing, you can still tap into energy that is produced by those means. Senator Shaheen has done great bipartisan work on energy efficiency, which is one of the most important things that we can do in order to reduce our greenhouse gases and climate footprint. So those are two examples of bipartisan efforts that I think have made a real difference. And don't underestimate just the power of a group of Democrats and Republicans coming together, committed to a common cause.
There are a number of climate initiatives, as you know, laid out in this infrastructure bill. $174 billion to expand electric vehicles. You've got $100 billion to update the country's electric grid. Even $16 billion set aside to help fossil fuels workers be able to transition into green jobs. Senator Collins, I know the question right now is about how it's going to be paid for. But on the solutions that have been proposed themselves, what are some key ones that you think Republicans can come to the table on?
Republicans have long supported a robust infrastructure package. There's a real issue with three major principles behind the president's package. One is the scope, which goes way beyond traditional infrastructure. The second is the cost, the top line of $2.3 trillion on top of the spending for COVID is enormous. And the third is the pay for. So those are going to be issues which are going to take a lot of work to bring us together. But I'm always for additional research to make our transportation structure more efficient and more climate friendly. But I gotta say, I don't think it makes sense to spend $174 billion on electric vehicles, which is more than roads, bridges, seaports, airports, and waterways combined.
So, Senator Shaheen, if the price tag is the concern, the reality is any kind of transition into a green economy is going to cost some money. What are the alternative ways for revenue that Democrats are considering right now?
Well, I think, as Senator Collins says, what's important is that we continue these discussions and try and work together in a bipartisan way. That's why the Climate Solutions Caucus is so important, because it is an opportunity for us to talk to each other. And one of the challenges is going to be, how do we pay for this package? But there are a whole range of things that have been discussed, not just this year, but over several past Congresses, that include things like an infrastructure bank. We heard the IRS commissioner a couple of weeks ago say that we could raise anywhere from $300 billion to $1 trillion if we collected on all of those people who are not paying their taxes and all those corporations. That's a place that we ought to be looking. We can be thinking about something like the Build America bonds that we've done in the past, as well as looking at whether the gas tax is capturing all of those vehicles on the road, like electric vehicles that right now aren't paying that gas tax. So those are all things that I'm sure are going to get discussed in the coming weeks, and hopefully we can come to some agreement on, if not the whole package, on certain aspects of the package that we can support. And let's start with that.
We don't have much time left, but I wonder if both of you can speak to the impact climate change has had on your communities back home. Senator Collins, you look at Maine, for example, we've seen sea levels rising more rapidly, certainly a lot of properties threatened as a result of that. How has that evolved your thinking?
It plays a very important role in my commitment to doing something on climate change and working as a member of the caucus. Let me talk about an area that frequently isn't discussed and yet is directly related to climate change, and that is the impact on public health. We have seen an explosion in the state of Maine of tick-borne illnesses like Lyme disease. That did not even exist in the state of Maine 25 years ago, because temperatures were colder and the ticks could not survive the winter, and now we have one of the highest rates of tick-borne illnesses in the country. We have one of the highest rates of asthma in the country, and that's due to pollutants that are blown into the state of Maine, not produced in Maine, but from coal-fired power plants. So that's two examples that have shaped my thinking on climate change.
And Senator Shaheen, really quickly, what have you seen that said we need to take action more quickly?
Well, absolutely. New Hampshire and Maine are experiencing some very similar problems as the result of climate change. It's not just the health problems. We have one of the highest rates of childhood asthma in the country as well. But we're also seeing an economic impact on fewer snow days and erratic weather patterns. Last week, we had temperatures in the 70s and we had snow on Friday. So that's not what we should be seeing in New England at this point. It's affecting our maple sugaring industry, our skiing industry, skiing and snowmobiling. It's affecting our wildlife and vegetation. Our moose population is down 40%. So there is a huge impact. And for those of us who have lived in New England, as Senator Collins and I have, we've seen it in the last couple of decades. It's measurable.
Senator Susan Collins and Senator Jeanne Shaheen, it's great to have you on today. Thanks so much for joining us.
Thank you.
Adam, I'll toss it back to you.
All right, and we will be right back.